You're live.
All right. Good morning, everybody. Good morning, Maverick. Thanks for saying hi. Good morning, Neil. Good to see you. We're on day 4 of the Traders Conference, and I'm glad you're here. Thanks for being here. Let me go ahead and get started. We're going to start with a little bit of a legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or the solicitation to buy a security. Good morning, everybody. It's good to see you. I want to say welcome. As you come in, make sure you say hi. If you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. As we get started this morning, I want to say thank you to Stocks and Commodities Magazine for sponsoring the event this week. Really, really do appreciate it. They've done a really good job of supporting the events over the years. Great magazine. You can check them out at traders.com. Also want to invite you to join the Traders Forum. Another one of our sponsors of the Traders Forum is a live market environment where you can chat with other traders, learn about the markets. It's designed to be a community of traders helping traders, and you can find out more about them at thetradersforum.com. We are, of course, Metastock. Metastocks have been rated the best software in its price category. It's been rated that for 32 years in a row, and we'll be talking more about that all day long. So I do want to get straight to our guest this morning. Our first guest is Rahul Mohindar. I talked a little bit about the Rahul Mohindar oscillator system earlier in the week on Tuesday. Yeah, Tuesday. Kind of showed it. It's a system and a methodology that's been in Metastock for a while. Actually, since version 10. It's the first methodology that I ever actually traded. And I want to tell you a little bit about Rahul. Rahul has been a business partner in Metastock for just about 30 years now. He's been here as long as I have. He teaches people how to trade in India. He has been featured as a guest on CNBC and CNN India, and he does a fantastic job. We loved the RMO methodologies so much we actually put it in the software and bought it from him. So without further ado, Patricia, good to see you again. Sheldon, yes, Jeff Tompkins was here yesterday, and I'll find the replays for yesterday and send them over to you so you can watch them after the event today. Thanks for coming in, everybody. If you have questions, make sure you ask the question button, and you go to webinar. I'll get you a question. And if you have questions and you're watching us in YouTube, just ask them. So, without further ado, Rahul, how are you doing this morning?
Doing great. Thanks, Jeff. It's so good to be the first one in this amazing lineup. As I said to you, I've got to be the black coffee for everyone. And I think I've got some good stuff for you.
Right on. Go ahead. Oh, okay. I just made you the organizer. Now I'm going to make you the presenter. So you should be able to, there should be a little share your screen button. Perfect. Now.
So you can see my screen clear, hopefully.
One last thing before I go, I just want to let you know, I like my coffee black. Let's go.
There you go. Well, welcome everyone. Again, it's superb to be addressing you today on the markets, especially with reference to the RMO and the RMO ATM. A lot of you do use the inbuilt RMO or Rahul Mohindar oscillator inside of Metastock. And some of you also use my add-on, which is the ATM. Now, whether you use it or you plan to use it, I think it's a great way today to give you an overview. I've been using Metastock personally from a very long time. I consider myself fortunate. I've seen the days. If I could go back, I definitely remember doing version 4, which was a 5-inch floppy disk. And today we're talking about the AI of trading. We never even had a real-time version or real-time data in those days. So it's quite a climb up, and adapting to the markets at each stage, adapting to newer technology at each stage. It's really fascinating, and it's helping us improve and take our skill set up several notches as technology kicks in. But I think the biggest danger you face is when you use this word AI. There's a generation of people that think that everything can be automated to a strong degree. And partly that statement is correct. But, I think at the end of the day, you still need to tell it what to do. You still need to know the outlines. You still need to know how to manage risk when it doesn't work. You still need to know what you're doing. And I think that's what this education in terms of learning technical analysis is all about. Whilst a lot can be automated, and as my add on suggests, the name is Automated Trend Modules. And I think the Armo ATM is close to touching 10 years of being there. And, we've uh, done several updates. We're today on version 4, but each of these updates have had to have meaningful changes which are better than the previous builds to come out, because I'm not someone who's going to release an update just because it's 6 months or a year. I need to have something really solid down that. And that's how I've been progressing with this add-on. So some of the tools which I'm going to talk about are fairly new, released in the last year or two, and those are definitely tools that I'm primarily using off late, and I want to talk about that a little bit. But just to give you a hang of first the inbuilt RMO, which is available to everyone inside of Metastock, and I'd kind of like to build up from there because some of you are using this and just want a quick heads up on how this works. So when you look at the RMO, as I said, it stands for the Rahul Mohindar oscillator. It's primarily delivering an oscillator to you which is identifying the long term trend of this market or the primary trend. And when I say primary trend, this could be very variable because there are people who think the primary or long term trend means several years, whereas there are people who think that a long term trend may be 3 or 4 days. So when I say primary trend, I just want to clarify I mean someone who's looking at an interval chart. We're looking at the next 80 bars odd. So around that. So we're looking at least at a window of 60 to 100, right? So that's what I mean by the primary trend. Those are the number of bars I'm looking at. So if I'm on a daily chart, 60 to 100 will translate to, if I assume that 20 trading days a month, we're talking anywhere between 3 to 4, 5 months. So we have to look at this as giving you a gauge of the bigger picture and not just the next 1 or 2 bars, right? It's for someone who's trying to gauge the major force, the major direction of the market, which I think is of prima facie importance. In the heydays, I would use a lot of conventional tools. And again, here I'm not here to run down any tool, but I'm just sharing what I personally used and how this kind of progressed on. These are charts of the MACD or the MACD or the RSI. Great tools, even till today, time tested. But the problem of some of these tools, which I realized, was there was too much of manual intervention. There was too much of artwork that I had to do. For example, drawing the divergence. I had to find, okay, there are two tops which are rising on the price, but the RSI has what we call a negative divergence. Now, what also tended to happen is you could keep extending the line as the market moved higher and higher and higher. You keep pulling that line to the right and you keep calling it negative divergence. You never knew where it ended. So, in a way, I felt that some of these tools were actually stopping me from buying. In other words, in this uptrend, everywhere I'm just looking at negative divergence, and I lost the plot that this was really a bullish symbol, and that's what I needed to be doing was buy. So a lot of sells that come your way here on the MACD, downward crossovers, downward crossovers. So I kind of felt that I needed something which helped me focus a little more on my trading and make the analysis more robust and automated, because I think there are two big enemies when we trade. Our first and biggest enemy is the mind and the fear associated with trading. And when I say that, I mean the first thing that happens is when we take a trade, we are worked up as to whether this is going to work out. We're apprehensive. We're kind of worried about the loss. We're trying to confirm, reconfirm, etc. Right? Which is why you look for, gasps of air, if I could put it that way. Someone opens the TV, someone looks at a newsletter, someone looks at 10 different studies, someone looks at 5 different products, but he just wants a gasp of air to tell him, hey, buddy, you're on the right side. And that's something which we have to accept is one of the characteristics most traders go through if you're human like me. The second enemy when we trade is when we use tools which are kind of working against the primary trend. And when I say that, if you are keeping on trying to find a negative divergence when the market is going up and the primary trend is up, it is actually stopping you and scaring you from going long. Let's put it this way, there's another school of thought. If something is overbought, it is overbought because it is that bullish. It has those many buyers to make it overbought. So there's another side of the coin. If something is oversold, maybe it is that weak that it got so badly sold into, right? Just because something is overbought doesn't equal to a sell. If something is oversold, it doesn't equal to a buy. And we got to get that into our heads that trading is not, you know, as simple as we'd like it to be. We've got to have a bit more of a holistic understanding rather than trying to, use tools where we're kind of mixing and matching. And when you do mix and match analysis, you will tend to follow the indicator which your mind agrees to. So, in other words, if the market looks bearish to you, you will find these sell signals which I've circled over here. You would only focus on that. You will not look at the fact that this is a bullish market. If I look at the RMO is this green oscillator that you see. And very simply, there's a zero level. If you can, we call that the line of equilibrium. Or the minute you're above zero, which in this case, this is a very old chart of Apple, all the way back from 2016, right up to 5 or 6 years of data there. It's been RMO bullish. So if it's been RMO bullish, the only thing you're concentrating on is where to have a blue bar or a buy arrow or where can I buy, rather than trying to focus on where can I sell. I'm not saying you didn't have drops in between, but the point is, are you going to waste your attention in the wrong direction, right? If the river is going upstream, I want you to go upstream. Don't fight the tide is another cliche expression I could add to that. So the RMO is a simple oscillator where you see it above zero or below zero and you try and trade in the direction of the RMO. Do not overinterpret the RMO by trying to judge the curvature, the size, the height. We're not getting into those kind of analytics. So in other words, I'm trying to simplify it for you by saying either it's above zero and bullish, below zero and bearish. Why am I trying to give you this oscillator? I could have just marked it at the bottom. The reason we're giving it to you in a histogram format is also to tell you that if you've come very close to zero, you got to get ready that in case there is a change, you should be able to adapt to it. So, like you are here over here, if you just came near zero, if you had that switch up into positive, that's a trend change, right? So, you keep your guard up when you are really in and around that zero level. So, the RMO trade model comes to you as a inbuilt template inside of Metastock. And as I said to you, gives you a threefold advantage. You're trading in the direction of the stronger force, the bigger picture, the long term trend, and therefore your odds of winning are significantly higher instead of trying to fight the tide. I always suggest focusing on the first breakout because when you load the template, you have three elements that come to you. They are bar colors, arrows, and the RMO itself. The bar colors and arrows are really structured out of the swing trade studies. And again, I'm not going deep into this today. It's more about the ATM. But very quickly, the arrows are the short term signal, the bar colors are the medium term signal, and the RMO, the oscillator itself, is my long term signal. So when you're looking at the arrow, that typically comes first, followed by the bar color, which turns blue. That's the medium term trend. Followed by the point where you, if you look down at the x axis, where you move from RMO bearish to bullish, or if you look at that oscillator when it moves from bearish to bullish. So the whole idea is to try and understand this transition and to pulse the short term, long term, and medium term trend. So in other words, you may have downward arrows that may give you some short term pressure, but again, the whole goal is not to catch the sell arrows when the armor is up. Try and look for the buy arrows. Try and look for the rotation up. So often you'd have red colored bars as well that come in. Those are the first trickles of weakness. But again, if the armor is bullish, you should still see that as really a corrective phase and not anything else. So to recap very quickly, You have three conditions when you go long or buy. We're looking for a buy arrow, a blue bar, and a bullish RMO. So there are two distinguishing traits of any setup. Either it's what we call a first breakout or it's what we call an add-on breakout. A first breakout occurs when you are kind of stepping out from a red zone to a blue zone, from a RMO bearish zone to a bullish zone. That's the first time you generate a buy. What did you look for? The arrow came here, the blue colored bar came here, and later on, when the oscillator went to bullish, if you look down at the x axis, that's when you have RMO bullish. That's when there's alignment of all three. So, in other words, I call that a three-dimensional buy because they're always three dimensions. This buy that you see has come just because of a little rotation. You have a movement down, a sell arrow here. Of course, this is not going to be taken because the RMO is bullish. You're going to ignore these downward arrows. So this is what we call an add-on signal. It's really not coming as the first signal in the chain or after an RMO bearish phase. So we want to put lesser weight to add-on signals. The first breakout or maybe the first add-on even is okay, but don't keep on trying to chase every additional signal, right? So for example, on this one, this is your first breakout on the sell. Why? Because that's where the RMO rotated from a bullish zone into a bearish zone. You got the red colored bar, the red arrow, and then every movement, every further arrow, these are add-on signals, right? So we are looking for additional sells. Notice in the entire phase, the RMO has been bearish, where the oscillator has been below zero. I always state you trigger to qualify. Sometimes you get a blue bar, an arrow, but the high doesn't cross. And why did I mark this bar particularly? If you look down at the x-axis, that's the bar when the RMO turned bullish. If it does not cross the high of what we call the breakout bar, there is no trigger, there is no qualification, there is no actual trade that you should be igniting, right? So do not trigger trades if the high is not crossed on a buy. Similarly, if you're going on a short, so in other words, if you got a red arrow down, I want you to use the low of that bar to sell. And if you don't want to use this low and you're happier using this low, considering this is what we call a smaller inside day, that's absolutely fine with me. I want you to make sure that we break a low when we sell or we cross the high of the signal bar when we buy. Now, let's also talk about the downside. So, one of the upsides is it keeps you very steady and stable. But one of the downsides could be that the market could, it's not a leading indicator. You could see the market drops quite a big distance. You have $190 move down to 135, and you just got to sell right there, right? Where I put the dotted line. Got the arrow right up there. That's the short term signal, the bar color, the medium term. And then if you look at the longer term, that comes in here. And notice that low doesn't breach. So the long term trend really never broke. It just landed up being a bigger correction. So if you're trying to chase tops and bottoms, then you may not be satisfied because you'd say, oh, that's too late for me. So don't look at this system as a bottom picker or a top picker. And I'll tell you why. For that, I have different indicator. I have the counter trend trade. I have, different setups if you want to be faster and try and tweeze these tops and bottoms. But this is more a trend following indicator. And I also like to remind you that we are going to be rewarded for the number of successful trades we do. We're not going to be rewarded for us catching the absolute high of the market or the low of the market. I mean, there are people who buy at the absolute low of the market and sell it 1% higher. And, 20 days later, they feel they did the stupidest thing on earth. So, uh, again, they're only going to be rewarded for that 1% that they made or the little few points that they lived into. So, trading is not about catching the absolute high or bottom, it's about hit rate. It's about out of 10 how many trades are correct within that hit rate, what's your risk is to reward ratio. Each time you risk, are you risking $1, are you earning at least $2 for a trade? Those are the elements I'd like to work with. But I think one of the best things that happens in with the RMO is, even though you have several peaks and troughs in trading, you are consistently reminded that the long term trend is up. Don't look at going short, look at where you're going to go long. There's some areas you will have imperfections. For example, here, this looked like a buy. Now, what was the problem here? When you look at the oscillator was not above. A little later, you see the oscillator went above it. So in other words, you got the arrow there, you got the oscillator signal here, and the bar color also moved in here. So at what point do you want to buy? You want to try and buy above this whole area. You don't want to just buy above that bar, right? So find out where all the three signals came: arrow, bar color, oscillator change. Find the highest point of those three. That's where you want to fire it. Okay, it becomes easier here, of course, when you see all three have happened. Now this is absolutely pristine, picture perfect, because you got red which turns blue, you got the arrow, and simultaneously you got the armor which goes up. That's picture perfect. So it definitely helps us align and understand the market. So what I did today, just for purposes of understanding, you've got exactly 12 or 13 months of data of the Nasdaq dollar. And I mean, I'm looking at the Nasdaq 100.ndx, the symbol being that. So if you look at the spot Nasdaq for about a year plus, you can clearly see the RMO was been bullish Jan Feb of last year. We had that drop in March April. You see the RMO bearish. You got that drop. Then you had an extremely bullish phase post April all the way up to the present time. And now we kind of started threatening that RMO going into negative. So you can see how the alignment, despite all the jagged price action, despite all the up and down, despite all the manic that's happened, the multiple peaks and drops, it helps you just stay aligned to the fact that, look, you need to focus on either the upward direction all the way from April right up to Jan. It kept you focused on the buy side of the market and helped you stay aligned. So that's what I'm trying to get at is you sometimes need something which gives you that backbone of direction. And the Almo is one of those tools which are very good. So to recap, the first breakout is what I want you to focus on. Always trigger with a filter, and again stay disciplined with the rules. Now when I say discipline, there is a definite element of discipline we need in our trading, because a lot of us, we don't stick to the same stock and the same rules, and I say this in every webinar, and this is a very important part, which is why I say it every time, is that often you make one bad trade and you switch the stock or you switch the time frame. Don't do that. Same rules, same stock, same time frame, same quantity 10 times in a row for you to realize that you're 6 or 7 out of 10 correct or not. Other confirmations, if you use Fibonacci levels, if you use volume, those are excellent confirmations. Now, the beauty is when you use the ATM add-on, we have even built what we call an integrated buy and sell setup, where you would be able to see where is this integration of buys and sell signals coming. So it'll find you exactly that point where all three signals align up. Now, if you have any questions, I'm sorry, I'm just got a lot of content. I want to try and give you as much as I can in the limited time, but I will leave the last 10 minutes open for any kind of discussion or question. So I just like to kind of go my pace and then kind of lift it from those points. So the super filter, something very new we built into the ATM Armo. The super filter is an excellent filter to the inbuilt RMO. So this is available to those of you with the ATM add-on. So if you have the ATM add-on, you will get a further ironing out of the RMO itself. So there are times where the RMO goes from bullish, bearish, bullish, bearish. You know, there's a lot of up and down. But if you look at the bar colors now, we've moved from light blue to red, orange, and dark blue. So there are four colors. The beauty is over here, you've just stayed red or orange instead of going flip flop, right? So it just helps you stay short or stay negative in terms of a viewpoint rather than keeping on twitching your signal. So the super filter adds an adaptive basis to the RMO. In other words, what does the super filter do? It checks the volatility of the symbol that you're on and adjusts the RMO parameters to align a little better. So if you have the super filter, you can actually switch off the oscillator and just look at the bar colors and understand, oh, it's light blue. Now it's red. If I break the red bar low, that's the problem, right? Similarly, if I move from red to orange, so for example, here you were red and you started getting a buy arrow and then moved to orange, some short-term progression is happening. I'm not trying to say orange is a buy, but at least you want to exit there. You can look at buy when it goes into dark blue, and flips that high out fully. So if you look at the, again, this is the Indian market index. It beautifully helps you understand how the market is bullish or bearish. This is a chart of Apple. I mean, kind of almost updated. This is a 30-minute chart of Apple. I put up approximately the last 3 to 4 weeks of data here. And you can see on a 30-minute chart, Apple from the 26th, 27th, I think, of Jan has been, either dark blue or light blue. And then subsequently from the 10th or 12th of February, in that region somewhere, we are able to understand that the market turned into a negative zone. So just directional alignment is just amazing, when you look at the way it works. So directional alignment is something which is uh, just so easy for us as traders. We don't need to spend too much time looking at multiple tools rather than just focusing on one tool which does a lot. So there's a lot under the hood: adaptiveness, the inbuilt RMO, the whole fact that it can mark these four colors out, give you an explanation and understanding of where the markets are looking, ironing out areas like this. For example, here you've got, this is the old armor where it would just go blue in color, flip out. When you start using the new one, it's just orange. And it's just because it's adaptive and it's able to better align. So try and understand that what you're using with the super filter is a huge smoothener of an already existing solid indicator with the armor. So just more and more slides to kind of help you understand that dark blue sometimes will come. That's the most bullish indication, even in an armor bearish zone, because on this chart, that's where it's looking extremely bullish. So the indicator speeds up when it needs to and gives you an early indication. Similarly, over here, the armor went down, but the indication is still light blue. So it slowed down for you over here. So it can speed up, slow down, accelerate, decelerate based on how the volatility of the market is. So you're definitely up several notches when you're using something like the ATM Armo with you. Let's look at another different element of the market. I mean, there's tons of examples over here. This is another indicator, the strength weakness index, which really just uses volume data. So whilst the ATM Armo super filter is more a price driven adaptive indicator, which detects the trend for you, the beauty is the super filter just uses volume. So if you've heard the expression, if price goes up with volume, that's a bullish indication. Similarly, when the price goes down with volume, that is, a stronger signal for the sell. So try and make sure that you are looking at something which not just uses trend analysis or price analysis, but also indicators that use pure volume. So this marks the bars for you automatically by blue and red. And this line that comes is also automatic, where it segregates or dissects bullish and bearish zone. So if you're above it and you're blue bars, if you're below it and red bars, that's bearish, right? So this, for example, is a Tesla chart of 5 minutes. Again, mind you, this is not live data, but I took an extract of this till yesterday. And you can see that in the last 3 or 4 trading sessions, how beautifully it's kind of aligned. And this is just using volume. This is not using anything else. Just based on the way how much volume has been there in the uptrend versus the downtrend, that's what is kind of factoring in and giving you these signals. And I think, if I'm not mistaken, Tesla did open at 405. I don't know what it is now, but I think you definitely continue to see pressure as the market opened even today. So you saw that sell which comes in more towards the afternoon yesterday, and that kind of spread over and moved over into further weakness. So what we need to look at is the fact that you have tools which do both price and volume analysis. This is when Starbucks was on its way down on a 30-minute. Again, I'm just taking an older extract just to show you bear market trends, because there's so much which I can show you on the bull market side. But you can also do something like this, where you combine the super filter and the SW, and you say, okay, I'll trade when I get an alignment of both. So I'm not just going to go long when I get a signal of, the blue bar. I also want to see the SWI with me. For example, when I look at this orange bar over here, and I also see that I'm below the SWI, it gives you much greater conviction to go short on such a trade. So to recap, I'm looking at trend-based studies and volume-based studies, and that's why when I made the automated trend modules, every different module, every different template has a very different purpose to it. I'm not trying to, make studies that overlap, or we just add studies for the heck of it. It's about, for example, the RMO2 is another tool designed around the options trader, right? The super filter is designed around someone who wants to try and detect the primary trend of the market and align to a slightly more primary force. The volume study is very integral because what is the driving force of a trend? Money. And what is money best represented as is volume. So that's again something which we must blend in. Let's talk about a more recent tool that was introduced in 2024, which was the automated support and resistance model. Now, usually you would manually draw support and resistance. In fact, I would say the most loosely word used in technical analysis, I would take the liberty of saying that, is that a lot of analysts say, oh, there's a support here, the resistance here. And we don't understand the real meaning of it or how it's generating and what's the relevant price action that should happen. I want you to understand that price is supreme and we need to find that level which is relevant in terms of a price, and that's why it generates what we call a support or resistance. So in other words, there's significant price action around that area to create a support, or there's significant price action in that area to create what we call a resistance. So when you see these are marked as blue and purple, these are also automatically marked out. They come out as support zones where you have them as purple levels, and they come out as resistance when you have these three dashes which are blue in color. Let's actually dive into some straight charts and show you how these work. Let's look at a 5 minute chart. Again, this is not live, but this is a NASDAQ chart for the last 3 or 4 days. And you can see over here the market resisted on this level, which is around that 24,900 odd level, and then subsequently broke down. So around here, you saw the market closing below what I call support. And that's what generated quite a drop in the market price. So it factors this in. So the minute you see resistance is drawn, resistance is not crossing and support starts breaking, again, use a rule of thumb of selling below the low. Like I always say, don't just, sell because you saw that. I want you to kind of see that, okay, I have punctured that area, right? I'm trying to use this low clearly because that's the bar where I have broken it. Similarly, you got resistance here. I want you to see when do you cross that resistance. So when that happens, super, right? That's what we want to look at. Subsequently, you get another resistance. You cross that, very good. Now look at the support breaching. Support breaches, low not taken. So you're not going to go short. Don't worry, right? Again, often they close below that support, does not break the low, right? So you keep traveling in this uptrend the minute you try and learn that, right? So what's important to me is let's find out where that support breaks, right? That's important. And similarly, once that resistance crosses, when we break that level out, that's going to definitely give us some kind of a meaning. Similarly, the last breach we had of support was here, where the market, again, this is a 5 minute chart. Of course, this is not real time, but that kind of gives you some kind of an understanding that support and resistance is not something you need to manually draw anymore. This is going back into historical data, plotting that level out for you so that you can really focus on, what exactly it's looking like. So even now, I think we're still below that level as we speak. But long story short, support resistance, beautiful indicator, one of my absolute favorite go-tos because of the comfort it gives me when I see that a support is being held and I'm breaking out, right? So why did I mark that bar? You cross the blue resistance area. That's a beautiful, you cross that. So every time you cross that resistance area, that's something I want to pay attention to. So don't get worried that, oh, I've reached a resistance, do I need to sell? No, resistance is more about, do you need to buy? I need to close above it, and that's a further sign. I want you to again focus on where can I get the first signal, right? After the support, this is my first signal, right? I had a support. This is my first breakout. These are just add-ons. Here doesn't break. This is again add on. But it's really this one which I've kind of put 3 tick marks on. This is the area which is the first breakout. But here, this is where you start questioning what's happened. It didn't cross the resistance. And now I've got this support. Will I really breach this and the market drop? That's what I want you to be careful about. So when you look at trading with support and resistance, it makes it really simple. And if you're wondering what these two lines are, I'm going to talk about a tool called the trend flare. This further indicates to you that you're above what we call, the equilibrium lines of the trend. So in other words, if you get a breakout and you're above both these lines, that's definitely a positive. So think of it as just an indication of strength. So when I'm getting a buy here and I see that I'm above both the orange and the green lines, that indicates to me strong health in terms of the trend. So it's just an additional tool. I would say it's not mandatory, but it definitely can help you. So if you can just understand how to use support resistance even, you would be able to gauge that, okay, from here, there is a downslide coming. This is resistance. So the minute you can see that happening, you can understand that that's really a problem zone. So similarly, if you sat down over here, you got a support level, it's beautifully sitting on that orange line and penetrating through, you will get that as again a good signal to to get some kind of follow through. You cross the resistance after sitting at an important support level. So again, support and resistance is an important template. We call this green line what we call the baseline. There are two baselines which I have over here. The green line is a standard, what we call a normal baseline. So you can see over here I've got an indicator written normal. BL stands for baseline normal, and BL over here in the orange color stands for baseline slow. So there are two baselines I draw. One is the normal inbuilt one, and the slow is basically a more conservative. So think of it this way, friends. If I break out of a resistance and I cross both the baselines, that's superb. Similarly, if I break a support and I break both the baselines, I want you to look for this kind of high class stuff, right? Those are really, really good signals. You cross this level over here, I mean, that's really high class stuff. You're crossing both the baselines and you're breaking out of a resistance. So that definitely helps put some weight or understanding to the trade rather than, so your conviction goes up a lot more, especially when you see stuff like this. Resistance is held subsequently, you can see there was pressure here and the market just dropped from there. So try and use the indicator in a way that you can easily. I seem to have got locked in. Let's try again. It seems like I'm frozen, Jeff. Are you able to hear me still?
I am.
I can hear you. Yeah, this
Okay.
is Greg, but I can also hear you.
Yeah.
Okay, great. I don't know why it seems like my PowerPoint has just got hung and I'm not able to move ahead.
Huh.
That's strange. Let me try. Should I try and dive back in or?
I wonder if it's like there's been a crash in your PowerPoint. Maybe tab out of it and we can see if we have any motion at all.
Strange. No, it's absolutely locked.
Okay.
I think I'll try and dive back in for a second. You'll have to
Okay.
bear with me for a few seconds till I jump back in, folks.
That's fine. We'll see in just a second. I'll make sure once you kind of get out that you can still move your PowerPoint because I don't know that it's related to the webinar. In any case.
Okay,
We'll
let's
see you in
see.
a second.
Maybe Jeff, you could probably go over some of the questions while I pop back in.
Yeah, let me see if I have any. Iqbal says, hello, Jeff, Greg, team, and all folks. Good morning, Iqbal. It's good to see you. Thanks for coming in here. Sheldon says, did Jeff Tompkins present yesterday? We did. You can find it at youtube.com/Metastock. Okay. Let's see. Patricia says she found the RMA oscillator on TradingView. I wouldn't trust it, Patricia. I've seen it in other platforms, and so it's not always the right thing. In fact, I saw one on TradeStation one time that just wasn't correct at all. And the reason I knew that is they were telling me it absolutely sucked because they were giving me the buy and sell signals. They weren't using it right. So, in any case, those are the questions that we've got so far. Rahul, are we having any luck? Well, it's just me. All right, let me go ahead and we'll talk a little bit while we get in here. I wish I had a little bit of a price to share. Let me go ahead and share my screen here. We'll show kind of how this works a little bit. Here's a picture of the add-on. It does include a number of different methods. You can see them right here. One of the things that I've really enjoyed about Rahul is kind of how prolific he's been in terms of methodologies. So with the add-on, you get like his breakout catcher, the strength and weakness index, the super filter, the trend decider, the RMO2, the counter trend indicator, the trend flare suite, the auto support and resistance. Those are all included. These are all different methodologies too. So you can kind of go in, use them, all that kind of good stuff. So I'm going to go ahead and excuse Rahul right now. And that way when he comes back, there'll just be one instance of him. So in terms of the methodologies and what is included, the breakout catcher helps you solve the direction puzzle. It interprets if the market is bullish, bearish, or neutral. It does a really good job of that. You have your strength weakness indicator. It uses volume as a core ingredient, measures trend, tells you if you're on the right side of trend. That's something that's included. The super filter is another methodology, shades the trend in 4 different colors. That's one of the things I really like about Rahul is kind of how clear he makes everything when he's pulling things together. So you've got the trend decider suite. This one will work on a price chart. It'll show you support resistance at different time frames, daily, weekly, and monthly. It'll give you buy and sell signals around this. And the nice thing about this is there are a kind of a variety of different methodologies you can use. All right, Rahul looks like he's logging back in. Looks like we've got, okay. So we have the RMO2, which is an extension or an expansion or an upgrade to the original RMO that's been in Metastock and been trusted by so many users for so long. There's a counter trend indicator. Rahul, how you doing?
I'm doing good. I'm back.
Okay. Let me go ahead and make you the organizer again. And we'll make you the presenter again.
Sorry about that. I don't know what really happened.
It happens. It's not a... All right, I can see your screen again. It seems like we have motion on your PowerPoints again.
Okay, super.
Right on.
Should I continue and you could take off once I'm done?
Yeah. Yep.
Okay.
Yeah.
Sorry
Go
about
for
that,
it.
folks.
I'll get out of the way now. Thanks.
Okay. So continuing on the support resistance, I was trying to tell you that try and focus on areas where you have substantial, evidence of the fact that both the baselines are broken and you've broken a support level. That certainly adds weight to you. And if you're looking at the trend flare template, which is again one of the newer ones, you need to look at, the trend flare has several elements, and maybe the first thing it might confuse you, but for a more advanced user, it definitely would be something exciting because it tries to be quick at the same time and also give you a more complete picture in terms of where the trend is switching up. So when I say trend flare, what it really means is if you look at these orange flares up or down, if you see an orange flare down, that's an indication of the market trend flaring down. If you see an orange flare up, that's a possibility of a movement up. So these are also signified by little diamonds on the bar. So if you see a blue diamond, that's a flare up. So in other words, if the high of this bar crosses, you could have a trend flare on the upside. Similarly, if you have a diamond down like here, if you see that as a trend flare down and the low breaches, you're looking at a movement on the downside. The baseline further helps you understand that, okay, if I've got a trend flare down and I'm breaching the baseline, that is definitely something which I want to make sure I try and trade into. Then you have these little circles which come up, and these circles are what we call TSL levels, or trailing stop loss. Okay, so they're just three terminologies I need you to get comfortable with. One is the baseline, which dissects the major trend. Second is the TSL, which is a trailing stop loss. And the third is the trend flare levels, which are also called as SS plus or SS minus, meaning sweet spot plus is a buy, sweet spot minus is a sell. So if you're looking at orange diamonds, those are trend flares which are going down. And if you're looking at blue diamonds, they're trend flares that are going up. So it's quite a holistic template when you see it. But what you're trying to do is, okay, if I got a flare down breaking the baseline, I'm trying to go short. For example, here you got a flare up and you're crossing the baseline. I definitely want to consider a long position above that high. So that's how it works. And when you expand on it, it becomes a little easier to understand. For example, here you got a trend flare up, you're above the baseline, makes it simple. You see a little circle here. That circles are stop loss levels. So if you breach that level, that's like a trailing stop. Now, of course, we've got documentation and manuals which kind of explain this out. And we even have people that can help you walk through it once you sign up for the product. So if you're not getting fully conversant using the manuals which I've written, you're more than welcome to call us or email us up, and we'll try and help you through the areas you have a doubt with. So, is it that you have to use every single system in the ATM? Absolutely not. I mean, you have to go to indicators which you think are doing what you precisely need. And, it's a bit like saying, I'm going to go to a buffet and have every item on that buffet from A to Z. And that's not going to be good for you. You need to cherry pick that, okay, even though within the ATM suite of studies, I may have 7 or 8 core templates, if these are the three ones which I want to first align to, I'm going to try and work with them first. So that's exactly what I would try and tell you. These, what I've showcased to you, are some of the newer ones. And I think a definite 2 or 3 studies which you should start with is the SWI, which is volume driven, the ATM super filter, which is adaptive price trend detection, and the third one being trying to use the support and resistance automated levels. So these are three definite ones to kind of kick off with, and then you should build on to things like the trend flare, the RMO2, counter trend indicator, because they kind of take it up a notch in terms of your experience as a user. It also needs a little more comfort level with the program before you get to it. Again, the whole idea is we've automated to a very strong degree. So you can see even the axis at the bottom is marked out as bullish and bearish zones. So it's not very, very difficult. It's just a matter of you're getting accustomed to it and using tools. So here the trend flare would give you a breakout much faster than, let's say, a standard RMO. If you're someone who feels that no, I'm willing to get in earlier, I wouldn't like to wait for the RMO to kick in. Uh, you're someone of a faster beat. That's why the trend flare exists, right? So it's really designed around that trader. Now we've got scanners through what we call an ATM power screener application. I don't have enough time to run you through that today, but the scanners can definitely help you understand all these opportunities. So where you have a new flare, so in other words, the SS plus, the sweet spot plus, a new trend flare up, a trend flare down. Is it above the baseline or not? Can you see the colors? If it's green in color, means you're above the baseline. A red background shows you're below the baseline. So when I look at, say, SS minus here, that means that's a flare down, and the background is red. That's definitely a weaker stock. But this is definitely a very bullish stock because there's a sweet spot plus and a bull upshift. A bull upshift means previously it was below the baseline, today it's above the baseline, and it also comes with a sweet spot. So, this is a beautiful scanner. And again, these are automated scanners which you can run through the application. They have voice alerts, they have email alerts. I mean, it's amazing. We've taken scanning to another level altogether through the Power Screener app. You don't even need to run the Explorer. So if you're someone who's not conversant with the Explorer, because I think the Explorer is an excellent tool, but what tends to happen to a lot of us is we often don't run it in a organized fashion. We don't, but the Power Screener as a separate application That's a desktop app that you have on your Windows PC that is running constantly, and it's giving you those opportunities and alerts as they happen. So it's not dependent on you to actually go out there and run and explore every bar that occurs. It's always on and it's always ticking. And if you have real time data, it's always live. It does even work with end of day, but the beauty is it's not dependent on you for a command that do a scan. It's always scanning. So to recap, the whole goal of helping you use helping you with the ATM is to make it a rule based approach, and again, to help you align to the fact that there's less emotion and there's more adaptability within your indicators. Because I think the greatest problem with trading, as I told you right in the beginning, is the fact that we have the fear factor when we take the trade, and the fear factor happens because you have indicators which may be incomplete. That's why I tried to say blend in with indicators which use both price, volume, support, resistance. So you have a solid backing in terms of the analytics that you're using. Each of these studies or strategies are always structured with proper scanning, money management, and this whole suite is there to offer exactly what you want. For example, if you're someone who wants a more stable, longer term trend, you'll use the super filter. If you're someone who wants a quicker entry, you might use the counter trend or the trend flare. If you're someone who trades option, you'll use the RMO2. If you're someone that wants a more holistic approach of, I want to look at price breakout and volume breakout and a support resistance breakout. Yeah, that's a beautiful blend that you're putting together. So uh, the whole idea is let's make analysis automated, because I want you to focus on your skill set as the trader rather than the analyst. And I think Metastock does a wonderful job in giving us a platform which does these analytics and scanning for us so successfully that we can really focus on our skill set as traders and investors and not just analysts. So I'm going to throw it open for questions, Jeff, and of course you could build on to the aspect of the add-on and what it offers.
Great. We do have a bunch of questions. First of
Great.
all, good job today. Glad we got you back. You definitely do a better job talking about it than I do. Uh, Lolita has a very simple question. She wants to look at candlesticks instead of bars with it. Is that possible?
Oh yeah, absolutely. Again, I'm someone that's used to bars, but again, there's absolutely no issue. You could use it with candlesticks, and you should certainly have that working well for you. And I'll just answer another question of us is what's the success rate? Now that's a question we get asked very often. And I think when you look at it, I just showed you, for example, the NASDAQ, which is the index, which kind of represents the whole market. Really, in the last 1 year, you've always been aligned on the right side of the trend virtually most of the time. So, that backbone of direction is what we need to look at. That piece that it's giving us of staying in the right direction is what I think is the most important. There's no price I could put to that. There's no hit rate I'll put to that. I mean, that is absolutely, unimaginable to have a study that can keep you so well aligned with the trend is what we all need, because that's what keeps us calm as traders, because by nature we get a little fidgety when we trade. So again, if you forced me, you put a gun on my head and say what's the kind of rough hit rate, well, every stock and time frame you use could be different, but you should shoot for something between 60 to 70% in terms of a hit rate. You should shoot for every time you risk a dollar you get $1.50 minimums. So that's how we like to test our systems.
Right on. Very good. Let's see. What we had a question in here about the diamonds, what the diamonds meant on the chart.
The diamonds on the chart are really coming with the trend flare indicator, and it's well documented in the manual as well. The diamonds represent where you have a flare up or down. So an orange diamond indicates a flare down, a blue diamond below the bar indicates a flare up. So that's a potential point where the market's going to change direction.
Cool. Those are all the questions. So I think what I will do now is one, before I let you go, I do want to say thank you for all the support over the years. You're one of those people that have had an impact on my own personal trading. And it's just,
Thank you, Jeff.
I appreciate all the work you've done over the years. in terms of bringing these really good methodologies over to
Means a
Metastock.
lot coming from you. Appreciate that. And again, kudos to the entire Metastock team for putting these together. And I keep telling them there are many companies who sell you software, but there are very few that kind of stand by you and try and give you this kind of education. So it's amazing that these endeavors continue with time.
I'm going to talk about this awesome deal that we set up for this today. Thank you very much, Rahul. I appreciate you.
All right.
Yeah,
Thanks a lot.
Let me go ahead and share my screen here. And we'll go ahead and I just want to go through again. We only have like an hour at a time to kind of talk about these things, and there's a lot of stuff that's included in here, including an upgrade to the RMO itself, your strength weakness index, your trend flares, and every time we've been promoting the ATM for a number of years now, and we've really only done like 4 versions now. And every time Rahul kind of goes to provide an update, I'm like, what is he going to do to improve it? And I'm amazed at kind of the new stuff that he puts in it every time. He's such an asset to us. So in terms of this one, here's a list of all of the different methodologies that are included. And it is something I believe like Metastock is going to help you grow with it. So normally the ATM suite is $149 a month. As part of the conference special, we're going to put that together at $129 per month. That's a rate that you get to keep forever. You don't go back to $149 at any time. You can just keep paying for it. And if it's something that works well for you, if it's something that helps you find better trades, which is the whole goal, and it will, it's going to be well worth kind of the investment of $129 per month. But we want to make sure that it does work well for you. We want to make sure that you're happy with it. And so we've put together like a bit of what we call an extended trial offer. Kind of like what we do with Metastock, where if you buy a month, we give you the second and third month for free. But what we're going to do is we're going to include as part of that some training. So if you, Rahul and I sat down, we did some training over the course of a few Saturdays, and he talked through all of these methodologies, how to use them, how to implement them. And here was kind of the syllabus that we had for session 1. Okay, here's session 2. Right here, you can kind of see it, what we were doing with session 2. Both of these trainings are retail value of about $886 as a retail value for them. What we're going to do as a special today is we're going to give you 3 months of the ATM at the discounted rate. Actually, we'll give you 3 months of the ATM. We'll give you the training that you can go through. You'll have unlimited access to that. If you don't have a copy of Metastock, the top-rated software in its price category for 30 years in a row, we'll give you that as well as a free trial. But basically, you'll have 3 months access, so you'll pay $499 for that. If you're not happy at the end of the 3 months, you can just cancel. There's no commitment to keep going with it. But with that, you're going to get everything you need to go ahead and get started. So you can get started. You can give us a call toll-free here in the US and Canada. You can give us a call at 800-882-3040. You can go to metastock.com. Actually, you need to call in for this particular offer.
I was just about to break in and tell you that.
If it's such a special offer, kind of the way that it's put together, you have to call in. So give us a call, 800-882-3040. We have to kind of manipulate the pricing on the back end to make this offer work. It's such a good deal. So you can also go to metastock.com/salespchat. We can help you kind of get an order put together that way. You do need to call in for this one, though. But to reiterate, you're going to get all the training that comes from Rahul. You're going to get 3 months of the RMO. You're going to get the masterclass. All of that's going to be basically available for just $500. 800-882-3040, metastock.com/salespchat. Again, Rahul, thanks a bunch for being here. I appreciate you. And there we go. Let me go ahead and, as we go into the next set of slides, I want to say I hope everybody's doing well this morning. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event. They've been big advocates of the Metastock events for decades now. How long have we been doing these events now, Greg?
Ooh, that's a really good. The
big long day.
Event, the 10 years.
We started right after we moved into Gateway. It was the very first ones.
Oh yeah, it's been a long. The technology has completely changed since we started doing this. I think we were holding up candles and hitting sticks on rocks when we first started.
I remember a bunch of times where we're like, "Oh, this is wired wrong," and we'd have to we're rewiring the whole studio. Anyway, Stocks and Commodities magazine has supported us the whole time, and man, we did have some convoluted ways to get our GoToWebinar stream up on YouTube before. Now you just have to put in a key and a URL, and it works. It's amazing.
Yeah, these young kids in the rock and roll, they don't know. They don't know how to do that.
Back in my day.
Back in my day.
Do you want to help me give away a prize?
Absolutely.
Okay, let's do it. I have new numbers. I think before we give away the prize, we should tell everybody how they can make sure they're eligible to win a prize.
That's easy. If you're watching on GoToWebinar, you've likely already registered. If you're watching on YouTube, the easy way to register is just go to the link I pinned at the top of the chat, or just go to metastock.com, click through to the page, and it just takes a second to register. You don't need to register more than once. That won't help your odds of winning. And that's that simple.
All right, very cool. Let's give away a book. Which one should I give away? The right one or the left one first?
How about the correct one?
Oh, they're both correct. They're both
okay.
Good. Let's say right.
The
or
left.
Okay.
The left. The left.
Yeah, I had to look to see which one formed the L. Right. We're going to give away Steve Bigelow's Candle Profits, Eliminating Emotions. And I feel like every time we start to give away one of Steve's books, I should tell you how much of an influence he had on my trading, how great of a guy he was, how much we loved him. And really, Steve was, I think, that kind of guy that was a friend to everybody. So he was also a great technician. This is a great book. I'm going to send somebody a copy. I'm going to send a whole bunch of copies. I'm going to make a special trip to the post office with some copies. Greg, what I need from you is a number between 1 and 6,674. Sorry, make it 2 and 6,674.
Hi, Marina. It's good to see you. We'll be with you in just a moment. That number will be 5,994.
Wow. That's probably somebody that registered yesterday.
Probably, or this morning, yeah.
That's a very, very high number. Jack Carr in the USA won the prize. So, Jack, I'm going to drop you a message as soon as I have a second, and I'll just need to confirm your address, make sure we have that on file. And as long as you respond to my message, I will send this to you next week. So, Greg, thank you for the assist.
You bet.
Let's keep this party going. Hello, Marina.
Hello.
Here, I'll put another picture of it so we can have two of you on the screen at the same time.
Okay. With the hat and without.
With a hat and without. Marina, I'm going to introduce you. Marina, I love Marina's story because she started as a spin instructor. You know, I went to spin this morning.
Oh, nice.
Yeah.
I think
She started as a spin instructor. I call her the world's most interesting woman. She writes a travel blog. She's an expat living in, I believe, Spain.
Yes.
And she's been trading for, how long have you been trading for?
Almost 14 years.
Okay. Yeah. She has a day trading course that she's going to talk a little bit about. She teaches people how to trade. And I want you to welcome one of my very best friends. Marina, it's your turn. Let me make sure, I was going to say go, but let's make sure we have a screen share and everything going as well. I'm going to turn on the organizer privileges for you, and then I'm going to give you the presenter. So you should be able to see the questions.
Oh, it says I got it. Okay, I think, yeah.
Okay.
Yeah?
Perfect.
Oh, hang on a second, and there we go. But now I lost the... this is a new interface, isn't it?
Yeah, they tried to make it look like Zoom.
Oh, okay. I actually like it. I'm just getting adjusted to it. Okay, sure. So I just stopped sharing.
Yeah, no problem. There's a big share button underneath us, and if you just click on it, it'll allow you to share again.
There you go. Okay.
Yeah.
And I'm gonna remove myself. I think that's also been a little bit distracting.
I'm gonna be out of the way too. All right.
Okay. All right. Cool. Thank you so much. Perfect. And thanks. Such a great intro. This is one of my favorite presentations to be on. I always say that you guys have such a really beautiful vibe. and energy. So thank you for everything. And thank you for organizing these. I know that you were saying that you've been doing these forever. I think we've been doing this, I don't know, for like 6, 7, 8 years. I'm trying to remember where I was. I remember usually in like which house in which part of the world I lived in when I started. And it was like almost 8 years ago that we've been doing this together. It's crazy.
That's funny. That's how I keep track of stuff too. Where did I live when that happened? Yeah. Okay, cool. I'm out of the way. Go.
That's a good one. All right. Well, thank you so much. And I'm just happy to be here. It is absolutely gorgeous day in Barcelona. I mean, absolutely beautiful. We just came back from France yesterday. And even though it's only like 6 hours apart, the weather is remarkably different. So I'm just happy to be home back in Barcelona. And I am Marina, the Trader Chick. And today I actually wanted to chat with you guys about something that I feel a lot of people kind of overlook, in the sense that they just it's almost like a given that we know a lot of things about the trading market, about the financial markets. And I always remind people, when we first sit down in the car to learn how to drive a car, we always have to remember that we started at the beginning, right? We started, where is the steering wheel? Where is the clutch? Where is the accelerator? Where is the brake? Because now, after whatever, even after a year of driving, we totally forget the beginning stages. But sometimes just getting back to the beginning is so important. We don't have a car in Barcelona, but we rent practically every weekend. And every time it's a different car. And you have to start from the basics, even as in, where's the light switch? Where are the blinkers? Where's the wipers? You have to get back to the basics before you can start to drive and go someplace like France. So this is kind of what I want to go over with you guys today, because this, just even going over it, I promise you, will elevate you to that next level of your trading or anything. So before we get further in, I do want to do a quick intro. I know that Jeff already gave you a really good intro about me. So here is me. I am an expat living in Barcelona. But the reason why I was saying that, I'm trying to remember which house and country I lived in before, because I've actually been an expat now for almost 23 years. And before this, we lived in Guatemala and in Costa Rica. So I was living still in Guatemala when I started presenting with Metastock. So it's been a fun ride. And it's true, before I was a day trader, I was a fitness instructor. And I literally was one of the very first spinning instructors in Manhattan and one of the very first Pilates instructors in Manhattan. And the main reason I bring this up is, a lot of people have this misconception that you have to come from a math background, a financial background, an economic background, or even like a software engineering background, and you don't. That's the beauty of day trading, is that you could literally come from any walk of life and still do several different things. I still trade. I still run my travel blog. I don't teach fitness anymore, but I go to the gym. I have fun like that. So I also do other things other than just trading, because that's kind of the goal with trading, right? So that we do it in like an hour a day and then have the full day to ourselves. And the best part about trading is that you can do it from anywhere in the world. Me and my family travel at least 3 to 4 months out of the year. And, as much as I would love to be a trust fund baby, the reality is I'm not. I do work for my money, and trading is my main source. So I could do it from anywhere. That's the beauty of it. So before I dive deep into the presentation, I know that Jeff is recording everything on YouTube, and also you guys get the replay, but we do only have about an hour together. So I have the entire presentation for you guys so that you can download it completely for free. You'll get it in a split second. Just go to makingofadaytrader.com. Go to makingofadaytrader.com. You could get the presentation, and this way you can follow along now, and also you could go back and review everything with the replay, but at your own time. The entire presentation is there. So go to makingofadaytrader.com. You could download the presentation from there. So let's go into some really cool things. What in the world is day trading? Why is it not investing? Because the thing is, whenever I tell people I'm a day trader, they're like, oh, I want to learn how to invest. What I normally tell them is that day traders trade to invest, right? So unlike investing, one of the really, really big things that I would love for you to take away from this, unlike investing, in day trading, you do not want to diversify. You do not want to have a robust thing going on while you're day trading, because you are literally in the moment looking what's in front of you. If you have too many markets or instruments open, you're not going to be able to focus on each one because they're all really different, right? So for example, imagine your child comes up to you and they're like, hey mama, papa, I want to learn how to play a musical instrument. And you're like, oh great, which instrument do you want to play? And they're like, I want to play the violin, I want to play the piano, the drums, and the flute. And you look at them and you're like, wow, those instruments are so different. It's really recommended to just focus on one so that you can really master it, right? Once you master that one instrument, if you want to learn another one, great. It's the exact same thing with the financial markets. As a matter of fact, financial markets are actually called instruments, right? You have different instruments within a financial market, right? I'm going to go into those a lot more in just a little bit so you guys really understand. But the most important part of what I'm saying right now is find the one. And when you master that one, then you'll be able to say, you know what? I am killing it. I am making money. I want to learn how to trade and master another one. Once you do that, the sky is the limit. The other thing about investors is that investors don't really care if the market is kind of going up and down once they invest in the company, right? For example, if you're investing in Apple, they just came out with the new phone. So let's pretend they're coming out with the next phone. So in between the new phone and the next phone or next product, there's going to be some ups and downs, right? But overall, you're invested in the company because you know that it's a solid company. They have a really good, product line, and they're constantly growing and innovating. However, day traders, we don't care if the market is going up or down because we are literally in front of our charts using the technical analysis, and if it's going up, great. If it's going down, great. We can make money either way, right? So that is something that's really important to understand. One second. Okay, so I want to bust some myths. There are quite a lot of myths that go around, or misconceptions that go around day trading. And I have realized when I began trading that I was boggled down with these misconceptions. And once I broke these limiting beliefs, it was so much better and so much more fun for me to trade because a lot of it is just a misconception. It's not real. The biggest one is obviously that it's too risky. Day trading is gambling. All right, I want to give you a good example. If you or your child, whatever, decide that you want to be a pilot, right? Are you going to jump in a plane the very next day, invite your entire family to get in the plane, and just somehow miraculously think you're going to take off and then you're going to do a good landing? No, it's a suicide mission. The fact that you might not, that if you even do take off, chances are you are going to die going down, right? Why? Because we all know if you want to be a pilot, you have to go to pilot school, you have to practice, you have to do simulation hours. This is a known thing. Yet when people say they want to day trade, there's no barrier to entry. So people who have some money are throwing their money in the markets without having any idea what to do at all. They have no clue what is going on, but they think they're going to become millionaires overnight. If it was that easy, we'd all be millionaires, right? It's not. The risk is when you don't dive in and commit to absolutely learning, right? The same as if you're going to be a pilot, you got to put in the hours. You got to put in the hours of learning how to day trade. And that is with simulation. Every single platform, and MetaStock has an amazing simulation paper money platform. Everything is as if though you're in the live market, but it's not real money, and you need to do that. If anybody is telling you otherwise, they are lying to you. If you are taking your car and crashing every single time, are you going to gain confidence in being a driver? No. That's why you need to put in the simulation hours. That's just how it works. The other one is, and to be honest with you, I cannot even believe that this is still in existence, but I've had a couple of people write to me the other day asking me if this is true. They're telling me that their broker is telling them if they want day trade, they need to have $25,000 or more in their account. I cannot even tell you what a lie this is. First of all, you can start with $100, $500. Where did this misconception come from? Way before the internet even began, people, you needed to have that kind of money because then the broker would sugarcoat and say that they will give you a margin account. And I'm going to get into margin accounts in just a little bit because that is just absolute loan sharking and absolutely not mandatory. So I'm just going to break this to you. You do not need to have $25,000 or more to get started. You can start with a very small account. And the other thing, like I mentioned earlier, you need to be a math whiz with a financial background. Such a lie. I never use any math skills because technical analysis doesn't require any math skills. So you don't need that. Anybody could learn to be a successful trader, and that it's too stressful and chaotic. Um, yeah, if you're sitting in front of this is so wrong. No human can sustain this. This is completely not sustainable. This is movie stuff, right? Like when we're watching Wall Street or Wolf on Wall Street or any of those movies, this is not true. A human mind cannot process all of this going on. I trade with one chart, one monitor. And the other thing is, this is an actual thing. It's called the shiny object syndrome, that you think that you need to be buying the latest and the greatest softwares, indicators, algorithms. I have now been doing this for almost 14 years, and I can promise you one thing right now. The only people making real money from this are the ones selling you this stuff. The only thing you really need is a good, solid platform. And Metastock is amazing. It has absolutely everything you need, and that is the only software you will need. I guarantee it, right? If you want to be a Formula One driver, this gives you all of the gadgets you'll need. Or if you want to be a minivan driver, Metastock gives you all that you need. So you do not need to keep on buying all the shiny latest objects, okay? And this is another one. This is such a misconception that you need to be sitting in front of the news all day, every day. And this is, I think, more common with equity traders. I've had some equity students that come to me who want to trade equities, and they're like, oh my God, I wake up at 4:30 in the morning. I'm doing all this research. Then I'm sitting all day in front of the charts, listening to all this research. And then after, I'm still sitting in front of and watching, and what is it? CNBC News and market, all these other things. Why are they doing that? Because they're losing. You don't need any of this information. Technical analysis cuts it all out. I literally turn on my charts. I give myself a good 10 minutes to see all that's going on my chart, nothing to do with the news, and then I trade the chart. Market research is not going to help you. It's just going to stress you out and give you more analysis paralysis. And this is a really popular thing that happens to, I would say, every single trader. I definitely know it happened to me, but I've met a lot of traders and every one of them could vouch for this. Trigger happiness. This is a thing. When I first began trading, within like a 2-3 hour session, I would have like 60 trades. It was absolutely bonkers, right? So I would, even if I was winning, I would still be losing on the commissions alone. Today, I am taking no more than 2. I don't even think I take 3 trades anymore for the day, because pro traders are very similar to big game hunters. Imagine a big game hunter sitting and watching for the big game, and all of a sudden there's a little field mouse running through. Do you really think they're going to waste their energy and bullet on a field mouse? No, they're going to sit patiently, go for the big game. The pro trader, once you have a really solid strategy, you go for the highest probability, highest profitability trade. Because the most radical way to trade is conservatively, and usually small profits, which you need to adjust to in the beginning, can eventually bring you big profits, because it's, these super aggressive moves for these huge big profit targets, it sounds romantic, but the reality is there's usually a very high risk, and the risk is usually what happens more than anything else. So get focused on the smaller ones at first. The other thing that I hear all the time is, oh my God, I missed this trade. I have to catch this trade. I call it FOMAT. I'm sure you guys heard of FOMO, fear of missing out. FOMAT, I coined this term, fear of missing a trade. Imagine a surfer. Imagine, I'm sure if you don't surf, you've seen surfers, right? Imagine a surfer that is prepping on the shore to go, and all of a sudden there's a wave coming. Do you really think they're going to just run midway, half strapped to their board, their wetsuit not on them all the way because there's a trade? Because, oh my God, what if there's a wave. Oh my God, what if they miss that wave? No, because they know that there's going to be 1,000 other waves coming. It's the same thing with the trades. There are 1,000 other trades coming. The second you see yourself ready to jump in and chase that trade, that becomes very emotional, and that immediately makes you stop to think properly. So just lay low. Trust me, there's another trade coming. Okay, I mentioned before that there are a lot of instruments and financial markets to focus on to trade. Okay, I want to actually go over some of these because a lot of people, they want to do them all, but I want to show how different they all are. First and foremost, Forex, right? We all know about the foreign exchange market. So how do you do this? It's usually by pairs, right? The most popular pair, obviously, is the US with the euro. I also know the US and the yen is a popular one, US and Australia. The thing is, again, you cannot have too many pairs because the countries are so different. And I'll be honest with you, with Forex, it has nothing to do with the country. It's all about the leaders. Okay, it's all about the leaders and what they're deciding to say or do, and then the money really fluctuates. And sometimes you have no idea what the leader is going to say. So I really recommend, if you're going to do this, focus on only one particular pair and really stick with it and learn and follow that along. The other one is equities. I love it when I ask people what they trade, and they're like, oh, I trade stocks, I trade equities. There are 5,000 stocks in the US market alone. Okay, so when you're telling me you trade stocks, I automatically know you are an amateur. Why? Because if you were a pro would answer, oh, I'm trading this sector, pharmaceuticals, entertainment, technology, or I am focusing only on a specific instrument, a specific one. Tesla, Meta, Microsoft, these are the big movers, right? Apple, Amazon, and believe it or not, you can make a lot of money from just those individual ones. But you can also focus on big caps, small caps. So again, you need to niche it down. And futures, this is another one. Oh, I trade futures. So you're trading wheat and crude and sugar and indexes at the same time. It's literally like getting into 4 different vehicles on 4 different terrains and trying to drive on at the same time. None of them go together. So again, even within the futures market, choose which one you want to know the best, right? Is it the indexes, the E-minis, which is the S&P 500? Is it crude? Is it wheat? Is it soy? Is it precious metals? Choose the one that you want to focus on and really hone into it. Options. Again, if you're going to be doing options, stick to options, guys. And crypto. There are 6,000 altcoins and projects, at least, maybe even more at this point, right? So again, if you're going to go into crypto, find the ones that you really want to focus on. I am going to give you one very huge piece of advice. Do not leverage in crypto. Don't leverage in crypto. It's very easy to get hooked into this. Don't. Just trade with the money you have. Don't borrow. Leveraging is literally borrowing. And that brings me to, let's discuss and demystify brokers and margins. The broker has one job. That is making money off of you through commissions or through you not really knowing what you are doing. And their job is to make money off of you. So they come up with these fancy perks, as they call them, margin accounts. So margin accounts sounds all good and beautiful, right? The reality is them lending you money on what you have. So let's say you have $5,000, they're going to lend you another $5,000 up to $5,000. So let's say you buy whatever you buy and then you want to take out another margin account of 5,000 more. So guess what if you lose? You still have to pay back what you borrowed, and you have to pay back with interest. And even if you win, you still have to pay back what you borrowed with interest, and that interest could actually knock out your profits. It's not worth having a margin account. And with brokers, what's really important is you need to know what broker you want to use. If you are trading futures, you don't want to be working with an equities broker, because an equities broker might offer some futures, but that's not their specialty. So they're going to charge you higher commissions, and they're not going to be a really good platform for it. Okay. So it's really important to know what it is that you want to focus on. You cannot be on a crypto exchange if you want to trade equities, right? I do know that some are now offering stocks on there, but that's not their thing. Their thing is crypto. So choose what you want to do. And once you do choose what you want, you also need to understand the best platforms for you will give you the best commissions and also the live feeds, right? You want to be in a live feed. You do not want to be in a delayed feed. What is delayed feed? That's just, it's just wrong. You cannot do that. So make sure that you guys have the best feed and that you're also paying the least amount of commissions. Commissions could really eat up a lot of your money. And you need a good platform. I'm going to say this 1,000 times. You cannot be a Formula One driver on a motorcycle, right? You need to have the proper vehicle. Metastocks, I have found, is actually one of the top platforms out there. Yes, there are a lot of platforms out there. When I first began, there was only maybe like 4, 5 at most. Today, there's a lot, but I have to say that Metastock, I know they've been around for almost 30 years, and there's a reason, and they are actually getting better and better with the times every time. All right. So one thing that I recognized is no matter what we do in the world, everything that we do has its own lingo, right? It doesn't matter if you're a doctor, if you're a janitor, if you're a mechanic, if you're a car racer, everybody has their own lingo. And normally when you enter that world, you need to learn even the basics of that world, right? The same goes for financial markets. The amount of people that are just putting their money into the market and not even understanding the basics is absolutely ludicrous. And again, what happens? They are losing a ton of money because of that, right? So let's talk about the lingo. Intraday trading. What does that mean? It literally means you're in and out of all of your positions in that day. Literally, you're in and out of all of your positions in that day. Why is that so important? Because when you know that you are a day trader, you have the right time frame on your chart. If you're a day trader, do you really want to be looking at a 3-day chart? No, you want to be looking at a 5-minute chart, at a 10-minute chart, at a 15-minute chart. But what if you're a swing trader? Then maybe you want to look at a 1-day chart, a 3-day chart, but you don't want to look at a month chart because you're not investing. So understanding that alone will help you find the correct time frame, and you'll be able to trade a lot better. All right, bull market, really simple. It's literally just the market going up. Bear market, market going down. There's no hidden meaning behind these two words, bear market and bull market. They're just literally market going up, market going down. So what's really important to know is that there's actually 3 trends. We mainly hear of the upward trend and the downward trend. However, the most important trend is really the sideways trend. And the sideways trend actually has quite a lot of different ways people call it. You could call it the consolidation market, the transition area, the chop, the exhaustion pattern, the indecision zone, the channeling market. All it is, it's a flat market, and it's a market that is going absolutely nowhere, and you really need to stay out. okay? Because that is where 90% of our losses, if not all of our losses, usually take place. And once you know how to avoid that, you will be staying out of a lot of bad trades and entering a lot of really good trades. Okay, so we've all heard about the risk management, right? What is a risk management? It's when you put in a risk, a stop loss, and what you're doing is you're telling the market, this is all I wanna risk on this trade, right? It's also really important to be able to put in a real stop loss, not your mental stop loss, which a lot of people do. It's literally like saying, oh, I'm gonna put on a seatbelt on my kid, a mental seatbelt, and I'll be able to protect them when there is a car accident. You can't. And you certainly cannot have a mental stop. Really important. What's another interesting thing is that you also need to have a target profit, a profit target in place, because greed will win, ego will win. So if you have a target profit and you permit it to be filled, you'll make money. But a lot of times our greed says to us, you know what, I'm going to get out there, and once it gets to that target area, you're like, wait, it's continuing, I'm going to go more. And usually you're right with the profit target area. Usually from there it turns and then it stops you out. You need to have a target profit in place, a profit target in place. All right, back to the charts. I know I keep on repeating this, but I cannot tell you the amount of people sitting on their rinky-dink phones on some weak, weird little app thinking that they are trading. If you want to be a pro, you got to go pro. Indicators. Like I said before, Metastock has all the indicators that you need. Play with them. They're really great indicators. And that's all you need. You don't need to spend extra money on those indicators. Trending markets. Sideways market will get you guys. Once you learn how to spot those sideways markets, you will be able to save so much money. So please learn how to do that. And that is through technical analysis, which we're going to get into in just a second. All right, let's talk about the buy and the sell. What is a buy? Or another way of saying it is going long. So when you are buying or going long, simplify it. It's literally you're entering low, exiting high, taking the profit in between. That is what it is. So when you hear people saying, oh, I'm buying, I'm in a long position, I'm going long, that's all it means. They entered low, exited high. Sell or going short is the exact opposite. You enter at a high price point, exit at a low price point. And that's it. You are selling the market. You are going short. You are shorting the market. That's all that means. All right. I just want to do another really quick reminder about stop loss and entering the market. And market entry is when you're looking at the market without a strategy and saying, oh, this looks like a good place, and boom, you're getting in. It's literally telling the market that you are an amateur and that you really don't know what you're doing. So what happens is the market gives you a slippage fee. It takes about 20% of what you thought you were entering into. 20% is a big one. So you want to be putting in a limit order. When you put in a limit order, you're actually telling the market where you want to enter. Okay, it's really, really important where you want to enter. Stop limit. This is your risk management. All right. Again, I'm going to say this again. Do not even pretend to be putting in those mental stops. They never, ever, ever work. And I know that you think that you are that unicorn that is going to work for you. It's not. I've been there. Trust me, ego will always win and you end up losing the entire account. Put that stop loss in and be okay with the risk that you are willing to take on it. Okay? And again, if you're going to just market exit, you're going to end up losing 20% more on top of what you already are losing. All right, let's get into the technical analysis. This is my favorite stuff because without technical analysis, you really don't have much going on. And technical analysis can be applied to every single market on any single platform. All right, what is technical analysis? It is examining and predicting price movements by looking what is in front of you, by the different patterns. And these patterns are recognized through areas, divergences, reversal patterns. So what are the two most important areas? Resistance and support areas. Resistance and support areas. So what is a resistance area? It is when the market is going up and all of a sudden starts to hit an area 3 or 4 more times. It is hitting a ceiling, right? It is a market going up and then boom, it starts to hit a ceiling. That's the resistance area. Support area is the market is going down and boom, it starts to hit the floor of the market. It hits it 3 or more times over and over again. And the market respects these areas. So you need to draw those areas in and respect them as well. My favorite is reversal patterns. I find these to be so dead on. They are the telltale signs of when the market is not only going to reverse, but when it's totally slowing down. All right, it is a very high possibility that the market will reverse, but it is 100% sure that the market is slowing down. And my beyond favorite is divergence. This is actually my holy grail. So divergence is literally when the market, the price action is going in one direction, as you can see here, and my MACDs is the main indicator that I use, is the red dots on the bottom, is going in the opposite direction. And this is where it's divergent, literally. And what does that tell me? It doesn't tell me that the market is going to pivot or any of this, but it is telling me really strongly that the market is totally slowing down. And that means the market is not only that it's slowing down, but I don't want to be in a weak market, right? I don't want to be in a market that has lost its strength. So I stay out entirely. And this has saved me so many bad trades. But when there's no divergence, I know that it's a really, really good trade as well. All right, let's put all this together. So as I mentioned earlier, this entire presentation I have for you guys for free, makingofadaytrader.com. I want to now show you just a really quick way of how to use this technical analysis. And we all know about breaking out the trade, the breakout trade, right? Which is usually the most highest probability trade out there. But if you don't know, and if you don't have your areas drawn in, if you don't understand what is happening in the market in front of you, you're not going to really understand it, right? So here's a good example. The market is trending up, and then boom, it goes into a consolidation area, into a channel, a dead zone. And then guess what? Boom, it breaks out. That is a breakout trade. So the way I look at a breakout trade when I want to enter this trade is I look at my MACDs, I look at what I'm drawn. I always draw the areas in, because in trading, we have a saying, everything is to the left. What does that mean? It means when you're entering the market with your live money, your adrenaline is pumping hard, right? So you're not thinking straight. However, if you look to the left, you'll notice, okay, I just drew in this resistance area, and now the price action just broke through. There's absolutely no divergence. I could then logically look at the trade and see that it was a valid trade, which what helps us make the real money. All right, guys, here's the thing. We have absolutely everything we need to take action, right? We have these amazing presentations. We have YouTube channels. We have gurus. We have podcasts, books. But at the end of the day, how do you know you are doing it right? How do you know you are doing it right? Because all of this is great, but the real question you're probably asking is, how do I even get started? How do I get started for real? And this is not a question that I get asked from beginners. As a matter of fact, I usually get this question asked more from seasoned traders, from people who have been trading for years and still are not consistent and are losing money even sometimes. And they ask me, what can I do to turn this around to be profitable consistently? And usually it is lacking understanding of the basics. Like I mentioned earlier, we're not born with the basics and understanding the basics. And a lot of times we either overlook it or we jump head deep into the middle of the pool. Or if we are taking classes, a lot of the academies, they completely overlook this particular aspect because it feels too rudimentary, right? But again, I want you guys to remember when you sat down in the car for the first time, you did not know where was the brake, where was the clutch, where was the gear shift, how do you shift it with moving your foot off of the clutch, right? The basics, even how to turn the car on. Today, there's all these smart cars. Sometimes it takes me time to even figure out that I don't even need a key. It's a keyless car. So you need to understand this and just relearn it. But once you do know the basics, oh my God, then you could go drive anywhere, right? Now, I want you guys to get even more creative in your mind and imagine somebody getting into your car and they've never been in a car ever. I know it sounds a little bit crazy, but you'll be surprised. There's quite a lot of people that still have not ever entered a car, and I'm not talking about babies. And you telling them, all right, you got to buckle up your seatbelt. It's going to save your life. And they're looking around, they're like, buckle up my seatbelt. What's a seatbelt? If you've never shown them, how are they supposed to know? But once you show them, that's it. They're golden for life, right? And now they have a safety mechanism. They feel more confident and control, right? And this was actually my own personal sad truth. I spent over $20,000 on my trainings. And every time I was in a chat room or in a trading room or alerts and people were saying, oh my God, this is a great trade. And I have no idea why. And I was asking, can you please explain to me, what do you mean by you saw a reversal pattern or you saw this divergence? Can you please explain it? And they would either treat me like I was born with this information or completely ignore me. And that's not right. Okay. And honestly, I struggled for years because of that. Ended up losing so much money, but the final straw was I lost almost $4,000 in 5 minutes. And at this point, I was trading already, or I was trying to trade for 2 years. And this just drove me to the end. Like I felt so defeated. And I stepped away. I said that I just cannot do it anymore. It was too painful. And I walked away. I quit. I ended up quitting for about 4 months. And the thing is about trading, and I can guarantee that everybody can relate to that here in this room right now, is that we are all bit by the trading bug, right? We're all bit by the trading bug, and it never, ever stops itching, right? And do you know why that is? I'll tell you why. So when I quit, I stepped away from my charts, I stepped away from the markets, but I did not stop watching others trade. And I kept saying to myself, if they could do this, so can I. So deep down inside, I knew that I could do this. And that's when I decided to come back. So at that point, this was over 12 years ago, I remember I had 3 charts. I had 3 monitors, 3 charts. So I literally donated 2 of my charts to the garbage men. Technically, I just put it out. They were completely new. I've used them for less than a year. I gave them, and I stripped my chart of all my indicators. So all I had was just the bare naked chart. And slowly I put in 2 indicators that I use now. That's another really big misconception, is we watch all these gurus and they're all telling us this is the best indicator, this is the best indicator, but you need to choose the one that works best for you. I used to have 10 indicators, and I remember the Bollinger Bands, the Kettler Bands, and the Fibonacci's, because those are some of the most popular ones. And they never worked for me. And the second I removed them, I felt this load lift off of me, and I was able to start to really trade. So I'm just saying, sometimes we can get influenced too easily. I recommend you first choosing what works best for you. Okay? So about a few years back, one of my students says to me, he's like, Marina, your teaching philosophy and the way you teach is very similar to Coach John Wooden. And I personally never even heard of Coach John Wooden at that point. So of course I looked him up. And if anybody here knows who he was a legendary coach, one of the best to this day. And no matter what he did, like he was a basketball coach, his entire philosophy was, when in doubt, get back to the basics. And I mean, this guy led his teams to win 10 NCAAs, 88 national championships. His team was A-list players. It didn't matter. Every time they started a new season, he would go back to the basics. Why? Because it didn't matter how many accolades you have accumulated. If your shoe is not tied properly, you could sprain your ankle, you could get a blister. So he would start with how to tie your shoe, how to roll up your sock, how to dribble the ball. You got to get rooted in the basics. And after that, anything is possible. So today I have a very special offer for my participants only, my introductory course, Bootcamp for Day Trading. And you could do this on any apparatus, on your laptop, desktop, iPhone, tablet, any kind of phone. You could access anything. And all of this is for $97 one time fee of $97. I want you guys to go here with me, bootcampfordaytrading.com. You can go right here, bootcampfordaytrading.com. Here, put it into your browser right here, bootcampfordaytrading.com, and it will bring you here, okay? And this is the full code. Let me see if I can figure out where can I leave the actual code? Oops. Yeah, I'm going the wrong places here. Oh, there we go. So here, I'm gonna give you where it goes directly to as well. And I want you guys to follow along with me here. Okay, so go to bootcampfordaytrading.com. This way you can follow along and see everything that you guys are going to be getting there. One-time price. So what can you get for $97 today that brings you that same return on investment? Before we moved to Barcelona, we lived in Guatemala. We lived in Guatemala for 14 years. And when we first arrived there, me and my husband, we liked to play golf. And we went to the golf was like 29 bucks per person. But before we left, it was $119 per person. And this was in Guatemala. And today, going out to lunch, even lunch with a bottle of wine, $97. Okay, is not even going to get you that much. And you don't even have to drink an alcoholic drink, even just a regular juice. So, for two people. So again, you don't get that much today. So I'm going to break down what you guys could get for this $97 because it will bring you 10x the return on investment. First of all, you're going to get the simplified day trading package. I know that it is complicated to set up a platform. So I have a 30-minute tutorial that we get right into the fun stuff, which is the trading, to help you set up the platform so you don't have to worry about that. Plus, Metastock, I have to say, when I first started using them, I think it was like this white glove service, I think they call it. I don't remember the name, but it was phenomenal. They came on, they helped me set up everything I needed. The customer service was definitely some of the best that I've ever had. And I've actually used like 4 different platforms. So I could tell you for sure. All right. Everything we're going to get in this course. We're going to really do the anatomy breakdown so you guys truly understand how to understand the uptrends, sideways trends, downward trends, spotting those reversal areas and divergences, because once you do, you're going to be doing so much better with which trades to enter and which not to. Then we're going to go into the defensive zone areas, support, resistance. What are divergences? Because once you spot divergences, I can guarantee you're going to love them as much as me because they're so simple to spot. You could use them on any market you trade, and they're just so simple to work with. And we're going to learn how to master the breakout trade. The power of the breakout is amazing. And the thing is, though, there is such a thing called a fake out breakout. I call it the FOBO. And you could avoid it. So the thing is, sometimes when you don't know how to avoid it, you think that this is a breakout, you get in and then you get stopped out. So I teach you guys how to avoid those fake out breakouts as well, on top of how to master and find and spot those breakouts in the first place. Okay, and you'll get not unlimited access to this curriculum. All this is valued at $1,600. But here's what some of my students say. So like I mentioned before, you can do this anywhere in the world. There's absolutely no limit with internet anymore. And here's what some of my students have to say. Michelle, just finished the boot camp, best money I ever spent. Derek, you're the only mentor that truly checks her work and love it. I am enjoying the boot camp. I am learning every day. So let me share something really important with you guys. I don't know if you remember me asking you, how do you know if you are doing it right? How do you know if you're doing it right? Who's there to be able to assist you, for you to be accountable for? So for me, having a mentor truly helps. And what I am adding into this 1 month completely for free, included in the $97, one entire month mentorship with me. You can have unlimited coaching mentorship with me one-on-one, because that could take you to that next level. All right. And I also have a live trade chat room where we go over together everything that we are learning in the course and implementing it in the live market. This is on top of everything else. So this is a value of $2,600. You get it for one price, $97 one time, bootcampfordaytrading.com. Here's what you guys will get. Everything in this course. One entire month in the live chat room, but one entire month one-on-one coaching with me. Unlimited feedback and accountability. Charts, if you want to do a Zoom call, whatever you want, you guys get for 1 month. And all of this is worth less than one price of a trade. I don't know about you guys, but my trades are usually between $200 to $400. So this is less than one. All right, so you could 10x the return on your investment and go out to 100 of these dinners. So here's the thing though, because of the mentorship part, I could only take on 25 people to really work with. And it is a full room. So I really recommend, this is a no-brainer, right? I mean, let's just go over everything here. I'm going to show you the form here. So this is the purchase order right here. This is where you'll get it. So again, go to bootcampfordaytrading.com. You guys will go to this place right here, and you'll see in one-time payment of $97. If you really want to do a payment plan, you could do 2 months of $59, but you'll automatically get access to everything. So this is where you guys can go right here. So this is the order form. And right here, bootcampfordaytrading.com. Let me know if there are any questions at all. I'm happy to answer. I know that there's a lot of people watching from YouTube as well. So let me know if you have any questions at all. I would love to hear from here in the group, or if somebody is from YouTube.
I don't see a lot of questions in YouTube. Patricia says she's going to repeat a lot of your mistakes. I mean, lessons.
Exactly. Yes. Learn from my mistakes.
Let's see. She also says, thank you. Very informational. She really appreciated it.
Thank
and
you
then
so much.
Phil was nice enough to put out, and we've put him in the chats as well, but he actually posted your resources for your making of a day trader and the cheat sheet. So appreciate that, Iqbal.
Thank you. Well, thank you so much then, everybody, and I hope to see you in the course. And thanks again for having me here. It's always such a pleasure. Thank you so much.
I have one question for you.
Yeah.
Somebody's mic's live. I want to know, what would you say, like, if somebody's watching us for the very first time today, what would you, as somebody that's kind of started at ground zero too, like all of us, right? We all start at zero. What would you say is your biggest piece of advice to a person that's starting at ground zero today?
To be in paper money.
Okay.
I know that it sounds crazy. A lot of people have this misconception that they have to put their live money in the market. You don't. You could practice 100% the same in simulation mode. And that's when you'll really learn. And you'll still have the same feelings.
I like that answer too. And even then, after you've decided, hey, this works well, you can always trade small. Like,
yes, exactly.
As well. Because there is a little bit of a difference between paper money and trading just a little bit. there's a
And
psychological.
you could do small market. You could do small accounts. That's the other thing. A lot of people think that they need to, it's like if you want to put in a lot of money, you're going to lose a lot of money if you don't know what you're doing, right? So
Yeah.
yes, start small. It's totally cool.
Dan says he's having trouble reaching the address, but that was because I misspelled the URL when I did it.
Oh, yes.
Bootcamp
If you go
for
here, I put
trading.com.
in a link.
Yeah, I sent it over here again. And Daniel, you can also, let me grab this one from you. If you go here, I just put it in chat. That's the very best place to go because that'll take you straight there. You don't have to go through a redirect for that one.
Thank you.
In any case, Marina, great job. I actually had a different answer than you. I'd say find somebody that's a good mentor. Find somebody that knows what they're doing.
Yes, that too.
We learn better as a group,
Absolutely.
right? Yeah. Great job, Marina. I appreciate you being in here today.
Thank you so much. It's always a pleasure.
All right, and thanks for the vibes, or the compliment on our vibes, I guess.
Yeah.
All right, very cool.
Well, I look forward to seeing you guys again. Have a great rest of the day.
Click on the link, get the resources, all that kind of stuff. Let me go ahead and share my screen again.
Thank you. Bye, Greg. Bye, Jeff.
Bye-bye. Okay. That's just the spider. Let me do this. We have a really good speaker coming right up. And I'm going to, but before we do that, I'm going to kind of talk a little bit about the community. I would encourage you to join our community. There you can live market chat with other traders. You can learn about the markets, community of traders helping traders. If you join today, you can jump in the chat room and wish Bill a happy birthday because I just found out it was his birthday today. So www.thetradersforum.com. Come and join us. It won't cost you a thing. You can learn a lot. We'll do lessons on indicators every week. We'll have great guests like Marina come in and we'll just talk about markets. It's all free. Thetradersforum.com. Want to see you there. So we are, of course, Metastock. Metastock is the highest rated software. It's been rated the highest, the best software in its price category for only 32 years in a row. And I want it to be rated for another 32 years as the best software in its price category. But I love Metastock. I love the ability to go in and scan, focus on the stocks that matter, the opportunities that exist in the market. I'm 100% biased, but I think we have one of the best scanners that exists out there. You can scan any market on earth using the data that we get through LSEG. You can test trading ideas. You can do system testing. You can do forecasting. There's a reason that it's been rated so highly for so many years. And there's a reason that so many of our customers have been with us for decades. And I believe that reason is that it's helpful. What we're doing today is if you pay for a month, we're going to give you the second and the third month for free. Pricing for Metastock DC, the delayed version of Metastock, starts at $75 a month. If you sign up today, yes, I did look at the clock, or I did look at the date. If you sign up today, you'll be running until May 19th for basically $75. If it's not helpful for you, you can terminate your subscription, and there's no requirement to keep it going. During that time, though, we'll sit down with you. We'll do the white glove treatment that Marina was talking about. We'll kind of walk you through the software. We'll give you access to all of our supported training materials. And in addition to that, we'll give you unlimited access to our support team. There is a reason it's been rated so highly. There's a reason I still use it every single day for 30 years. And now, going on 30 years. I'm almost 30 years here. Give it a go. Metastock.com/conf promo. Metastock.com/sales chat if you want to chat with us. You can also give us a call at 800-882-3040. Greg, it is prize time. Let's do a prize.
Oh, that's my favorite time.
Yes.
It's the best time.
Lunchtime is my favorite time, especially.
Well, okay, there's that. Okay. There's lunchtime and dinner time, then breakfast, then prize time.
All right.
Okay,
right?
And second lunch.
Yeah. I reserve second lunch for if I'm on a cruise. We are going to give away candlestick profits, and then you have second breakfast, third dinner, right? We're going to give away Candlestick Profits, Eliminating Emotions, a book by Steve Bigelow. Steve Bigelow was a good friend of Metastock. and a very, very good mentor when it comes to understanding the dynamics and the psychology of trading using candlesticks. So we're going to give away that book. Let me come to my list of potential winners. And well, before I do that, I just realized I haven't emailed the last winner, Jack, yet. Let me grab his email address real quick. And Greg, what I need from you is a number between 1 and 6,664. Make that 2 and 6,664.
I'm not sure that that distinction is really necessary unless I actually draw 1, which has not yet happened. But yeah, the number is 4,508, 4508.
That'll be interesting if we ever get the lowest number or the highest number.
Well, usually we're one of the first people register in testing, so I don't know if that would.
This is Jerome in the USA with the Yahoo address. Jerome, you just won this book. I will send you an email, and if you're live, let us know you won, because we love to see it when you're like, "Hey, I won!" We'll celebrate with you. But when you get an email from me in just a little bit that says, "Hey, you won a free book, send me your address," it's legitimate. Respond to it, and I'll send you a book next week. So, in any case, Greg, I appreciate the assist. Why don't you tell them real quick before you go? Tell everybody how they can make sure they're eligible to win prizes.
Oh, yeah, definitely. If you're on GoToWebinar, you're probably good. If you're watching on YouTube, go ahead and go to the link, which is on the top of the chat. Click on that. Just give a couple of bits of information. It takes a second. You only do it once. It doesn't require you doing it twice. That doesn't increase your chances of winning.
Thanks for the
That's all
help,
there is to it.
Greg. When I have you do stuff like that, I feel like I'm making you help me with my job.
Well, I mean, I'm marketing, your sales. We always go hand in hand.
Yeah. Oh, you promise? You promise?
Absolutely.
All right. Okay. Thank you very much, Greg. Our next guest today is John and Jack Kosar. John and Jack Kosar have been the victims of a number of trader talks that we do up on the Traders Forum. And the reason I bring them back on here is I really like kind of their approaches to the market. They run a company that's called the Asbury Research. They do a lot of, I'm going to let them talk about it. So I'm not going to put words about how they analyze the market, but they do a lot of broad market focused stuff to kind of determine what they should be doing. They've been doing Asbury Research for how long now, guys?
I launched Asbury in 2005, so this is
21 years.
Business. Yep.
Yeah. Let me go ahead and do this. I'm going to make you the presenters, and it should ask you to share your screen. I'm also going to put you as an organizer so you can see all the questions and comments from people as well. But if you don't know where to find them, don't worry about them. I will send them. We can do that at the end as well. All right, guys, I can see your screen.
Okay.
I can see both of you right now. I'm going to get out of the way. It's your turn. Go already.
Right. Away we go. Okay. First of all, thanks for having us back. I've been a user of Metastock. I think that's the first software that I ever purchased when I was still working on the floor of the Chicago Mercantile Exchange, probably back in the 90s. So I want to say late 80s, early 90s. So we're big fans. We use it every day. And I like presenting for a company that I actually use their service and I like it. So just a little bit about us. As I said, I started my career on the floor of the Chicago Mercantile Exchange in 1980, September of 1980 to be exact, when gold was at its all-time high of $800 an ounce, and the prime rate was 21%. It was a crazy time to start. I spent 17 years down there and became interested in looking at charts and technical analysis, simply because after looking around the trading floor, the guys that seemed to be making all the money were the guys that were walking around with the the chart paper and a bunch of pencils in their pocket, and they were doing point and figure charting right off the boards at the CME. They seemed like the guys that were talking the least but making the most money, So, I went to work trying to learn as much as I could about technical analysis. I got my CMT designation. I'm looking at it on the wall in 1999. I'm number 266. There's over 2,000 charter holders now. So that whole thing has really grown from us being looked at as witch doctors to being, I don't think you can turn on CNBC for more than 5 minutes and have somebody not talk about a 200-day moving average or something that has to do with technical analysis. When I got off the floor, my son Jack was starting to get interested in what I was doing, and he went to college. He got his master's in finance over at Illinois Tech on the south side of Chicago, and that's when I started to change how I was looking at markets. I started out looking at flags and pennants and head and shoulders, and as I got off the floor, Jack went to school. He got a formal education in finance, and the markets evolved. The markets became a lot different than they were when I first came on the floor of the trading floor. The tools got better. The trades got faster. We started evolving into a more quantitative approach. I still look at charts every day, probably every minute of every day that the market's opened. I still look at these patterns, but these patterns have become confirming to me, or secondary, and in some cases maybe even tertiary, as we've relied a lot more on mathematically based generation of signals that are strictly based on data. And that's kind of how we've evolved. So hopefully what I'd like to do today is to show you kind of how we started. I think everybody I've ever known in this business, you start somewhere and then you evolve, you get better. You either get better at this or you go find something else to do with the rest of your life. And so this is kind of where my career has taken me. And I hope that as well as educating you on what we do, maybe give you some ideas as you continue your trading career, if you have a career doing that, or your love of trading. And hopefully this gives you some good ideas on maybe how you can grow, and become more knowledgeable and change with the markets. So what we basically do here is we have if you've ever seen the movie Moneyball, it's, Jack and my younger son, Brett, both college baseball players, baseball family. And Moneyball was, what's his name, Michael Lewis, very famous author. Michael Lewis wrote this book called Moneyball, and it became a movie in 2011. You've probably seen it. It's starring Brad Pitt. Jonah Hill was this. So basically, he was Billy Beane, who was he was the GM of the Athletics, the Oakland A's. They had the least amount of money in the league, and they were getting beat up by the Yankees and all the other big market teams that had tons of money to spend. So this chubby little guy, he hires this chubby little guy that came from Yale, and he was an econ guy. And what he started doing was looking at statistics and finding players that would get on base all the time. Some of these guys were has-beens. They were broken players that used to be good, or they were players that were so far off the radar that no one else even knew that they existed because they didn't look like the muscular guy with long legs. They didn't fit all of the standards of all of I call them scratch and spit, the baseball scouts. And he started looking at data and building these lineups of obscure, cheap players nobody ever heard of. And he ended up building a very winning baseball team and changed baseball forever. So what we've done is I've looked at a lot of indicators over my career. I've used a lot of them in the pit, and we have a list of them, almost like a roster that you might see of baseball players. And these indicators individually are stuff that you can get right off of Metastock, the MACDs, and the rate of change and things of that nature. And we've added in some of our own indicators that are a little bit more data driven, a little bit more sophisticated. But what we've done is we've built these lineups of taking this indicator, and this indicator, which individually are not very spectacular. You're not going to get rich by trading the stochastic every day. But if you put these into a lineup where the players, so to speak, complement each other, it's allowed us to create some really great models and model portfolios. So that's kind of our approach. We have a bunch of different models. The ones that we're going to look at today are Asbury 6. This should inspire you to build your own Asbury 6, frankly. You've got a wealth of indicators. I don't know how many indicators Jeff could tell you, but there's got to be 100 or more indicators that you can pull right off of Metastock. So our Asbury 6 is what we're going to look at. It tells us what the daily internal health of the market is. The CEF model is our sector. It's our sector rotation model. In 8 years, it's never had a losing year. And on average, over the past 8 years, it's outperformed the S&P by about 8% a year annualized, with lower drawdown, lower standard deviation, and lower beta, and a way better Sharpe ratio. I don't know if anybody out there follows Sharpe ratios. We do. It's a way to mathematically determine risk-adjusted returns. And our Sharpe ratios have been over 1 in CEF going all the way back. We'll show you a little bit more of that. Our US versus the world is our global relative performance model. Everybody's been talking about relative performance, how the rest of the world is beating us. That really started in August of last year. We have a model for that. ETF trade ideas, shorter term trade ideas rather than longer term quarterly investments. But we'll take a look at that and we'll show you how we built the model for that. And then 4 model portfolios that we have actually created using the Moneyball theme of taking all these various models and indicators, assembling them into a lineup, like a baseball lineup. But this is a lineup, for making money in the markets. So here's how to find us. And by the way, if you want a copy of the PDF, contact us. Go to asburyresearch.com and you can contact us there and just ask for a PDF and we'll be happy to send that to you. I'm going to turn the glossary of terms over to Jack because these are a lot of the more quantitative inputs that he brought to Asbury Research over the past 10 years.
Yeah, so just, we kind of throw these terms around like Skittles. So we want to make sure that everybody's on the same page. Max drawdown, that's just kind of your peak to trough. So understanding from where the top of the move is to the bottom of the move. We use that as a big indicator of risk because at the end of the day, your max drawdown for a model or a trade is really kind of what you're exposing for loss, right? So we want to know how our models or how our trading is doing at a term of historically, what is our max amount that we've lost. Standard deviation, really all that is just kind of the wiggle of your returns. So, more jagged standard deviation is going to say returns are a little bit all over the place, whereas a more consistent or a lower standard deviation is going to be a lot more smooth. So think of walking up a hill or taking a roller coaster. A roller coaster is going to be kind of extreme in standard deviation, and walking up or sliding down a hill is going to be a little bit more of a less one. Beta, it's really just measuring the volatility of a stock or an ETF versus the market, which would be the S&P 500. So a beta that's higher than 1 is going to make the moves are going to be a little bit more aggressive, or up or down based on what the overall market does. Risk-adjusted returns, that's the most important thing for us. A lot of times you'll see these advertisements for these giant returns, 1,000% returns, 100% returns. But what they really don't indicate is how much risk that they're taking to get there. So we want to know for our traders and our investors, what is your return going to be as a proponent of risk? And that's why it kind of moves us into Sharpe ratio. So our Sharpe ratio is just another way of saying what type of risk that we're taking. Really, it's saying what return you have versus what a T-bill would be over how much standard deviation you're taking. A similar one to that would be like a Sortino, which only indicates, I think it's downside volatility. And then total annualized return, just how much you're making, the average yearly growth of an investment over a specific period of time.
Considering the effects of compounding
Yes.
for annualized total return. All right. We talked about the Asbury 6. I built the Asbury 6 as an internal tool. The first version of this had to be at least 10 years ago, because the S&P 500 was trading a lot differently than it was when there was open outcry and I was on the trading floor. Had a lot more crazy days where you're up 100 in the morning and you're down 50 in the afternoon. And just watching the S&P 500 and volume, or the S&P 500 and a MACD or something, it just didn't cut it anymore. It was like I was chasing the tail of a dog. I mean, it was for someone that was doing this for 25 years, I was embarrassed that the market would scare me out of a really good idea, because we had a couple of days where it was down 50 one day, down 70 the next, it being the S&P 500. So I get out trying to protect my clients on the downside. 3 days later, we're making fresh highs. And I've got to kind of, with my tail between my legs, I have to rebuy. You sheepishly have to rebuy. So I needed something that was going to keep my eye off the noise, which the S&P, even though we get paid by the S&P, oftentimes it is now the noise. So Jack and I started back testing all of these different indicators that I've had success with. They're all tactical stuff that I've had success with when I was on the floor, or when I was working for a couple of firms when I got off the floor. And we started to put them together in sets of 4, sets of 5, sets of 6, trying to get a diverse group, a small diverse group of indicators that would tell me what the condition of the market was, and not just putting the putting the cone on my head and looking at the S&P 500 bouncing all over the place. So we ended up with the rate of change in the S&P 500, the relative performance of stocks versus high yield bonds, investor asset flows, which if you're a futures trader, that would be the equivalent to open interest. Volatility we talked about. People use the VIX for that. Excuse me. Trading volume and market breadth. We built this model. And what the model has done over the past 8 years, this is a look back going back to the end of 2017. Most of the time, if you look at the actual lines, how the performance lines, you're going back to Q4 of 2017 through the present, it's pretty much either stayed right with the S&P 500, or it actually outperforms it for extended lengths of time, several months or more. But it's basically been a relative performer versus the S&P 500, but with a 60% smaller max drawdown. The maximum drawdown, that's one of those words from the glossary, 34% in the S&P 500. That was during COVID. That was between February and April of 2020. Maximum drawdown in the A6 is 13.6%. So 2/3 less. It's a big difference. So we update this at the end of the day. Every day, this is updated, and we have some parameters that we throw over these indicators to determine when the signals are, when it's green or positive, or when it's red, or when it's negative. So right now we are 4 negative and 2 positive. These numbers in here are the dates that these actual 6 constituents either turned to positive or negative. It's been negative since February the 12th. What does that mean? It means that right now, even though the market has been relatively firm, internally it's weak. If all 6 of these were red, it would mean the market is a lot weaker, and I'd pay a lot of attention. But this helps us again from, the S&P was up 60, it must be good today. And then tomorrow comes, the S&P's down 70, it must be. You tie yourself into knots and you lose a lot of money. This keeps us focused on the signal, which are all these different indicators and what they indicate about the health of the market, rather than the noise, which oftentimes the noise is the gyrations of the S&P 500. You can see within this tight little band the S&P 500 has been in, which we're going to look at in just a minute. It's been like Pong. I don't know, I'm pretty old. So there was a video game that was called Pong, and there was like a little electronic ball that would bounce back and forth. Well, that's what the market's been for 4 months. It's been Pong. Let's look at some of these metrics and how we use them. This is something that you can do. Start out with 6, 7, 8 indicators that you like. Take them right off of Metastock. Start looking at them as a team and not just one indicator versus another indicator. Start to put these together as a team, because no one indicator works all the time. So you need more than one, and you need an understanding, and you need of how these indicators work, how they're different, and how one can offset a second indicator that might be having a period where it's just not working. As the markets change, these indicators fall in and out of favor as to how well they work. Before we do that, I talked about drawdown. So I wanted to get this slide in here. I'm obviously an older investor. Jack's a younger investor. I'm in my 60s. Jack's in his 30s. For older investors, drawdowns matter. Think of drawdowns think of Jack as being in the first half of his investment career. If you're using kind of a football analogy, I'm in the fourth quarter. So Jack's got plenty of time where he can throw the ball downfield, can afford to get picked off a couple times, make some mistakes, because he's got the whole game in front of him. I'm in the fourth quarter and I've got a lead. By having a lead, I'm investing money. So that means I have money. I've done well enough to be able to continue investing. I'm still in the game after 23 years doing this. So now it's a fourth quarter. I need to make sure that I don't throw the ball up in the air and get picked off and blow 3 quarters of blood, sweat, and tears in the last quarter. So this is just how drawdowns work. Think of COVID. The S&P drew down 34% in about 2 months, 2 to 3 months. So let's look at this. If the S&P 500 was to draw down 30%, you got to make 43% on the way back just to get to where you were at the top. So that's why managing drawdowns really matters. And much of our work is in being able to participate in the markets with significantly less risk. Most older investors tell me, John, if I could be in the S&P 500, but only have half the drawdown or 40% of the drawdown, I could sleep at night and I would be much more. That's what our models do. That's what our goal is here, to play the game with less risk. Here's 3 of those metrics. So this is the assets under management in the S&P 500 is effectively what this is. When it's above its 21-day moving average, meaning you've got monthly expansion, the S&P 500 hasn't set the world on fire here. It's effectively been flat since the end of October right here. But look at all these bottoms: D17, D31, Jan 20, Feb 5, and it's testing that now again. If this rolls over and these assets start contracting on a 21-day basis like they did here, we're going to get a drawdown in the S&P 500. And we don't know if this drawdown is going to be for a week, a month, or a quarter, or if it's going to go down by 2% or 20%. We don't know that. But what we do know is that this metric indicates the conviction, the day-to-day conviction of guys with real money in the game. How much conviction do they have? Here's another one. This is volatility. This is VIX. Really simple. When the VIX is above 21-day moving average for us, that indicates on a tactical basis the market's getting a little spooky. It's been above there since January the 13th. It hasn't been enough to drive the S&P 500 down, but it's been enough to keep the S&P 500 from making new highs and holding them. So that is currently negative. This is volume. We use CVI is cumulative volume. It's kind of a cousin of on-balance volume. You're actually using the volume from the day before to come up with a cumulative series. You could see on Nov 25th, volume got back up above its 21-day moving average, gave us all of this. But look what's been happening since second week of January. It's flat. Sometimes it's underneath the line, sometimes it's above the 21-day moving average. That's giving us this. If this rolls over, we're going to get a move down. So these are 3 of the Asbury 6. But again, the message to you here is, rather than saying, oh, my favorite indicator is X, and it's been really good to me, one day X is going to get you to lose a lot of money. Get a basket of indicators that can offset each other if 1 or 2 of those are not working in whatever particular environment that the market might be in.
All right, so the next thing we'll be talking about is our SEAF model, which is our sector ETF asset flow model. What we're trying to capture here is the velocity of money as it's flowing through the 11 sector spiders. We kind of, treat it as a whole pie, as the 11 sector spiders make up the S&P 500. And the theory of the case here is that many investors have to be invested in the markets at all times. They can't, they don't have the opportunity to go to cash due to their their investment workflow. So what we do is we track that money flows through those 3 time periods. We do it on a strategic quarterly basis, tactical for a month, and then trading for a week, and have found that when we track those scores for each 3 time periods to give us this total ranking score, we tend to be able to find which sectors are going to outperform the S&P 500. We're in strict belief that if something is, we really only want to be invested in stuff that's outperforming the S&P 500, because otherwise we could just be in the market itself. Right now, the model is highlighting energy, industrials, and consumer staples, showing strength much through all 3 time periods. This score over here is kind of like golf. So the lower the score, the better the ranking. Traded as a model, we always take the top 3, but I know we have a lot of traders here. We have traders for our clients as well. They use this model for, either trading the ETFs themselves or individual stock trading. So they might go in and say, they might have their favorite energy stocks or their favorite consumer staple stocks, and go in and know that they have asset flows at their back to kind of dive into some of those trades. And on the reverse end, technology very much all of 2025 through the AI trade was really kind of driving a lot of the returns in the S&P 500. You might have some stocks that are still have some leads. Assets are flowing largely out of technology. It might be time to either pare those back or bring the cash register and take those profits. So this table can be used in a couple of different ways. Just depending on how your investment goes. Someone that's a little bit slower might just want to trade into the ETFs. Take the ones that are favored, avoid the ones that are avoided, and keep an eye on the ones that are in neutral, or trade with stocks knowing that you have asset flows at your back. These are our rainbow charts. So this is kind of a way for us to highlight not only how the model's doing, but also what it's doing on a relative performance basis. So up top here we have our SEAF signals, our SEAF scores, daily SEAF scores for a particular sector. So in this case, this is energy. The SEAF model favored energy on January 13th, and since then we've had a almost 25% relative outperformance. Down here at the bottom is a relative performance versus SPY chart. So we really very much like to see, again, how our ideas are doing, not only outright on a price chart, but more importantly how they're doing relative to the S&P 500. The SEAF model itself has identified the top relative performing sector in the every year of the last 8 years that we've been tracking this version of the model. So again, energy is cyclical, and again, trying to mention before, if A6 or our CPM model is risk off, we get a lot of questions on whether or not you want to trade these SEAF signals during down markets, or when we're in a risk off environment. And energy has always been a good case of when we're risk off. Right now the A6 is currently showing negative. So you'd say, oh, well, maybe I should stay out of the market. Well, you would have missed a lot of this relative outperformance that you were seeing in energy. Highlighting real estate. Real estate has been largely neutral here, going back the last couple of months. We entered back into neutral on January 27th, but on either side of that, and we can kind of see here, what is that relative performance been doing? It's been more or less flat. It's been a kind of a market performer over that period of time. So This is what I was talking about earlier about how we kind of can use this model as a trading strategy, understanding that, hey, you know, you're not getting beat up by real estate and you're really not making a ton of money on real estate either. We do see these transitions as we go from avoid to neutral or neutral to favored as corresponding moves in the relative outperformance. You know, that's really all that is the assets expanding and contracting. So, you know, that's kind of what we're seeing here. And here's consumer discretionary. So consumer discretionary went negative on January 5th or 15th.
Went to avoid.
Went to avoid, sorry, on January 15th. And we've seen an underperformance of 5%. So again, this thing, this model works both on the top and the bottom end. You know, you can know when to start to get out. Hey, we need to avoid. And as we can see here, we've seen that sustained avoid has correlated with underperformance on the market. And again, that might be time, you know, if you're looking at this, you know, one of our research subscribers and you're looking at this, hey, I need to pare back some of my consumer discretionary stocks. This is probably one of my favorite charts of the year so far. As you can see, this goes back a year. So we saw a nice run up in technology going really from that April lows up through August of last year, and even, you know, moved up higher. We had a brief interlude as we went sideways, but from April 24th through that's roughly early August, you know, outperformed the market, which was straight up from there by 9%. So if you were in technology stocks during the time, really riding that AI trade, you could outperform by being in those technology stocks by 9%. As we crashed through on January 2nd, you know, there's been some speculation that, you know, AI is not going to produce the returns necessary to justify the CapEx spending, you know, and some worry there. We've been in a void and, you know, down, underperformed the market by 5%. And, you know, as a reminder, this is a market that really has gone nowhere since April. So not only has, you know, you not made any money in technology, you've lost money.
So the way you look at this too is you look at them both together, right? So we went into energy pretty early on. Everyone's talking about energy now, right after it's outperformed S&P by 20% over the past 6 or 7 weeks. But we were getting out of technology when people were still beating the drum about, you know, the Mag 7 stocks. So we were getting out of technology and getting into energy 2 months ago. So, you know, it's all over TV right now and everyone's coming up with this new idea to buy energy. This got us in faster than the crowd because we were measuring those asset flows across multiple time periods every day.
Just a little bit how we've done since inception. This is not a funky number. You know, we're not trying to play with the dates. We actually, what was it? XLC and XLRE were new entrants to the 11 sector spiders, and we basically gave you the data as soon as those numbers became normalized. But since then, roughly 8% of outperformance average on year. Again, these are hypothetically back-tested models, and previous performance isn't indicative of future performance, but we just want to show what we've done and what the signals have shown. This year, taking a little bit of a victory lap here, outperforming the market by roughly 9% when the market's been sideways. And again, that's been us moving into sectors like industrials that we've been roughly in, I think, since December, and energy that we've been in since January. These asset flows really are good indicators of how and when and what markets to get into.
They talk about dispersion now. That's you know, that seems to be the word of the week. Everyone's talking about dispersion, and that's, you know, basically what's happening is the market's going sideways, and you're getting these disparate sectors that are taking off. CEF has allowed us to get into those sectors early on because we're not waiting for a breakout, or we're not waiting for the relative performance to show up on the chart. We're watching the money move, and the money is what makes the chart evolve into that condition 2 weeks later where you say, hey, it looks like it's breaking out. So it allows us to get on these ideas very early.
Yeah, last thing, kind of going back into our Sharp, with that outperformance that we get with the CEF model, we're doing so, risk adjusted less than the S&P 500. The Sharp ratio of 1, through my research, a good Sharp ratio tends to be over 1. We've been sustaining that now for, the last 8 years. These are gaudy numbers here because it's early in the year in February, and statistics can play tricks on you. But the important thing is throughout the years, we're pretty consistently over 1 with the Sharp. Standard deviation is that of the market, and max drawdown, a little bit less, about 3 or 4% less than the S&P 500. So we're giving you excise returns with this particular model with market risk. Which is kind of a white whale to my understanding. And again, just by following the money and being in the right sectors at the right time. Speaking of dispersion, we also have a sort report model. This comes through our Substack offering, and what this really highlights is we kind of have a three-legged stool approach to investing, especially with our trades. This is a top-down approach by understanding where not only is money flowing, what's outperforming the S&P 500, and what's trending in the right direction. So we look at these three different things. And again, similar, going back to our Moneyball, we don't like to hang our hat on one indicator or one particular metric. We try to group these things together. They all have different abilities to do things with the market. So we want to group them together, and that's kind of when we know we have good ideas. Again, what I was saying, dispersion, last year this chart looked like we had 2 green up at the top, GBTC and QQQ. We were very much concentrated in big tech and crypto. It was this risk on, hairs on fire, we want returns, and that's where we were getting them. Really have shifted away from that. We're going more into hard assets and going into markets outside the United States, highlighted here by emerging markets and SPDW, which is the kind of the global US or the global markets without the US market. Hard assets like oil, commodities recently flipped. We had all green in commodities just last week. It's taken a little bit of dip relative performance wise versus the market. But overall, again, we use this is for our traders. There's so much data out there. There's so much information out there. There's so many investment vehicles out there. And this allows us to kind of concentrate our focus to certain areas so that, our investors, our traders can find those opportunities that they're looking for.
So now we're going to go to some more traditional technical analysis. Again, we're using the Metastock product here, and kind of the foundation of foundation's the wrong word. This is kind of like the basic. This is what we look at every day to try to determine just simple blocking and tackling. S&P 500 on the left, daily since July. October 29th was the peak. Even though we've exceeded it, to me, this is the anchor of all this sideways motion that we've had here for the past 3.5 months. You can see every time we try to get above that October 29th date, it fails. So 70 or 7,000 rather, big fat number, right? When the market's making new all-time highs and doesn't know what to do, people hang their hat on that as kind of a resistance level. That's what we see here. And Jan 20, we made an important low. We came down on February 5th and tested it again, and the market ripped your face off going back up. And then we just had that again 2 days ago. So I don't know, somebody out there, conspiracy theories aside, is really trying to protect the 67.89 level. If that gets broken, I think we get to 67.20 like that. And then we've got bigger support down here around 6,500. But this is basically flat as a pancake. If you were buying and hold S&P 500 since October the 29th, you haven't made a penny in the last 3.5 months. This is why we look to sectors to try. If the broad market isn't giving us the return that we need, we've got to be flexible and look inside of that to see if there's certain parts of the market that are going to pay us better. This is weekly. Really interesting how this stuff works. We made a peak here in February of 2020, and then we had the COVID crash. Came up, made a new high on January 22nd, came right down to retest that February 2020 high. This is going to end up in a textbook for technical analysis one day, but this was October 22nd, held. We broke the 52-week moving average or annual moving average 6 months or so after that, came back and retested it here, off to the races. We made a high of February 19th last year. Came right back down to this January 22nd high, ring the bell, buy the S&P, and up we went again. I had a target of 69.50 based on the move down from February 9th to April 7th. This is really simple technical analysis 101 that you can get in the CMT program or by doing a lot of reading. But this gave me 69.50. We got to 69.20. right here, and we've been drifting sideways. So this looks like it's a distribution phase. You have accumulation on the bottom. You have distribution up on top, where the bigger firms are slowly selling their holdings, slowly and not pounding it, but they're selling a little bit at a time. I saw this in the pit for a lot of years, where the guys that were the big traders, they would slowly sell off their longs. It may take them a couple of days. I think that might be what's going on here. We'll see. What I have learned over 43 years is I can't forecast the market, and really nobody else that I've ever met can either. So we read the data, but we still like to look at these charts to get a sense of what might be going on. Here's what else is happening. The Mag 7 stopped outperforming at the end of last year. On DEES 30, it started underperforming. MAGS is the ETF that tracks the Mag 7, started underperforming on December 30th. That's typically, the Mag 7 had largely been responsible for the broad market strength that we had in 2025. We lost that. So now I was looking around and saying, okay, what's going to carry the baton? What's going to take over the leadership? And really what it was is the SOX. The SOX actually broke out of months of sideways SOX of semiconductors. It broke out on January the 5th, targets another 5% rise to 8,600. And look at this nice relative outperformance that we've had through that period. MAGS lost the leadership, semis picked it up. So now I'm really looking at, and of course it's had help from energy. It's had help from industrials, which we were able to catch on the CEF model, but that's kind of where we are. But bigger picture, typically in a sustainable bull market, you get leadership by tech, one or more of the NASDAQs. This is the NASDAQ 100, which is very similar to the Mag 7. It's been underperforming on a quarterly basis, underperforming the S&P since November the 20th. And it's been outperforming now on an annual basis, a 252-day, which is a business year, since February the 5th. So we're not getting any performance out of there. Where the outperformance is coming from is the Dow. The Dow started outperforming on December the 10th, came back and retested that trend at the end of January, and we're making fresh relative outperformance highs. If you showed me these two charts and nothing else, I would tell you that we're either in a sideways market and we're getting ready to roll over, or we're in a downtrend. That's how this is setting up right now. We don't trade this. We use the Asbury 6 to trade to tell us when it's risk off, but this is telling us that internally the market is starting to weaken. You can see it again here. This is OEX. This is the S&P 100. Started underperforming the 500 on DEES 11. And it's underperforming pretty aggressively. In a strong bull market, the 100, S&P 100 outperforms, as you can see that it did here from May 13th of last year up until this December area here, around mid-December. Meanwhile, dividend stocks, this is the Schwab US Dividend Equity ETF, started outperforming as of December the 11th, same date. And is aggressively outperforming. Again, you show me these two charts, you say, okay, here's two charts, relative performance charts. Now you tell me what condition the market is. I'd say the market is defensive. It's moving out of those that typically outperform during a bull market, and it's moving into the places that you usually go when the market is weak. It's moving lower. So the big market, we don't get paid on this. We get paid on the S&P. So we need that Asbury 6, or we have another indicator called the correction protection model that we would use to tell us to move out of the market. But the condition of the market right now is one that you would expect to see in a weakening or downtrending market. ETF trade ideas, we'll turn that one over to Jack.
Yeah, so what we do, and Jeff was talking about it earlier, and we're big proponents of scans. So every morning, brew a cup of coffee, and I scan about 6,600 ETFs for ideas. Again, we're using multiple different indicators on those ETFs to try. We're doing relative performance, price trend, asset flows. Want to making sure that we are getting multiple confirmations that we have some good ideas. Those scans come in, and I get them off to my dad. And what happens is we do a little bit of an overview, making sure, going to the charts, looking for resistance, looking for support, and really calculating risk reward. Right now, again, kind of having that flight to flight out of the United States and a flight into more hard assets. So you can see here.
Finish. I was just going to point something out before we go to the next
As you can see here, we're in oil, timber, emerging markets, and then another oil and gas fund. Right now doing some pretty good things on relative outperformance versus SPY, and outright performance in 3 of our 4 ideas.
What I was going to point out is everyone's talking about the commodity space now, but these are the previous trades here. Back in September of last year, we bought copper miners. We made 13%. We outperformed by 14. Why? Because we were looking at the scan that Jack created to take 6,600 ETFs and show us that 10 or 15 or 20 that are clicking on trend, relative performance, asset flows, and risk reward according to our own parameters. Gold miners. We were in and out of. Here's gold miners ring on August the 6th. We initially bought, we made 31%. We beat the S&P by 31% on a relative basis. We got out in October. We got back into ring. Where are we? Help me out, Jack. There's another ring entry here. There we go. So there's another ring right here. So we bought it again on November the 26th, and we sold it out on January the 30th. We made another 21%. Outperformed by 25%. So my point here was not so much like how smart we are, but rather we were on these metals and mining trades 6 months ago when a lot of people weren't really talking about them. We were on them very early on. Why? It's not because we have a crystal ball or I've been doing this for 40 years. It's because we're looking at the right stuff and we're quantitatively scanning a bajillion different ETFs so we could see these new opportunities as they evolve, and not after 6 months from that, 6 months later when the guy on CNBC comes out and tells you should be buying gold.
Yeah, so a couple of ideas. Here's XES, S&P Spider, Oil and Gas Equipment Services. And again, using our lovely Metastock chart, being able to see that we are, we have a nice positive uptrend in our price, starting to seeing those assets expand in that particular ETF, and then continued relative outperformance. So what that's done is risen by 20% while outperforming SPY by 21%. Again, this is just using our scans, using multiple indicators to try to identify where opportunity exists so then we can pick out risk reward that makes sense for our trades. Now, the other thing is why we use ETFs over stocks. Our clients tend to skew a little bit older, so we try to avoid some of that event risk, in order, and I'll show you our statistics for these trades in a minute, but to avoid those massive drawdowns that you can get from, from the news or a tweet or something of that nature that can really affect one company, but has a little bit less of effect on entire ETFs or entire markets. Here's another one of our ideas into kind of hard assets. This is cut, and again, broke a big, this is the 200-day moving average for price, and broke a big moving average here. We have our assets starting to expand in this particular idea, as well as some outperformance. So again, these are similar setups that we see for both XES and for cut, just trying to recreate that wheel, be systematic. Again, same scans every morning with the same indicators, looking for risk reward with ideas that are doing the same things. A lot of our charts, a lot of our trade ideas tend to look like this. How we do, we're winning, was it 54% of the time, average profit per trade, 1.8%. Again, we're not necessarily trying to look for hitting these giant home runs. Now we do, Ring was a big home run for us, but just consistently winning, consistently making money. Our average winning trade is 2.3 times larger than our losing trades. And, these are shorter in terms of trade length. We're only in some of these trades for about 20 days. And then anything that's not working, we're out right away. The cool thing about running these statistics, it's a little bit, on here, is you learn a little bit about yourself and a little bit about your ideas. We keep our drawdowns here ridiculously low. So what we're going to try to do in the coming future is maybe allowing some of our trades to run a little bit, instead of biting on a down day or two. But we can read that by reading our statistics and understanding our biases to affect our trading going forward.
And this is 3-year look back of in one more month, as of March the 16th. This will encompass 3 years and 120 trades. So there's a lot of data here. It's a good solid data set. There's enough data there to be meaningful.
And you can get, our clients have access to this through our premium research. They have, access to our ETF trade ideas through our premium research.
So this is US versus the world. The reason we talked about this, I usually don't talk about this model, but now, Jack and I listen to Bloomberg all day long just because it substitutes the noise on the trading floor for me that I heard for 17 years. And I want to know what people are talking about. I want to know what the buzz is. Everybody's talking about, well, you really should have a little bit of international equity. Thank you, Jack. International equities in your portfolio. And that's been the case. That's what this does. So this looks at 25 different global equity markets versus SPY, versus the S&P 500 ETF. So it's interesting how this transpired. In August, the first one to start outperforming was Peru. It started in South America. It went from Peru to Brazil to Chile, and then it went into the North American countries that aren't the US. It went into Canada and Mexico. You could see here early part of November, and then it kind of evolved. It went into Western Europe. That's all of these here. And then it went into Asia Pacific. Eventually, most recently, it went into the Middle East and Oceania, which is New Zealand, Australia, and some other islands that make up that region. But the point is, first let's do this. So here's Mexico. So we went into Mexico on November the 5th. And since then, it's made a new all-time high at the end of January. It's outperformed the S&P by 18% since November the 5th. How do we know that? Well, because we track this stuff every day and we look at all of these things. Now, here's the chart that Jack and I wanted to put in, but we didn't, because as you can see, we're running out of time. But if you look, SPDW is the index that we use. It's global stock indices ex-US. So from July of 2008 through December of last year, that index underperformed the S&P by 75%. 75%. So all these people scolding you, you should always have a little international in your portfolio. We don't believe that. We think you let the market tell you when you should be overweight, right? So we're since January now of this year, SPDW, which is all the other developed markets except for the U.S. Now that's outperforming SPY by 10. So it's really easy to come out, with a suit on February 2nd and kind of wag your finger and say, well, you really need to have some international. No, you don't. You need to have international when it's outperforming. And we were able to track it from South America back in August all the way to now, where I think 21 or 22 of those 25 are outperforming the S&P in 2 of 3 different time periods that we look at: weekly, monthly, quarterly. So that was kind of the point that I wanted to make there, is we're not big fans of the static set it and forget it way of investing. You let the market tell you what's in favor and what's not. You don't have to know why. You just have to know that it's happening, and you have to use the right tools so you can be on those trades early and not after some guy in a suit on CNBC is telling you about it 3 months later.
Yeah. So, in the area of time, again, you guys can contact us if you want this slide deck, but we built some model portfolios based on our models and based on our trading strategies. We have 4 of them. They do different things. Our Asbury aggressive model takes advantage of a little bit of a leverage because of our drawdowns. We aim to keep our drawdowns low. We take on a little bit of leveraged ETFs to try to outperform the market, which we have, I believe, by 6 or 7%. Again, historically back tested, looking back, annualized. And then on the other spectrum of things, we have our ultra conservative. This is for more of our clients that are trying to protect some of their money. We really believe in bucketing your money into different profiles. So having some money in an aggressive, having some money trading maybe some individual ETFs, and then having some of the money that you're really trying to take care of. Our ultra conservative back tested has never had a drawdown greater than 10%, and that's through COVID and Liberation Day, when you were liberated from your money. So those are our four portfolios that we have, that we manage at Schwab, and we also do some management for some institutional investors. Just kind of how we did going back. So AOR is a 60-40, mirrors a 60-40 bond portfolio.
It's an ETF.
It's an ETF. SPX is for the S&P 500 for the market. And we have our balanced in blue, and green is balanced in green, and blue is our aggressive. Over time, these models do well compared to more traditional buy and hold investing.
And then finally, the sales pitch. We sell research and we manage money. On the research side, our premium product, which is what we launched the business on in 2005, 3 and 12-month online premium subscriptions, includes all of our models. It includes a 30-minute introductory Zoom with us. We'll teach you how to use the models within the context of what you're comfortable with in your investing. We have a monthly teach-in that we do once a month on Saturday mornings. We also record that. We also have Substack. We have a Substack. It's $25 a month. Now, our premium subscriptions are $500 for 3 months and $1,800 for 12. Our Substack is $25 a month. Doesn't include our models, but includes a kind of a curated, smaller group of ideas, charts that we do. And there's a free Substack. So if you go to asburyresearch.substack.com, if you like what we're doing, sign up for the free. Sign up for the free Substack. We also have a YouTube channel, tons of videos for free. And then our money management, like Jack mentioned, we manage money for individual investors and also for other money managers that give us some of their AUM to manage using our models and model portfolios. For an individual, 250K is the minimum investment. Management fee is 1% up to $1 million. Custodian is Charles Schwab. Here's the lawyer page. And this is how you contact us, whether it's for a copy of the PDF or to get more information about us. And I think we're like 1 minute early here, Jeff. So there we go.
Let's see. Let's make sure we got that information into the chat. We didn't. Let me go ahead and just type in the address here real quick. Reach out to these guys if you want to get in touch with them. What do you guys think is I asked this question earlier. what do you think is the most important thing you should do if you're brand new to trading?
Really good question. Don't get hung up on one idea. Don't get hung up on one metric. Don't be afraid to look at stuff that might be outside of the norm. You know, when I started, it was head and shoulders tops and double bottoms, and now I'm looking at obscure data that tells me where the money's going. I mean, after all, the money is what. There's interest rates, there's news, there's tweets, there's a million different things that push the market up and down. But at the end of the day, I think the biggest influence is money. How much money is chasing that asset, or how much money is leaving that asset like it's on fire? And those are the key drivers. So yeah, don't get pigeonholed into one particular style of trading. Keep a broad idea. Keep your mind open to new things. And as there's nothing like experience, the longer you do this, you start to create your own methodologies like Jack and I have over time and through time and error. But yeah, just keep an open mind and looking at obscure things that may seem like they're off the mainstream, because it may be something that works really good for you.
We did have a question too. Do you use that book or a resource you'd recommend to learn about sector rotation?
I'm sorry, what was the question?
Do you have any books that you would recommend about cycles and sectors?
We haven't written it yet, but we'll let you know.
Okay. Ooh, there's a teaser. Thank you very much, John, Jack. We've got the resources there in the thing. If you want to get in touch with them, you can give them a call, 888-960-0005. Thanks again, guys.
Thank you.
All right. See you later. Okay, let me go ahead and do this. And I'll share. Join in and meet with us. www.thetradersforum.com. All of these specials, all of the offers that we're talking about today, you can find at metastock.com/conf-promo. You can give us a call at 800-882-3040 or metastock.com/sales-chat. Welcome back, Neil. Welcome back, Iqbal. Welcome back, Patricia. Thanks for coming back. Yeah.
Just really quick to let you know, we've also reconnected just now to YouTube. So for the people on YouTube, we were disconnected for a moment, but we're back now. Thank you for your patience. Yeah. And I'll let you move forward.
A little bit of a technical issue. We'll call it that. In any case. Okay. Any of the offers that we have that we're talking about, including the extended trial where you buy a month and get the second and third month for free, you can get all of those at metastock.com/conf-promo. You can give us a call at metastock.com or 800-882-3040 or metastock.com/sales-chat. Dave, I appreciate you kind of joining back in with us so fast. It's good to see you. Dave's a big friend of Metastock. He has one of the smartest trend measurement tools that I've ever seen. I'm sure he's going to tell it to you now. It's actually part of his logo. You can kind of see it in his logo behind him.
I have it. I actually have it printed on my arm too. So if I didn't have a jacket on, I could show you. But just in case.
All right, let me go ahead. I'm going to come over here to the list of people. People are joining back in. Apologies for everybody that got booted inadvertently. Thanks for being back in here. We're almost back up to where we were. Dave, let me go ahead and make you the presenter, and we'll go ahead and get you started.
Okay.
Make presenter. Yes. Okay. It should ask you if you want to share your screen.
Okay. Let's see if we want to share the.
Welcome back, Scott. I can see your screen. Okay, I can see that.
Okay. Ready to go?
All right. I'll get out of the way. Go.
Okay. Obviously, thank you, Jeffrey, for having me back once again, and thanks to Metastock. I appreciate you guys having me present once again. Today, I want to talk about simple setups for trading success, and it's going to be very similar to the prior presentations I did. And when I look back at my biggest winning trades, they were all one little simple setup that I'm going to show you today. I'm going to focus on, and I want to show you a couple other things that are relative to the market. Now, if it were if I had plenty of time to present, I'd spend a lot of time on money management and even more time on trading psychology. But I know everybody's a bit of a setup junkie, so we'll focus on the setups today. But just realize there's a lot more to trading than just the setups. Anyway, thanks to everybody attending today. I appreciate you taking time out of your schedule. Hopefully, everybody was able to get back in. There's a disclaimer screen. As you lose money, as you know, you can lose money trading, or as I often sum it up, all predictions are about the future, and a lot of stuff can happen between now and then. That's Greg Morse. All right, there's a lot of stuff, but this is not a one and done. You can reach me at dave@davelandry.com. If you go to davelandry.com/slides, you can get the slides from this presentation and access to some mini courses and also my books. And there's tons of ways to reach me on social media. I do have a Substack, davelandry.com. I'm sorry, davelandry.substack.com. And there's the other information. My Twitter handle or X handle is tfollowingmoron, at tfollowingmoron. So a market can only exist in three states, okay? It's either going up, it's either going down, or it's either going sideways. And that's what Jeffrey was alluding to a minute ago, is the big blue arrows. And we're going to talk about those a lot in just 1 second. Now, one of the best ways, other than eyeballing a chart, which I'm a huge fan of, and looking at the net price change, but one of the best ways to determine trend is with Landry Light. Landry Light is simply, for upside Landry Light, the lows of the bar are greater than the moving average. Now, for downside Landry Light, the highs of the bar are less than the moving average. So there's a gap, so to speak, between the price and moving average. Now, if the price touches the moving average, then the count goes to 0. So we're counting the number of bars above or below the moving average. Okay, so if the low is greater than the moving average, then you add 1 to Landry Light. If the high is less than the moving average, then you subtract 1 from Landry Light. And again, when the price intersects the moving average, it resets to 0. And the Metastock code is right here. It's really, really simple. It's actually built into Metastock. And I had them use open source in case anybody wanted to go in and massage that a little bit. But it's a very simple formula. Now, the count, again, is just a number of bars above the moving average. And on the downside, it's the number of highs below the moving average. And then if the price intersects the moving average, it resets back to 0. There's no Landry Light. Landry Light actually came, Jeffrey mentioned earlier that this webinar is being sponsored by StockCharts.com. Landry Light actually came from an article I wrote in 95 or 96, I forget now. But it was involving a moving average system for trading of Japanese yen. And that's what a Landry Light, just a little background information on that. So this is something I've been using for a long time. Now, one thing that was cool when Metastock first programmed it is they used a histogram, which I thought was really cool. It really illustrates what's going on with the indicator. And speaking of illustrating, an indicator doesn't indicate anything. If you had an indicator that actually indicated something, you would own the world. But they can be useful. I like to call them illustrators because it helps to show you what's actually already in the chart. So, and if you're looking at the count, if it's going back and forth between green and red, you're in a choppy market. And Tarzan speak, that would be sideways or bad, okay? And then if the high is less than the moving average, Tarzan speak, that would be bad, okay? And then if the lows are greater than the moving average, that would be good. My wife says I speak like Tarzan when I go to a foreign country trying to butcher their language. I don't try to butcher it. I do a pretty good job of my own. Now, notice that we have a few little kisses of the moving average in here, and we're going to use that to our advantage with individual stocks. And you could actually use it with other markets too. And I'll flesh that out in just a second. Now, as Jeffrey alluded to, this is my famous trend indicator. I actually have it printed on my arm. It's the big blue arrow. And always look at the net price change. Is the price about the same or higher or lower than it was? And you can see going way back to December of 24, market was going really sideways. We had that pretty serious spill where the market headed lower. And then obviously there was a pretty good trend since. Now, in more recent times, we had a nice uptrend, right? And then what happened? The market got a little choppy. And if you just eyeball the chart, you can see the P's are around 690, okay, now. And then you go back in time, back to October, where were they? Around 690. So on a net price change, nothing's happened since October. And that's where you want to make sure, if you have some sort of indicator, whatever your favorite indicator is, but make sure you're also looking at the price chart and ask yourself, is it going up, down, or sideways? I was thinking about this morning. Linda Raschke once said, if you don't know which way a market is headed, ask a 6-year-old kid. And that makes a lot of sense. But anyway, if you take a look at Bitcoin or any other market you want to look at, but Bitcoin, for instance, it was in an uptrend. And then notice that even though the Landry light was increasing, because that's a count of the bars, notice that the momentum began to wane a little bit, and it came down to the moving average and actually went below. You can see a couple of bars below the moving average here. So again, always look at price, and then you begin flipping back and forth between red and green. And that was a really choppy and sideways period. And then notice the Landry light to the downside. We had a little choppy movement sideways in between, but nothing to get excited about. And then the market imploded from there. I think when Bitcoin was about 90K or so, or maybe 80K, I forget exactly when, I put out a tweet saying it's always darkest right before it gets more dark. Now, I want to show you bow ties just because the market is getting a little bit iffy. My biggest winning trend trades are with the Landry light pullbacks, and I'm going to show you a few of those in just 1 second. But I also want to show you the bow ties just in case we end up in a rollover situation. And the NASDAQ is already bow tied to the downside. But bow ties are simply just 3 moving averages, a 10 simple, a 20 exponential, and a 30 exponential. And when they come together quickly and spread out, especially after a major high, like an all-time high, like we had recently the NASDAQ, or a major low, let's say a 10-year low or something in something like an index or whatever, it could be quite significant. In other words, you don't want to just look for bow ties when the market is chopping back and forth. Anyway, I like the 10 because it's a little bit smoother in that it doesn't really chase price as much. And then I like the other moving averages to be exponential, so they'll catch up the price a little bit. And I just found by accident the relationship between these 3 moving averages can really help you out. So a downtrend, they come together and spread out. And downtrend proper order means the 10 is less than the 20, and the 20 is less than the 30. And in uptrend proper order would be just the opposite, 10 greater than 20 greater than 30. And then if there's no order, it means that the moving averages are kind of meandering back and forth with no particular order. And that's another metric that can help you to see trend, okay? So if you look back to the spiders, you can see you had downtrend proper order back in early 25. We flipped over to the upside. We had a really good run, and all of this was uptrend proper order. And again, this is built into Metastock, okay, as you can see. We had a sell signal here, okay, but it didn't trigger. The market went on to make new highs. And then even though we've had uptrend proper order in the more recent times, always again, look at the net price change. Where are we now and where were we? And once again, this market hasn't gone anywhere really since October. So that's not a trend following type of market. Now, if you take a look at the Qs, it's similar to the NASDAQ itself, but you can see that we had some sideways action. And then we actually had a bow tie sell signal. A bow tie is just when the moving averages flip over, especially after an all-time high. And then you have a higher high and a higher low. And I'll flesh out that pattern in just 1 second. But we did have a sell signal in the NASDAQ not that long ago. And for once, I'm betting against my system. I don't want that to work. I'd much rather the market go up. Much easier to trade the long side than the short side. Now, you could use this on various time frames, a 30-minute chart, a 5-minute chart, a 1-minute chart, a 1-month chart. In this case, if you take a look at the weekly S&P, it can really help to keep you on the right side of the market longer term. One thing you have to watch out for, though, being moving average related, there's lag built in, okay? And that's to keep you from chasing your own tail just in case the market's correct and it goes right back up. But sometimes you'll get a signal and then the market goes straight back up, these V-shaped recoveries, and you'll be a little late if you're using something like a moving average, but it can help to keep you on the right side of the market. And the other thing too is every top will have a signal, but not every signal will be a top. So if we get a weekly bow tie to the downside in the S&P, I would pay careful attention to that. But so far, we're okay as far as that's concerned. Now, bow ties work a lot better when the market has a more gradual rollover, okay? And you can see back in 2007, it was interesting. 2007, I remember in October 2007, I apologized to my clients because I couldn't find a long to save my life, and we started shorting, and that the market internals were beginning to fall apart way back then. And one way I saw it, not to digress too far, but the reason I saw that market internals losing strain was that I look at about 2,000 charts every day. So I have a really good feel for what's going on, up, down, sideways, and sometimes just chop it back and forth. All right, let's talk about Landry Light pullbacks. Now, again, when I look back to my biggest winners, almost all of them were Landry Light pullbacks. There might be other patterns that I trade, like trend knockouts, but usually they're Landry Light pullbacks with a 30-day EMA. And in some cases, if they're not Landry Light pullbacks, they might be with a 20 EMA, okay? So you need about 10 to 20 bars of upside Landry Light. And I used to call this pattern Kiss My Goodbye. I used to use a 20 EMA, but now I use a 30 EMA for this. Now, again, you need 10 to 20 bars of upside Landry Light, but also confirm that the market is trending. And ideally, you want it to be persisting. You want to have a really good net price change, okay? And ideally, you want it to see it accelerate higher before it corrects down to the moving average. And then the market has to touch the moving average, so the Landry Light resets to 0. And you want to go long above the recent highs. You want to give a little bit of wiggle room just in case the market rallies up a little bit on noise and comes right back in. I'm shocked at how many times waiting for an entry will keep you out of trouble. Sometimes I get a nasty gram from someone, Dave, that turn you recommended, I'm down 50%. And I was like, I never would recommend a stock going straight down. And I'll go back in time and like, well, wait a minute, I recommended that 6 months ago and it never triggered. It just kind of went up a little bit, never got to the trigger, and then dived lower. So anyway, you want to give yourself a little bit of wiggle room. Now I have a hybrid money management system that I'm going to try to get as much through as possible. And if that doesn't come through, I have a YouTube channel, I have my website, davelandry.com, YouTube channel. And again, if you go to that link with the slides, you get a ton of information. But there's plenty of information out there for free to get to know me first before you invest any of your hard-earned dollars. But anyway, you can see this is defense was really hot last year, and now it's getting hot again. So we'll likely see some more defense stocks soon. But here's a case where you had nice Landry Light above the moving average. You can see this stock is trending longer term. Notice that it's almost all green Landry Light the entire time. Now, it did roll over a little bit here, but that turns out to just be a longer term correction. But anyway, you can see you've got about 26 bars of Landry Light. It comes down to touch the moving average. Landry Light goes to 0. So here's the parameters for this. You can see right here, this is KTOS. Entries there, stop is there, initial profit target is here. Now, I'm going to try to squeeze in a little money management as we go, just in case we run out of time. But the money management is risk 2% of your account, wait for an entry, obviously, like we just talked about. And then if you're risking, let's say you're risking 5 points, well, when you're up 5 points, you want to take off half of your shares. Now, the mechanical traders might say, Dave, that has a negative expectancy, meaning that it loses more than it potentially makes. And I hear you. But the way I solve for that is by occasionally catching a longer term trend. So once you hit that initial profit target, in this case, this is based on a hypothetical 100K account. I do have a model account. I have other accounts too, but I have a model account where if I say buy 1,000 shares, I'll actually buy 1,000 shares at that price. So I could see if there was slippage and other things and actually live through it with you. And this is in my trading service. But anyway, you move to break even, you take off $1,000 or half your position, however big your account is, but it's $1,000 per 100K. And then you get that stop at the break even. And then you let the stop gradually loosen up over time. And that's so you can make the shift from the swing trader to the longer term trend trader. Now, a lot of people slot me as a swing trader, but I don't believe in pure short term trading, because occasionally something bad will happen. And in order to be successful trading, you really need the occasional home run, because bad things can happen over short periods of time. But anyway, I'm slotted as a swing trader, but we've got positions that we opened up last May that are still open. So anyway, so this is how the trade ended up: 106%, 60% on the first low for first half. There's that $1,000. Now, a lot of times all you get is that $1,000, okay, or 1%, depends on how you want to look at it on your account. But that's okay. That's what I call the better than the poking eye trade. And I'll show you a couple of those in 1 second, or at least one. Now, this was live from the last presentation. You can see it was in a longer term downtrend based on the Landry light. And then it got its act together and began to rally up. And there wasn't a tremendous amount of bars of Landry light. That was about 12 or 13. But also notice that going way back in time, all the way back to January, there was no downside Landry light. So this is a strong market. Notice that it was accelerating higher. That's one of the things I like to look for. Persistency is very important. Persistency is a market's ability to go up day after day after day. Mathematically, it's would be a linear regression, but I like to keep things simple and just draw a line through as many bars as possible. But persistency is something I would really urge you to take a look at in your charts and learn to recognize it, because it's very, very important concept when it comes to trading. Anyway, nice little pullback to the moving average. Landry light goes from like 16 or so down to 0. Okay. And there were your parameters down below. So it's 727 shares. Obviously, you'd round that up or down. But that's what the formula calls for based on a 2% risk on 100K. Entry, stop, and then initial profit target is up here. Now let's take a look at this longer term. We are still long this stock. And again, look, we got in this one back in April or early May. So this is kind of crazy when you think about it. Now, it didn't do fantastic at first, but it did eventually rally up and hit the initial profit target. And again, when that happens, you move your stop to break even. And then as it moves in your favor, now you have on half the amount of shares, you let that stop gradually loosen up again to make that transition to the longer term trade. And this is the secret sauce. This is really the secret sauce when it comes to money and position management, is making that transfer to the longer term trend trade. And then that's where you have the potential to make a triple digit gain. These don't come along every day. If they did, you never see my fat again, you know. But they come along, they seem to come along just enough to make you very profitable, longer term at least. So there's the open trade there, 66% since we triggered into it. Now, here's one from not too long ago. Now, I had it listed as a TKO, which is when you have a market in a strong trend and you have a very hard sell-off on one bar, and it could happen over a couple of bars too. But in this particular case, it was a couple of bars down to that 30 EMA. But it was also, at the time, I called it a TKO, but it's kind of interesting. When I went back and looked at it, I was like, oh, that's also a Landry light pullback. So again, I think if you only were to trade one pattern, I heard a question being asked earlier about what do you do if you're new to trading? I would say find one pattern and research the heck out of it and do your due diligence. I'm going to beat the dead horse on that in a few minutes, but I would strongly urge you to learn one pattern, good, bad, and indifferent. And here's the thing: if you're not successful with one pattern, you're not going to be successful with 100. And as Linda Rasky once said, all you need is one pattern to be successful. Anyway, the glue, you can see those are parameters. Entry was here, stop was here, initial profit target was here. It triggers, and then it dies out for 2 weeks. Now, the old Dave, back before I was a public figure in the trading world, so that would probably be back in the 90s, I probably would have bailed out on this in frustration. And I have to admit, on this day here, that morning when it gapped lower and was selling off a little bit and took out the prior low, I'm like, oh, geez, this is not good. I'm going to get knocked out of this. And then my emails start lighting up, and I got raked over the coals because this thing didn't work for 9 days. It's like, well, let's just honor our stop. We get stopped out. We get stopped out. And then fortunately, the next day, it took off, hit the initial profit target. So we got a little bit more than that $1,000 we're looking for. We get the stop up to break even. Okay. And we get stopped out at a small profit. So we did okay overall. 1,041 on the first loaf. This needs to be a little bit lower, and 364 on the second. That's based on a 100K account. So that's what I call the better than the poke NEI trade. And that's what happens is you chip away at it, Occasionally you have a loss. Obviously, you make up. Sometimes you're like this KYTX right here. You can see you made 1,000, then you made nothing on the second one. ABCL, you made a little on the first and a little on the second. But then every now and then, like this KTOS, you knock it out of the park. And that's where your year is made on those big winners. Here's another live trade. Gold stocks were really hot last year. Looks like they're getting hot again. Thank goodness. There's all your parameters down below. 1,000 shares per 100K. Entry, stop, initial profit target. Notice that it triggers and doesn't do a whole lot for quite some time, testing your patience, right? And this is why you need to follow your plan. See, I'm sneaking in a little bit of that trading psychology, but it does finally hit that initial profit target. It took a while. And then since it's been a pretty good ride higher, and again, we're letting that stop gradually loosen up over time, okay? And so far, so good. And the idea is to be able to ride out some of these corrections. Now, let me just put it, let me be blunt here. These corrections suck, and that's a lot of money you give up. But keep in mind that you did take off half of the shares, and it is open profits. And Richard Dennis seemed to be, when he was in the Turtles program, he seemed to be okay with the open profit drawdowns because it comes with the territory. I've done complete presentations just on living through those open profit drawdowns. You will have that, okay? Anyway, you can see it in the portfolio right now. We're up 135% on that second loaf. So that's around 10K or almost 10K on 100K. So that's a 10% gain. So that's a decent trade, obviously. All right. I want to talk a little bit about trading the bow tie because God forbid, with some of these areas not looking so hot here and the NASDAQ itself not looking so great, we might be forced to short a little bit, but certainly pay attention to the market rolling over. So with a trend transition, you have a market that's in an uptrend, it tops out, it begins to roll over, and then you're looking to short that first correction. In a downtrend, you're looking for a market to bottom out. These are major lows, years and years lows, or all-time lows in some cases with individual stocks. And then again, you're looking to play that first correction after the turn. Now, keep in mind that sometimes a market kind of gradually rolls over, and sometimes it becomes more of an event. By the way, I learned this from Greg Morris. Believe it or not, market tops are actually a process, okay, more than an event. It always feels like an event because eventually, market kind of gradually rolls over and then it just tanks. It's like, oh, the market crashed. Well, it's been crashing, so to speak, for a long time. And believe it or not, bottoms tend to be more of an event. It's just the opposite of what you would think. This is just a generality, but it's kind of interesting. It kind of turns everything on its head. But anyway, you're looking to play that first correction. And again, sometimes it's an event like bam, and other times it just kind of gradually rolls over or gradually rolls up. Now, the rules are pretty simple. You're just looking for the moving averages to flip from downtrend proper order to uptrend proper order, and that'll make more sense in the chart. Ideally over 3 or 4 days because you want it to have a bit of a bow tie look to it. You want to see them spread out quickly. And then you need a 1-bar pullback, and that's it. Some of my other patterns, you would have more than 1 bar in the pullback, or like a lot of those, unless it's a TKO that really hits hard, you're going to have several to maybe a week or so pullback in something like Landry like pullback. But with this transitional setup or any of my transitional setups, early trend, new trend, emerging trend, whatever you want to call it, you want to make sure you're looking to get in at the first signs of a correction, because what will happen is a lot of people will look to get off the hook. And if that rally never materializes, let's say on the short side, if it just goes up a little bit and then all of a sudden you hit it on the short side, a lot of those people were sitting and waiting for the stock to go higher, and then they'll likely bail out. The potential holders or previous holders of the stock will be forced to bail out somewhere along the way in the downtrend. Anyway, again, you're looking for them to flip back and forth to make that fulcrum, so to speak, come together at one little tight point, ideally within 3 to 4 days, and then spread out again. The faster they do that, the more it suggests that the trend change is significant. And again, we're just looking for a one-bar pullback, meaning a lower low and lower highs, a lower high. There's some cases where you just need a lower high. If it's like a wide range bar before, that's a little bit more advanced, but for purposes of today, a one-bar pullback means a lower low and a lower high. And then, of course, you wait for the trigger. So this was a trade from last January, back when the market got really iffy. You could see Carnival Cruises made all-time highs after going sideways for a while. Big picture fake out there, okay? So you had this big old fat base looking like it was getting ready to launch into space, and then it dies out and rolls back over. You get the bow tie to the downside. And it's cool because Metastock will recognize them for you if you're new to the pattern. Anyway, there's the parameters. Was 500 shares. Entry was there. Stop up here. I like to get the stop fairly close to the old high when you're trading something like a bow tie, just in case it makes that one little gas higher before turning over. Imploding is what I'm trying to say, I think. Anyway, so the stop gets trailed down. And once you hit that initial profit target, the stop is at break even. In this case, it was at a break even plus a little bit. And we stopped out for, again, better than a poke in the eye, $388 in the second loaf. So 0.4% per 100 per based on the account size, whatever. J-Bull, all-time highs. You can see that it makes the bow tie to the downside. Very obvious bow tie there. And then pulls back a little bit. Now, sometimes if a market pulls back, you will trade it like a regular pullback. If you just have a one bar higher, then, like for instance, if this thing only went right here, so technically this would have been the trigger on that bow tie right here. In this particular case, I liked it. I picked it up when it began to pull back a little bit more. But yes, technically that would have been the bow tie entry if you were following on a more mechanical basis. And that's the entry, the stop. And then once this initial profit target is hit, bring the stop to break even. And then it went down a little further, so we trailed it lower. You can see we got stopped out here. Short side is much harder to trade than long side. I would almost say don't bother, but it's the only way to make money, obviously, in a bear market. But the real reason I would encourage you to learn how to short is it really helps you to see both sides of the market. Now, you need to do your due diligence. Obviously, you want to find some setups that worked, but also find some that failed miserably, okay? And then make sure you're picking the best and leaving the rest. You want acceleration. You want persistency. You want to make sure the stock trades cleanly, okay? I get emails all the time asking about a stock that looks like an electrocardiogram, okay? If you look at a chart and you can hear beep, beep, beep in your mind, it's not a stock you want to trade, okay? Now, it's not that complicated either. It's like just eyeball it and make sure you draw your big blue arrows. Now, again, make sure the trend is significant. Net price change, your best friend there. And ideally persistent and accelerating before the pullback. Now, Dave, can you give me some more examples? Yeah, I'll give you about 15 years of examples. Go to davelandry.com/archives, and you could see all of these stocks, including the ones that everyone I mentioned today. I always use live examples or fairly current examples, and all of those can be found in the archive. So I would encourage you to go there and check them out. And then what I started doing probably about 6 months ago, a client in Italy asked me if I would mind. He can't understand my Cajun English too well. Neither can a lot of people. So he asked me if I put them on YouTube, and YouTube has a translate feature. And from what I've seen, it looks pretty darn good. Anyway, so you can get those youtube.com. I just made a whole bunch of those public yesterday, so you can see some fairly recent services going back about a week or less even. And if you want it live, of course, you can go to dayline.com/trading service. All right. So I want to show you something that a guru has never shown you. So you can see there's that acceleration we talked about. There's that TKO pattern. Okay, this was a beautiful chart, beautiful pattern, sharp TKO move down to the 30 EMA, also a Landry light pullback. Good looking setup. Entry was here, stop was here, initial profit target was up here. And it initially moved a little bit in our favor, so we moved the stop up a little bit, and then we got stopped out. Well, it happens. It's spelled with a silent SH. So that's the trade in the service sheet. Now, we might have gotten a dividend on that one. I'm not sure, because I know this number was about $100 smaller when I put the slides together, and I realized that maybe I miscalculated, but we might have luckily gotten a little bit of a dividend out of that, so that might have helped, but not enough to be significant. All right, I kind of alluded to money management earlier. Let's go through these rules fairly quickly. You want to risk 2% of your account value on each trade. Now, that's once you are profitable and fully have wrapped your head around the methodology. If you're newer to trading, maybe 0.25% or even 0.5%, and then slowly build from there. Now, don't go from 0.25%, 2%, get stopped out, back to 0.25%. I've done presentations just on that in and of itself, because you'll never make any real money, and you'll always be at your biggest percentage when you get whacked, in your smallest position when you hit it out of the park, catch that elusive home run, right? But 2%, once you know what's going on and understand everything. And then the stop is based on the volatility of the stock. In some of my stocks, I have like 11% or 12% stop. In other ones, it might be as high as 30%. It's like, well, Dave, that sounds crazy. You could lose 30%. It's like, well, I'm going to adjust my share size down to compensate for that. And I've actually done an article called Volatility Better the Devil You Know, and where I show in the article that trading more volatile stocks is actually less risky than trading less volatile stocks. And the reason is because you have to put on more shares if you're in a less volatile stock. It's kind of like, again, it's the devil you know. And some clients are, well, I can't use a 30% stop, and like they said in Caddyshack, yeah, then you don't get no coke. So you have to be willing to put the stop where the market suggests you should put the stop. If the stock is bouncing around 5 points a day and you go in with a 2 or 3 point stop, there's a very good chance that you're going to get stopped out on noise alone. And again, it doesn't have to be that complicated. I tend to eyeball the stocks. A lot of people ask me, is it sort of like average true range? And my answer there is, yeah, sort of. You got to be careful with statistics, because statistically based stops could be incredibly wide. I try to eyeball the chart a little bit and get them a little bit tighter than what something like an ATR would suggest. But yes, if you're just starting out, you want to use an ATR that's average true range, then by all means, that's maybe a good starting point to give you a feel for how much room a position needs. And then we take partial profits at 1 for 1. If we're risking 5 points, we take off half at 5 points, okay? So if the trend materializes, you're still in the stock, okay? And if it doesn't, at least you made something barring overnight gaps. There's a lot of times we'll go in, bam, hit the initial profit target, stop out, hit the initial profit target, stop out. Well, those round trips do add up, and that's obviously a good thing. That helps to keep the lights on. And also, speaking of which, I forgot to turn the light on. There we go. How's that? Anyway, it helps keep the lights on, and also it keeps you in the game, okay? And it also, not to go all Maslow on you or whatever, but it does, or freshman psychology, it does kind of feed our need for short-term fulfillment, because a lot of times these swing trades, like that glue trade I just showed you, within like a couple weeks, you hit that initial profit target. We've had some hit the profit target the same day. The only problem with that, it's not a problem, it's a good problem to have, but the only problem, so to speak, is that it's very hard when a market goes straight up like that. You're fortunate enough to catch a market going straight up. it's very hard for that market to sustain that type of move. Anyway, the secret sauce, again, is when you're making that transition to the longer term trade by gradually letting that stop loosen up. It's not really rocket science. There's a couple things I do there. One's called keep the change. If the market, let's say, goes up 15 cents or something on a fairly higher price stock, then I don't do anything with the stop, okay? And the other one's called gaining ground. Let's say a market goes up 3 points, a stock goes up 3 points, then I might only move my stop up 2 points. So thereby the stop has gradually loosened up, in this case by 1 point. And then I just keep playing these little games, so to speak. And a lot of times you don't do anything. You just leave the stop where it is, even though price moves in your favor. So you want to give it enough wiggle room longer term to ride out those longer term corrections. Now, the reason I use this hybrid approach and I'm taking partial profits is because if you were to go in and try to be a pure longer term trader, your drawdowns would be abysmal and your percent correct would also be abysmal. You'd only be right about 26% of the time. And that's hard being wrong 75% or so of the time, believe me. So the trailing stop, initially it's kind of 1 for 1 until like stock goes up 1 point, your stop goes up 1 point until you hit that initial profit target. And then you're in Charlie Kirk, the trader Charlie Kirk calls it free roll, what do you call it? Free roll, okay? You're free rolling at that point. So you're I hate to use the term playing with the market's money, but you have profits and you're just letting them ride. And again, that's the secret sauce and that's the secret to managing these positions longer term. So initially, again, it's going to kind of stair step higher, but then it's going to gradually turn into a more gentle slope type of stop, a little bit flatter. Now, again, when you loosen it, you trail that stop on a little bit less than a 1 for 1 basis. You always go higher with price, but you let the price kind of pull away from your stop a little bit, so to speak. So that distance away becomes bigger. If you trade properly and you find a really good setup that has all those things I mentioned earlier, then the volatility will likely increase on your position and the stock will gain in price, obviously, okay? So when the stock gains in price, it's going to take a wider stop to continue to ride out that trend. So again, let it gradually widen over time. All right, we've now come to the most difficult part of trading, and that would be you. So a few thoughts here. I've spent a lot of time talking about trading psychology, and I would urge you to study it. Your attitude is more important than your aptitude. There are plenty of smart people that can't trade, and there's a lot of people who aren't that smart, but they make for good traders because they're not trying to outsmart the market. William Eckhart, and I'm going to butcher it if I try to quote him directly, but paraphrasing, he basically said a lot of smart people can't trade, a lot of dumb people can. He thinks that average intelligence is enough. And we get on these holy grail hunts and we think that, oh, if only I was smarter, if only I knew more, I could get the secret to trading and I just make money every day and everything's going to be great. It doesn't work that way. But if you have a good attitude, it really goes a long ways. One of the biggest epiphanies for me when it came to trading psychology was that there's a neurology involved. And, we could argue on whether or not we have the same psychology or we're all influenced by different psychological things, but you can't argue with neurology. So every decision you make, and this was probably about 13 years ago, I was speaking in San Francisco at the TSAA conference over there, Technical Analysis San Francisco conference. And Denise Scholl talked about the neurology of every decision you make has an emotion attached to it, okay? Even what you're going to have for lunch. It's like, oh, I better eat something right before this presentation so I don't get sugar low. I'm like, well, wait a minute. what if it doesn't settle well? I'm trying to talk. It's like all these emotions just with something as simple as a lunch decision. So every decision comes with emotions and stress. That's inescapable. Now, I'm not a big fan of focusing on the negatives. Who was it? Mr. Wright once said, I was going to be a pessimist, but I figured it wouldn't work out. But one thing you need to do every now and then is kind of turn things on their head, okay? How can I fail at trading? And I've taken some of this there's different names for it, but I've taken some of this negative trading, so to speak. And like if I have a little box of screws or something, like where can I put these in the garage where I'm sure to knock them over, and then do just the opposite, put it somewhere where they won't get knocked over, whatever. So sometimes it does help to think about the negative. The extraneous influences are a killer when it comes to trading. My office is not detached from the house, but it's a separate interest from the house. You can't get to the house without leaving my office. I did that on purpose. I had the old house. We had a guest house out there I worked out of. And in this house, a little bit smaller footprint. So we needed to, in downsizing, but I wanted a separate place. But anyway, a lot of times I'm having trouble trading or not doing well or whatever. And I walk in the house and my wife's home and, she goes, oh, taxes are due. Or we have this bill or this just broke. And my check engine light is on. And it's like, oh, and I'll come back in and I'll try to make money. I'll try to force the issue and realize how stupid that is. But you're always going to be influenced by the market. Let's say you have a fight with your wife or your significant other or both, and you feel like, oh, I'm going to show her, and you go to your office and, fight the trends or do something really stupid. And here's the thing. And this is the good news, okay? You know what you're doing wrong. If you've been trading for a little while, of course, you know what you're doing wrong. And, the story I've told 1,000 times, maybe even more, is I had a client and he was complaining. He goes, I can't make money with your trading service. And it's like, well, it was an okay period of time. We weren't printing money. It was a lot of those better than the poke in the eye type of trades. And he goes, I want you to go through every one of my trades and I want you to tell me, what's going on here? How come I can't make money? And so I went through all the trades and he actually did really well. He followed my recommendations to a T. He probably followed them better than I did over that period of time. In fact, I know he did. And he was up about $300 or $400. And I'm not bragging. It wasn't a great period of time, but at least we were slightly profitable over that period of time. But he had 20 day trades and he had lost $5,000. So he made about $300. I know, no big whoop, right? But, better than poke in the eye. On my trading service, not that I'm always profitable, but that period was okay. But he lost 5,000 day trading. So I called him up and said, I have good news. I said, you did everything. You followed everything to a T. You did exactly what I said, or suggested, I should say. And you made a little bit of money. He goes, but these day trades, you lost, I think it was $5,800 these day trades. And I was kind of shocked. He says, I know. So you know what you're doing wrong. You know what you're doing wrong. And the solution to that is don't do that. And years ago, when I would do a little mentoring with people, I was always worried, how am I going to figure out what this guy or girl is doing wrong? And the first time I asked somebody, they told me. So they're like, I'm not honoring my stops. I'm trading in mediocrity, mediocre setups and blah, blah, blah. So that's the good news if you've been at this for a little while, okay? I would encourage you to find something really simple if you're newer to trading, like Landry pullbacks, or if you've been trading for a while and you find yourself kind of losing your way a little bit, as we all can do from time to time, go back to something simple like this. Study the heck out of it. Do not take my word for it. Look at every one of my setups. Look at the ones that worked. Look at the ones that didn't. Find your own. Of course, pick the best, leave the best, rest. And you want to practice, of course, proper money management. And here's the deal. Learn to separate and identify the extraneous. Right now, my wife's parents are going through a lot of difficulties with old age, and my father-in-law has really severe Alzheimer's, and we had to keep them together. The only way we can keep them together was to find a place for them where they have assisted nursing and stuff. And so we're making that transition now, and it's been really tough on the entire family and all. So it's like that's kind of weighing on me. And so you just have to figure out what's going on. And I'm thinking it's her name is Little. I think it's LR Little. I forget the her name, but last name is Little. And she once said, don't try to have trading fill a hole in your life that's missing. And there's always going to be some kind of hole. You're always going to need money. There's always going to be some expense. There's always going to be some kind of ailment or something or whatever. But don't try to get your recreation and have trading fill that hole that's missing in your life. So in conclusion, may the trend be with you. There's all my contact information. And again, it's davelandry.com/slides. Also, if you go to that link, I'll give you all 3 of my books in PDF format. So that'll get you started. There's also some mini courses that are in there. So make sure you take advantage of that. And that's all for free. All right, Jeffrey, do we have some questions? Let's see if I can see the chat.
Let me take a look. Let's see. Scott said something. He says you get used to it. I'm not sure really what you get used to, but you get used to it if you've ever been married.
Yeah, there's a lot going on. I think Samuel Jackson said it the best. And sometimes you have to say you're sorry even though you don't mean it, and there's a lot of things.
Let's see. Patricia says the EMA 9 below the 20, but the 50 still above both on daily, NASDAQ, and EMA and Dow. So I think she's just giving us a market report for that one. I did want to look at YouTube and see if we have any questions. I did want to highlight kind of some stuff with you real quick, if you don't mind.
Sure, absolutely.
I know we were kind of here. Let me do this. We've got the chat and the information for you in the room, and I just wanted to show the presence you've given to all of the MetaStock users. We've talked a lot about like the depth of the stuff that was in MetaStock and that kind of stuff. Dave, do you remember when we worked on this stuff?
What's that?
Do you remember when we created like the Landry?
That was a long time ago, but yeah, it was forever.
Yeah, Dave and I extensively worked for a long time ago too. I think we were both not gray at that time, but we put together a bunch of his systems that are in MetaStock. It's been something that's actually really, really cool. He could have and probably should have charged money for this, but if you come into MetaStock, there's a bow tie setups, the pullback setups. These are full systems that are put into the systems that have just been gifts from Dave over the years, and he did a great job with them. Dave, thank you for that.
Oh, you're welcome. Yeah, I'm excited to have him there. That's really exciting. That was very exciting when we first put those in. So thank you for doing that.
Oh, he clarified. Scott says that he is used to being wrong 77% of the time, but only because he's married.
He's got good 77%. He's a good ass.
You mean you got to be right 23% of the time? I'm just kidding. In any case, Ram says, "Thank you, Dave. Nice presentation!"
Oh,
exclamation point. So, I want to say thank you. Great job. Appreciate it. Sorry we had a little bit of a hiccup getting you started, but looks like we bounced it back.
Yeah, that's it happens. Yeah. Used to that.
Awesome. With that in mind, I'm going to excuse you though. Okay. Thanks for coming, Dave.
All right, thank you. Thanks everyone. Appreciate it.
All right. Let's go ahead and go back in here real quick. Thanks for rejoining us. Sorry about the technical issue that we had. I do want to invite everybody, if you haven't yet, come and join us at the Traders Forum. You can do it at thetradersforum.com. You can chat with other traders. You can talk about the market. It's a community of traders designed to help other traders. So, and you can join for free, thetradersforum.com. A lot of fun. We have a lot of fun up there. And I'd encourage you to come join us and have some fun with us. Mr. Greg Lewis, let's do a prize. If you want to. I mean, if you want
I do, but my camera apparently doesn't want me to. Just a moment, please. Oh, there we go. Well, that was exciting.
Yeah.
I have to say I really enjoy me some Dave Landry, and I was disappointed I couldn't listen to him as close as I wanted to because I was in the background reconnecting all the dots from when the session was disconnected. But he's just very simple, down to earth, easy to understand. Not unlike Kevin Nelson, our next presenter, who I have to say I'm probably more of a personal friend than any of the other presenters.
Sure. All right, let's see. I'm going to give away one of Macmillan's home study courses. And actually, I'm going to do this. We have a minute extra or two.
Sure.
Just so that people can kind of see what we're giving away. We're going to give away the Saturdays with Macmillan, a 14-seminar home study course, comprehensive option video course. It has a novice series that talks about basics of options, cover call rating, naked call option writing, special. Maybe I should talk less. Intermediate, got an advanced one. This is a course that you can come up and buy on his website. It sells for $499. But if you're random, if you're feeling random today, you very well could win this home study course.
I always feel random.
I feel more random than usual right now. I don't know what it means, but I'll figure it out. Anywhere between 2 and 6674.
All right, according to the Google random number generator, that is 5,651. Oh, it's a slanting high today.
Yes, it is.
5651.
That is a Terry D. With
Congratulations, Terry D.
See, I think we should. I don't know. Let's talk about this for a second. Do you think we
Sure.
should? Do you think we should say, "Hey, this is John Smith who won the prize," or do you think we should keep anonymizing people? I know what Kelly would say.
Well, I think for personal privacy, most people would prefer. I think a lot of people wouldn't care, but for that 1 out of 20 that would care, I would just say last initial and what the email domain is, as you've been doing. That's what I would do, since you asked.
Yeah, cool. I was just wondering your opinion. So I think we should call them out. I think we should give away home addresses.
I'm convinced. I'm convinced Google knows who everyone is, and so it doesn't really matter. We don't have privacy anymore, but just for those people that are concerned about it.
True. All right. Thank you very much.
You're welcome. And say hi to Kevin for me.
Oh, sure. I will do that. All of the specials. We've been talking a lot today about MetaStock and how it can help you test trading ideas. How I love to run scans every day to see what's out there. Focus on the opportunities, ignore the ones that don't have an opportunity. Scott Brown came in yesterday, talked about the forecaster. I love the commentary. It's one of the crowning jewels, according to Google Gemini for MetaStock. It gives you real-time alerts, commentary signals. We have basically 2 versions of MetaStock. We have the DC version, which is a delayed chart version. It's a 15-minute delay chart. You can use it. You can look at what the markets are doing. You can get an intraday update. You can even scan intraday with it, and it's only $75. We also have a real-time version. The real-time version includes all of the news from Reuters and a full complement of other fundamental stuff that you can look at. And what we're doing as part of the promotion today is if you buy a month, we'll give you the second and third month for free. So for as low as $25 a month, you can try what's been rated the best software in its price category for 32 years in a row. You can do that by going to metastock.com/conf promo. You can give us a call at 800-882-3040 or metastock.com/sales chat. Now, whether you're new or if you've been with MetaStock for a while, MetaStock is a toolbox. It's something that we've been designing and working on and adding features and functionality to for 32 years. As with any tools, the better you understand how to use those tools, the better they're going to work for you. With our next guest, the next guest that we have is a gentleman by the name of Kevin Nelson. Here's a fairly current picture of him. He actually hired me to start working at MetaStock. That's kind of how I know him. But he actually has created some really good resources about helping you use the tool that is MetaStock with a website that's called Learn MetaStock. And it's a tool that's so effective in training people how to use MetaStock. We use it internally to train our staff. I just brought on a new sales guy here, and the first week he spent watching Learn Metastock videos. So without further ado, I want to say welcome to Kevin Nelson. Kevin, welcome to the room.
Well, thank you, Jeff. I appreciate that.
And then today you're going to be talking about a very specific methodology that's been used for a number of years, right?
I am actually, and Dave's actually presentation was a perfect lead-in for this. I love his concept of trying to keep it simple, and so I've got a really, I mean, as a perfect lead-in for what I want to talk about here today.
Right on. I should have asked you, I think, to just share your screen.
Okay, let's take a look here. Let
All
me
right,
know if
right.
you can see that. Okay.
Yeah, I can see learnmetastock.com. That's a very nice looking website. Do you know who owns that?
I've got a pretty good idea, but thank you very much.
I can see it. I can hear you. I'm going to get out of the way. It's your turn to go. So go.
All right, perfect. Thank you, Jeff. I appreciate it. Great to see you, Greg. Definitely miss you guys, to say the least. Yeah, so as Jeff was alluding to, I actually worked for Metastock for years and years. And in 2008, I left the company to start this training company. And the only thing we do at Learn Metastock is really just try to help you out with your program in whatever way, shape, or form that we can. And I got a number of different ways that we can help you out. And what I'll do is I'll go ahead and go through my presentation, but at the end of the presentation, hopefully we'll have a little bit of time so I can give you kind of a quick overview of our website. So I'm going to jump over here. So bear with me and let me make sure that you can see this. All right. So as I was saying before, Dave's presentation is a perfect lead-in for what I want to talk to you or show you today. So what we do at Learn Metastock is a lot of times we'll take a trading idea or a strategy that we learn, you know, through a magazine or a book, a webinar, I mean, you name it. And what we'll do is we'll actually take that idea and we'll show you exactly how to duplicate it inside your Metastock program. And this particular one, the Supertrend indicator, was one that was suggested to me years ago by a customer who at the time I'd never even heard of this indicator before. But after doing a little bit of research about it, I found that this is actually very popular indicator, to say the least. And so what I want to do today is I want to share this idea with you, and hopefully this will be helpful to you. So what we're going to be doing today is talking about this super trend indicator. And the thing that I really like about this indicator is, first of all, that you need to understand it's a trend following type of indicator. So the idea is, excuse me, is that if the trend is generally bullish, if prices are moving up, you're pretty much just going to be looking for bullish opportunities, and vice versa. If the indicator is going down, you're going to be looking for bearish opportunities. The nicest thing about this is that it's extremely easy to interpret. In fact, I'll show you here in just a second. Once I plot it on my screen, I mean, within a minute or two, you'll know exactly how to interpret and possibly use it for your own trading. And one of the really nice features about it is that it adjusts automatically for volatility. It uses an indicator as part of the function, which is called the ATR, or the average true range. And what the average true range will do is it's constantly looking at the previous bars and adjusting the indicator based on the volatility. So this is an indicator, again, like I say, that will automatically adjust as it's getting data. It's also extremely customizable. So you'll be able to very quickly increase the speed or decrease the speed depending on, you know, how you'd like to use it and the different types of markets that you'd like to use it on. And probably the best thing is that there's a ton of training available for it. So for example, if you're a fan of YouTube, you can go up and you'll see numerous videos or training videos of different ways that people are using it. So what I did in preparation is I created a number of different tools to help you with this indicator. I created an indicator, an expert advisor, 2 different system tests, and an exploration. So I'm going to be showing you all the different formulas here. And the nice thing is that if you're interested in this, just let me know at the end of the presentation today. Just send me an email and I'll send you all the formulas that I'll be showing you here today as well. Okay, so don't worry about trying to copy everything down today. Again, like I say, just send me an email and I'll send you what I've got. So, all right, so let me go ahead and jump over here to the program. And what I'm going to do is, to get started, we're just going to open up a chart, and I'll just open up a chart here of the SPY. So I'll put in the symbol of SPY. And the symbol for the SPY of SPY is actually, it's an ETF of the S&P 500. So I like to use this in a lot of my examples. And here's my train of thought for using the SPY. The SPY, again, is an ETF of the S&P 500, so it follows or tracks the S&P. And the idea is that we know that generally that the vast majority of securities are going to follow the indices. They basically make up these indices. So we know if the index is moving up, we know generally at least 80% plus are going to be also moving up. And if the market's moving down, we know approximately 80% are also going to be moving down. So if we have or create a system that works well with the individual indices, hopefully a lot of the securities that make up that index will also work well with it as well. All right, so the first thing I want to do is up here in our indicator quick list is we're going to plot the Supertrend indicator that I created. So to find it, I'm going to go to any of the formulas that I've created. All of the formulas I've created all begin with LMS for Learn Metastock. So scroll down here a little bit, and this is the indicator. It's called the LMS Supertrend indicator, and I'm going to drag it directly on top of our price chart. And the first thing that'll come up is it'll ask you for the periods that you want to use for this indicator. So this one is first asking how many periods do you want to use of the average true range. You'll see the default that I've set is just set at 7, and the multiplier for it is set at 3. So don't worry too much about it. Just go with the defaults. Click on OK. And then what's important is that you merge it with your price scale. And what's important is that it's using the same price scale of whatever you're plotting. So we'll click on OK, and this will plot our indicator. All right. Now, as I was saying before, this is a trend following type of indicator. So where this is going to work best is when the security is trending in either direction. So what I'm going to do is I'm going to zoom in here on this section here of our chart. Let's see if I can grab that. Right there we go. Let's go about to there. And here you can see a pretty good example here of where the market was moving down and also where the market's moving up. So this is, as you can see, a pretty strong trend during this section. So here's how you use this indicator. If the prices close above this line, you're looking to be bullish. If the prices close below this line, you're looking to be bearish. There you go. That's it. So again, excuse me, again, referring back to Dave's system, trying to keep something simple, I think is a great idea. You know, and I'm sure Jeff would probably back this up as well. We've all spoken with thousands and thousands of traders over the years, and I'm always pretty surprised or happy with finding out that a lot of successful traders who have been trading for years and years use very, very simple, basic strategies. And I think, in my opinion, I think that's great news because we don't want to overcomplicate these things. And sometimes I think, you know, by overcomplicating things, we get wrapped up in our own analysis and then just kind of forget or basically get confused and things just don't work out well. So again, very, very simple trading strategy here. So the idea here is that if the price closes above this line will then jog or basically move to the bottom of the prices, and it'll stay underneath these prices until the bar closes below the line. So let me go ahead and scroll back here. And so in this downward move, you can see the prices were above the line, and the first bar that closed below that line will then jog up to the very top. And now we're using this as a short signal. So this is a long signal, that's a short signal, and that's it. All right, super simple. So how do you actually use this, or how would you use this on other securities? Well, let's say, for example, you're plotting it on XYZ, and maybe, you know, it's a real volatile security. You want to increase the speed or decrease the speed. You can manually click on it, for example, double click on it, and you can go in and you can change these numbers and you can try whatever types of settings that you like. But in addition to that, what you can also do, for example, is that you can go over and you can use some other tools that I've created as well inside the system tester. So I'm going to click on the system tester over here on the left-hand side. And this, of course, will open up our console where we can then choose the system test that we want to run. So up here at the very top, you have a search dialog. So you can type in whatever you'd like. So I'm going to type in super. All right. And that'll narrow down our search here. And you'll see that when you install my formulas, you're going to have two different formulas. You're going to have a Supertrend system test by itself, and then a second system test that says with OPT. OPT is an abbreviation for optimization. So if you're not familiar with optimization, what that allows you to do is it allows you to test a range of data. So let's just say hypothetically in this case, for example, that I don't know if 7 and 3 are the best parameters to use for this indicator. Well, with optimization, what we can do is we can say, hey, I want to test this range, and I want you to come back and tell me the results of all these different systems. So let me show you how this works. So I'm going to go ahead and open it up. I'll double click on it. And you'll see again, if you start up here at the very top, this will give you just a quick explanation of what it is. And just a real quick shout out to William Golson over there at Metastock. William is an extremely talented individual over there at Metastock, and talk about a guy who knows things. This he's just extremely valuable. Anyway, long story short, William actually is the one who wrote this formula initially, and then he gave me the formula, and then I was able to then modify it a little bit to create the different things or how I wanted to use it. So for example, underneath the buy order here, if you go to the buy order, you'll see that this is our entire formula right here. Up here at the very top here, you'll see we have an OPT number 1, which represents the multiplier, and an OPT 2, which represents the length of the indicator. And the idea is that what we can do is, rather than saying only use 7 and 3, now what we can do is we can use a range of data. So I'm going to jump over here to this tab here, which is called optimizations. And here is how you can see how this is set up. So for the multiplier, for example, I'll go ahead and double click on it. You can see that what we're going to do is we're going to test a minimum of 1 for the multiplier to a maximum of 10 in steps of 1. So we're going to test 1, 2, 3, all the way up to 10. Okay. Then for the length of the ATR indicator, we're going to start at a value of 2 and go up to a value of 40 in steps of 2. So this will do 2, 4, 6, all the way up to 40. Now, by doing it this way, this is going to actually generate 200 different system tests. So let's go ahead and get this started. We'll click on OK. We'll go back into our system test here. We'll select the optimization test that we want to run. And then just to show you just real quick the settings that I'm going to use for this, I'm going to tell it to go long only. I'm going to tell it to test over the last 1,250 records for end of day data. Just keep in mind that there's typically about 250 trading days in a year. So this is going to basically test about 5 years of historical data. And then I'm going to test it on daily data. And then I'm just going to go ahead and click on, oops, first of all, I need to put in a symbol. Sorry about that. So let's put in the symbol of SPY. And then I'm going to go ahead and click on our start system test, and we'll begin this process. So down here in the lower right-hand corner, we can see this process running. So this is, as you can see, there's 200 different combinations that this is going to run through. Now, one other thing that I'm also doing too is I'm running what's called a points only test. So this is just going to return back a raw number of points that were gained or lost. So hypothetically, let's just say I get a buy signal on Wednesday, and I'm using end of day data. This is going to simulate that I got into the trade on Thursday, or that at the opening of the next trading day. And then, for example, if I get an exit signal on Friday, this is going to simulate that I get out at the opening on Monday. And what it's going to do, it's going to calculate how many points were gained or lost during that period of time. So this isn't going to take into account any type of money or anything else, and it's just going to take a look at the number of points. Now, the reason why I like to use a points only test is because it's very easy to compare the results against, other types of securities. But let's go down here at the bottom. We'll click on our view report, and then we'll take a look at what we've got here. Now, after running this test here, you can see that it looks like everything we tested was positive or a winning system, right? Generated by all these green bars. So does that mean every combination that I use was a winning trade? And the answer is not necessarily, because when you run a system test or what's called an optimization, Metastock will keep the 100 of the most profitable system tests. So in this case, we ran 200 system tests, but we're only looking at 100 of the most profitable. So keep that in mind by, when you're taking a look at these results. So now what we can do is we can sort on any of these columns that might be of interest to us. So I know most people jump straight to the net profit. So we'll go ahead and do that exact same thing. And we'll just take a look at, for example, like the most profitable system we've got here. So the most profitable system generated 208 points. We had, looks like 8 trades right here. We had 6 winning trades and 2 losing trades. And then our average profit to average loss is 3.22. So what does that mean? That means for every point that we lost on a losing trade, we made 3.2 points on a winning trade. In other words, our winning trades were over 3 times the size of our losing trades. And this is really important to me. In fact, I think it's probably one of the most important things is the size your average winner compared to the size your average loser. What you are shooting for, what I think is that I think you should shoot for, is your average winner to be at least twice as big, if not bigger, than your average loser. And the reason being is because we don't know when our next losing trade is going to come in, and we don't know how many losing trades we're going to have back to back. But if we have our winning trades and they're substantially larger than our average loser, I know I can be wrong a lot more often than I'm right and still do very well with a trading strategy like that. So now in this case, if I've got more winners than losers and my average winner is larger than my average loser, again, that's a good combination. So then the question is well, what was the combination that this came up with? And if you expand these last 2 columns here, you'll see that underneath OPT1 and OPT2, this is going to give you those values. So in this case, for example, you'll see OPT1 has a value of 5, OPT2 has a value of 20. So that means the multiplier was 5 and the length of the ATR was 20 to generate these points here, or the 208 points. So what should we do with this? Should we just go ahead and basically lock these numbers in and start trading with it and so forth? Well, let's go in and take a closer look at it. I'll double click on it, open this up, and here you can see how this actually, or more information about the system test. So we generated over 208 points, but the buy and hold was 298 points. So what that means is that over that data range that we just tested, which was 5 years in this case, if I would have just literally bought this security and held on to it, I'd be up about 300 points. But if I chose to trade this using this system here, I'd be up 208 points. So then a lot of times people look at this and say, well, why would I even want to do that? Well, before you jump to any type of conclusions, there's a lot of things inside this report you want to familiarize yourself with. Because a lot of times what you'll find is that once you understand what's important or not important to you, it might change your view on these numbers here quite a bit. So we'll scroll down here a little bit and just kind of give you an idea. But you can see that we had 8 total trades right there. Out of those 8 trades, you had 6 winning trades. So you had 6 out of 8 winning trades, which is a very nice ratio. And then that means you had 2 losing trades. And your average profit was 38.7 points, and your average loss was a little over 12 points. So that's that 3-to-1 ratio right there. That means your average winner was over 3 times the size of your average loser, which again, I think is a very good ratio. So now we'll kind of scroll down here a little bit. The other thing I like to take a look at is this number right here, this out of market timing. In this case, it says it's 518. So what does that mean? Well, if you remember that there's typically about 250 trading days in a year, if we've got 518 bars where we're out of the market, that means you generated, in this case, 208 points being in the market about 3 years of time. But in order to generate 298 points, you had to be fully invested for that full 5 years. And that is another very important consideration, in my opinion, because if you're only in the market 2 or 3 years and you're doing as well or or close to what the buy and hold is, if you figure that out, that changes these numbers quite a bit there, to say the least. Now, another thing I like to look at is this number right up here. If you click on the equity tab, this will show you what your account theoretically look like over that testing period. So here where the line is flat like that, that just means that you're not in a trade. You're sitting on the sidelines during that point. And then everywhere else that this kind of gets jagged like that, that means that that's where you're in a trade. So for example, these numbers down here at the bottom will tell us the number of bars that have passed. So for example, if I come up to about 500, that's about 2 years of time. So in other words, for the first 2 years of this trading strategy being applied to the SPY, really didn't do anything, just pretty much sideways. But after those 2 years, these last 3 years, obviously this did very well because, again, we're using a trending type of strategy, and things tend to trend, or when things are trending, this is where those types of strategies are really going to shine. So now, so what we can do then also is we can go down here, we can click on this plot on chart, for example, and then we close down these dialogues, for example, these system tests. This will show you those buy and sell signals here on your chart. Up here at the very top, this is your equity curve. So we'll go ahead and close that down because that's just another view of the same thing. And then what you want to do is you want to take a really close look at these buy and sell signals. So before we can actually verify that this is correct, this buy signal right here, we need to change the length of this indicator. So I'll double click on the indicator itself. And then we'll change this, for example, to whatever periods that you want to use in that system test. So I'm going to go ahead and change that, for example, to 20, and I'll change that, for example, to 5, click on OK. And now if I zoom in here, for example, kind of grab my little zoom box here. Oops, let's try that one more time. There we go. And I'll zoom in just on this little section. The reason why we got a buy signal right there is because the prices are below this line, and this is the first bar that closed above that line. And per the settings of the system test, we're going to get in at the opening of the next bar, which in this case was this bar right here. So then you're going to stay in that trade and kind of move this over here a little bit, keep going over. And well, actually, let's go back and let's find one. This actually got out on the last bar, but let me kind of zoom out here. We'll go back to a previous trade here. Okay, so here's another entry right here. We'll kind of zoom in just on this little section right here. You can see that this is the first bar that closed above that line. So we got in long at the next point. And then we'll kind of zoom out here and move over here. And you can see you were long all the way up until this bar, because this is the first bar that closed below that line, basically telling you that that upward trend at this point is changing. So that's perfect. So when you are running these system tests, this is the kind of thing that you want to do, is you want to plot these things on your chart and make sure that you can visually see why this thing is buying and selling at these different points. All right. So let me go back here for just 1 second here. I want to go back into that system test here for just a minute, and I want to talk about these results here. So I'm going to right click on the system test that we just ran. I'm going to select report. And this will then say, okay, so here's the report that we just ran. We'll click on view, and we'll be right back in that same view that we were just looking at here before. All right. I just want to talk just briefly about optimization. Optimization allows you to go backwards in time, and it allows you to test a big range of data, so you can kind of go through the results and decide, what type of settings that you want to use going forward in the future. Here's the problem with optimization. The problem with it is that if you are always just choosing the best system, or the optimized system, for example, the problem with it is that the only time you're going to see results that are that good is when the next set of data or the market behaves like the data that you actually tested. So that's the problem with it. A lot of times people just go with the most profitable one, and then they go to test it in a real market or trade it in a real market, and they're not happy with the results. So the question is, well, what can you do with it? Well, let me just give you just a couple quick opinions here. The first opinion is, let's say, for example, we sort on the net profit, and you're looking for some type of results that you want to use going forward in the real market. One thing that I always talk about in the system testing is that if you come up with a set of parameters that you want to use, for example, what you want to look at is that if you change those parameters just a little bit, so say, for example, like change the length of the average true range, for example, you bump it up or bump it down, for example, and then you rerun that system test and you come back with wildly different results. All of a sudden you had an extremely profitable system. Now you have a terrible system. That tells you that you don't have that robust of a trading strategy. But on the other side of the coin, if you can bump those numbers up and down and so forth, and you don't see a lot of changes, that could be a better system or possibly a more robust trading strategy. And here's one other thought here for you too. And one of my favorite types of testing is what's called a walk forward test. And a walk forward test just means that you go backward in time, you grab a block of data, you develop your trading strategy, and then you lock in your parameters on that block of data. Once that's kind of, basically set in place, then you run that system test with your fixed parameters on another block of data that the system test hasn't seen before. And the idea is that you then basically, you always want to try to test these things, good markets, bad markets, flash crashes, COVID markets, and see how these different results actually turn out. And the idea is that the better that they hold up in extreme markets or whatever you throw at it, hopefully that's going to give you that much more confidence in a trading strategy like that. So anyway, the point being is that with this system that I'm showing you, this is a really simple system that you can try all those different ideas out yourself. Okay. All right. So that's our system test. So then let's go ahead and close this down. So in addition to that, I've also created some other tools here. And let me go ahead and go back into here. All right. Let's go back into our system test here. I'm going to go ahead and select this. And so let's say, again, just for this example, let's just use the levels of 5 and 20, for example. And now what I'm going to do is I'm going to open up this system test that I created, which is just called the Supertrend system test. Now, let me open this up. And you'll see in this one, this is basically using the same formula, but the difference is that rather than using optimization variables, this is where you can put in whatever number that you want instead of a variable. So let's say, for example, that you decide that, okay, I want to use levels of 5 and 20, 5 for the multiplier, 20 for the length, and I want to test it on individual securities. So here's what I would do. Rather than changing any of the parameters of this original system test, what I'd highly recommend that you do is make a copy of it and then make changes to that copied version. And the reason being is that way you can make as many changes as you want. And if you mess something up, you can always fall back on that original version and have that available for you. So the way that you make a copy of something is you just right click directly on it, click on copy. And now you can see I've got a new system test. It just says -copy at the end of it. So now what I can do is I can open this up and then I can make whatever changes that I want to this version. All right, so let's go to the buy order here and let's change this multiplier, for example. Let's change that to 5. We'll change the length of it, for example, to 20. All right. And then if I do that for the buy order, I also want to do that for the sell order as well. So we'll change that multiplier to 5 and we'll change this one to 20. All right, we'll click on OK. And now we've got a system test here where we basically have locked in just those variables or those values of 5 and 20 here. So now what I want to do is rather than testing it just on the SPY, let's test it on the securities that make up, some of the securities that make up the S&P. So down here at the bottom, I'll make sure and have that selected. And then down here at the bottom, I'm going to scroll down and I'm going to grab this group right here. This is the S&P 100. So I'll go ahead and select that, make sure that's highlighted. Again, I'll tell it to test long only, going back over the last 1,250 records using daily data, and I'll click on the Start System Test down here at the bottom. All right, so now what I'm doing is I'm going to run this system test. You can see down here in the lower right-hand corner. This will kind of give you an idea how quickly it's going through. We're going to be running this system, but it's going to be using the values of 5 for the multiplier and 20 for the length of the indicator on the S&P 100 securities. And then what we'll do is we'll go through and we'll take a look at some of those. So here's this going through. You can kind of get an idea, you know, if we've got any, looks like some profitable results, looks like we have a few negatives coming through. And then of course, when it's finished, then what we can do is then we can click on this view report down here at the bottom, and then we can see what this looks like based on 100 different securities rather than just the SPY itself. So let me kind of make that a little bit bigger. All right. So again, what I'll do is I'll sort on the net profit, for example, and kind of get an idea of how many tested profitably and how many were unprofitable. You can see approximately it was about a 3-to-1 ratio, about 3/4 tested profitably and about 1/4 tested unprofitably. So as we kind of go down here, then we can see the individual securities, like the one at the top here, Goldman Sachs. You can see this one generated a little over 500 points. It had 8 total trades. It had 3 winners, 5 losers, and the average profit, this is a really nice ratio of almost 9 points. So your average winner was almost 9 times the size of the average loser. Let's go ahead and open that one up real quick. We'll go ahead and just double click on it. And here you can see again, this generated 500 points. The buy and hold was 600 points. So we'll scroll down here a little bit. Out of 8 total trades, we only had 3 winners and we had 5 losers, but why it did so well is your average profit was over 205 points and the average loss was a little over 23 points. Again, scroll down here a little bit, down here in the out of market, we're out of the market over 2 years of time. So same thing, as I was stating before, this one generated 501 points of you being exposed in the market for about 3 years of time, or you had to be fully invested for 5 years in order to generate 600 points. So again, another really a good example here of being in or / out of the market there. Now, the other thing that you can do here as you're kind of going through here as well is when I was actually going through all these different systems and so forth and taking a look at all the different training that's available for the system. Another idea here was that a lot of times they combine it with other indicators. And hands down, the most popular indicator or example that I saw combining, for example, the Supertrend indicator was with a moving average. And the idea is that would this possibly get better, for example, if I want to combine it with, you know, something else like a moving average. So if you're interested in trying an idea like that, let me show you one way to go about it. So let's go back into our system test, for example, and I'll go ahead and open up our copy here because this is the one that we can modify as much as we want. And what I want to do for this example here is I'm going to go to the buy order. And down here at the very bottom, this last line right here, and I know that a lot of people are newer to Metastock that are probably in this room and so forth, and probably aren't that comfortable with the formula writing and so forth that's inside of Metastock. But that is one area that obviously I can help you out a lot with, you know, at Learn Metastock. We do a lot of different formulas and show you how to create these different things and so forth. So don't, you know, I guess just don't get too worried about this next step as I'm showing you. Just bear with me and I'll just kind of give you a quick example here. So this last line right here, this is what the system is looking for in order to generate a buy signal in this system test. And that is the close is basically going above the previous bar's value. So anyway, so let's say, for example, that what we want to do is we want to combine this with a moving average, saying, I only want to buy this if this is true or this last line is true and the close is above a moving average, for example. So I'll tell you what, before I do that, let's just plot that here on our chart, for example, just so I can visually show this to you. So up here in my indicator quick list, I'm going to go ahead and find the moving average indicator. I'm going to drag it directly on top of our price bars. And I'm going to make this a 200 period exponential moving average. That's the one that I've seen numerous times here as far as examples. And I'm also going to change the color of it here too, just make it different than our actual indicator there. All right, so let me kind of zoom out here a little bit. All right. All right. So here's kind of the idea with this, and that is we're only going to buy the security, for example, if the prices go above this lower line, number one, and number two, they also have to be above that moving average, for example. So in other words, for example, any place that that the prices are below that moving average, for example, and we get a buy signal, it's going to ignore those types of signals. So again, we only want to buy it if the price is above this blue line and also above, for example, that moving average. All right, so that's the concept. So we'll go back into our system test here, and I'll open up that copied version. And what we're going to do here is just bear with me if you're not familiar with Metastock. We're going to add a line to say we also want the closing price to be above its moving average. So the way that you could write that is and then say, for example, the close is greater than its moving average. And so the way that you write that is move, open parenthesis, close, comma, the number of periods you want to use, and then the type of moving average. So just to explain this last line, this is saying that also we want the close to be greater or above its 200 period exponential moving average. Okay. All right. So that's going to be built into our buy signal now. So we'll click on OK, and let's go ahead and rerun that system test. And again, this is the kind of things that you can do. So you can test out just about any type of idea that you can pretty much dream up. So I'll go ahead and select that same one. We'll choose the same database, for example. I'll keep all my settings the same, and we'll click on our start system test down here at the bottom. And same thing. So this is going to run through those 101 securities actually, and we'll take a look and see if this makes any difference at all there to our system test. So I know that this is pretty confusing for newer users of Metastock, but the key is that Metastock truly is a toolbox type of trading program. You know, you can keep it as simple as you want. You can just use the systems as they are that are already built into it. Or for those who actually want to go in and play around and try different ideas, this is exactly the kind of thing that you can do. So I'll go ahead and click on View Report. And then again, same thing. I'll go ahead and expand this out here a little bit. Oops. Let me go ahead, and that was kind of weird. And then we'll go ahead and sort, for example, like on the net profit. And now you can see, for example, the one that came up the highest is now booking holdings. This one generated 787 points. It had 7 trades, 4 winners, 3 losers. But here you can see the average winner to average loss, for example, is 1.18. So that means that for every point that I lost on a losing trade, I only made a little over a point on a winning trade. And so if I scroll down here just a little bit, there's Goldman Sachs, and you can see that now it only traded 3 times and it generated 304 points, and the average profit to average loss was over 5 points. So again, let's go ahead and open this up, just take a quicker look at this one. You can see that our profit actually went down on this by adding that moving average to the system. We had 3 total trades, and 2 of them were winning trades. The average winner was 167 points, and the average loss was 31. So again, a really nice ratio here. But look at this number right down here, this out of market. You were out of the market over 1,000 bars. Well, if we scroll back up here and look at the top, we only tested 1,250 records. So what does that mean? That means that you generated 304 points of being exposed in the market for 1 year. In order to generate 600 points, you had to be fully invested for 5 years. So again, that's another thing that you need to consider when taking a look at some of these different results. And again, that's the reason why this will change those results so drastically sometimes. And this would be a pretty drastic example. Again, generate over 300 points in 1 year versus 600 points in 5 years. So anyway, so I won't go in too much more, but I think that's a pretty good example. All right. Now, in addition to that, I also created some other things here. So let me go ahead and just show you these just real quick. I also created an exploration. And what's nice about this exploration, we'll go up here to the very top here. I'll type in, for example, super, and that'll narrow down our search here. And you'll find this exploration here, which is the Supertrend exploration. And as you can see up here, this is going to give us the closing price in this first column. The second column will give us the date. The third column will give us whether there's a buy signal, and the fourth column will identify whether or not there's a sell signal. Now, we'll go ahead and run this just, oh, and by the way, if you want to modify these values, you'll see the default again is just set at 7 and 3, but of course you can change it to anything that you like. So in preparation for this webinar here today, I actually did run some scans, and the closest day, it's actually pretty selective. It's only looking for buy or sell conditions that are happening right now. So the one that I actually found a few signals on was running this through, what was it, 2 days or so, on Tuesday's data, which was the 17th. So I'm going to go ahead and run this exploration. Down here at the bottom, I'm going to run it on the S&P 100. And what I'm going to do is I'm going to run it through Tuesday, which was the 17th. And we'll go ahead and click on our start exploration, and this will begin the process here. So, all right. So I ran it, for example, I wasn't getting any, I ran it through yesterday's close, for example, and I wasn't getting any hits. So what we're doing now is we're just looking at the results of Tuesday, the closing price on Tuesday, just so I can show you some results here of some securities that are giving us a signal. And again, this is just using the default parameters of 7 and 3. All right. So as you can see here, we only got 3 securities that came back with signals here on Tuesday. We've got the GE Aerospace, and then Lindy and Medtronics here. And over here on the right-hand side, you can see the first 2 are giving us buy signals, and the third one's giving us a sell signal. So we'll go ahead and just open up, for example, like GE Aerospace first. All right. This will open up our chart. I'll close down this report. And then let's go ahead and plot our indicator here. So I'm going to go ahead and type in super. We'll find our super trend indicator, and we'll drag that directly on top of our prices. Click on OK, and we'll merge it with our scale. All right. So let's kind of zoom in here. All right. So the reason why this security came up on Tuesday is because we got a buy signal here on the 17th there. And you can see, of course, what prices did yesterday and what they're currently doing right now. So this is our real-time version of Metastock right now. And so again, like I say, we've got a live bar here on the far right-hand side. Now, in addition to that, I've also created an expert advisor that you can use as well. So go ahead and apply that to our chart by going to our expert advisor. Then I'll go ahead and do a search on LMS, or let's do super again. There you go. So here's our expert advisor. And just to show you how to modify this one as well, I'll click on the edit button here. And you'll see that underneath the symbols tab, you're going to have a buy and a sell condition that's going to plot these 2 different arrows. And if you need to change the length of them, you do the exact same thing like I was showing you on the other screens. You can just change this multiplier and the length of it to anything you want. But for this example, we'll just go ahead and keep the default settings. We'll click on OK, click on attach, and then click on close. And then this, of course, will give you those buy and sell signals on your chart as as you get the different signals there. So I'll go ahead and click on that right pointing arrow. And then this is the next company, for example, that was giving you a buy signal and so forth. But the idea here is, again, is that this is going to give you those signals as soon as the prices are trading through those different levels. And this, of course, you can modify to anything that that you'd like, whether you'd like to increase the speed and or decrease the speed there. All right. So that's what I've got here for you today. I hope that that's helpful. If there's any questions or anything else that I can help you with, make sure and let me know. Just send me a message over there in the chat window. and I'll be happy to help answer any questions. And at this time, I'd just like to show you a couple things about our website, just real quick, just kind of tell you a little bit about what we can do for. So at Learn Metastock, our goal, of course, is just try to help you with your Metastock program in whatever shape or form that we can. So we do it a couple different ways. So for example, on our website, up here at the very top, if you click on this live classes, for example, if you click on this, this will give you the schedule of what we're going to be doing for that for this week, for example. And you'll see the different classes and what we've got planned for you. And we always plan them out 1 week in advance. And then where the people spend the vast majority of the time is underneath this video library here. This is where we record our different classes and training and so forth, and we place this up here, and you can basically try to find any type of training that you can pretty much imagine. So over here on the left-hand side, these are the different categories, for example, that you can search through. And one area that I highly recommend, no matter if you're a seasoned Metastock user, for example, or you're just getting started, this is where you want to get started. It's called the Getting Started. And what you want to do is you want to take a look at, for example, the introduction to part 1, introduction to Metastock part 2, and the next step into Metastock. If you can get through those first 3 videos and understand the basic concepts, that's going to give you a really solid base or building block in order to build on from there. One of the problems that I see a lot of people kind of run into is that they'll get Metastock. Of course, they're very excited about getting started with it, and they want to jump straight into system testing, or they want to just start scanning and so forth. And without learning a lot of the basics, that's where it'll kind of trip you up. So if you could just take some time and learn the basics first, I think that'll be you'll be much better, a much better way to start with the program. Now, with our live classes and so forth, we do our live classes 3 days a week. And of course, we'd love to have you come into our class. And the nice thing about that is you can always come in and ask whatever types of questions that you want. And what's really nice about it is that we save also, if you have questions about what we're doing at that time, of course, we'll cover that. But at the end of the class, we can also open it up to any other types of questions that you might have as well. So if you're, need any help, this is a great way to do it. But a problem is we know that a lot of our customers are international customers, and they can't come in at the time of our live classes. So what we do is we always make a recording of our live classes, and then we put them up under this section, which is called the live class recordings. So you can always go up here and you can see the previous week's classes or the recordings of those at that time. Or what you can also do is you can go up here, for example, and you can search for any subject that might be of interest to you. Now, in addition to that, if we kind of scroll down here a little bit, this next section, the drawing tools, inside your Metastock program, and let me just jump over here to a chart here just real quick for just a second. Over here on the left-hand side, you've got a lot of drawing tools over here, and you've got a lot of different drawing tools over here, in addition to all the indicators up here. Well, what we did here is in these videos here, let me jump over here, is that we went through all those indicators on the left and the right-hand side of your chart there. And we went through in detail how to, first of all, what they are, and then of course, how to actually interpret them and use them and so forth. And as you can see, I mean, there's a lot of different ways that we can help you just by doing that. Then of course, these are some of the other categories that we can go through, the forecaster, the expert advisor. If you want to get more into system testing, go in there, explore, and so forth. And for those of you who want to learn more about formula writing, then we've got a number of different videos here that we can help you out there as well. And this is an area that, again, you can take this as far as you'd like. But hands down, probably the most popular area that a lot of people like to go to is this section right here, which is just called trading strategies. And this is where we take those different trading ideas and then we just show you how to duplicate them inside of Metastock. And when we do this, then of course, we also create these different these different formulas, and that allows you to then download those formulas directly into your Metastock program. And this, of course, is where we can save you a massive amount of time and effort, to say the least. So for example, like right here, this is our Supertrend indicator video that we created previously. And if you'd like to get the formulas from this and you're a subscriber to learn Metastock, then what you do is just go to this video, for example, and then right down here at the very bottom, just click on that link, and that'll install all these formulas directly into your Metastock program. So that's where we can really help you, to say the least, and save you a massive amount of time and effort here. And we've got formulas here based on all these different trading strategies that, of course, you can download directly into your program. But with that being said, as I was stating before, what we're going to do here today, for example, is any of the formulas that you'd like to see that I showed you here today, just send me an email and I'll be happy to send those to you at the end of our class here today. So my email for that information then is just admin@learnmetastock.com. So again, that's what I have here for you today. I hope that was helpful. And at this time, I'll just turn it back over to Jeff.
I'm here. We have a couple comments. Not a lot of questions, but a couple comments.
That's all
Bill
right.
wants to know. Oops. Bill wants to know you did a great session. Very informative. I agree.
Thank you.
I'm not going to argue that. Patricia says more like a weekend project. Learn the basics.
Yeah,
It's a
exactly.
good thing to do on the weekend
Yep.
if you have some time. And yeah, the basics are so important. And then Patricia also said, "Way to go, nice." So there you go.
Thank you, Patricia. I appreciate it.
All right, very cool. Let's see. I'm gonna just kind of reiterate, Kevin. I want to say thank you for coming here today. Thanks for spending some time with us. Much appreciated. Such a great service. Again, I just started a new sales guy. The first thing that I had him do is get very, very comfortable with you and your videos. It's a great resource to anybody that wants to get the most out of Metastock. Thanks for being here, Kev.
Thanks again. I appreciate it.
Cool. We are going to do like a little bit of a special offer as well. Let me go ahead and kind of just talk a little bit about that. I need to kind of get my view rearranged a little bit. So one of the things that I really like, you do have all of those videos that Kevin was kind of going through and showing you. He does a great job of kind of showing the website. You got the basic videos, the expert advisor videos, the system tester videos. I really like the videos where he kind of does what he just did, where he goes in and talks about a specific indicator, tests it, see how it works, tries a couple of adjustments to it, see how those works. Very good way of kind of getting some insight into what's going on with the trade. So the other thing I really like is every time he does one of those videos, it'll help you learn about the indicator, but it will also help you. He also provides the formulas that he uses. They're downloadable. You can use them. You can test it for yourself. It's a great service. It really, really is. $99 per month is how much Learn Metastock actually costs. If you're a new customer to it, and I would recommend, we've talked to a lot of people that are new customers, but we've also talked to a lot of people that are existing customers that, understand that they have this really big tool in Metastock that they may not be utilizing to the best that they can. And sometimes it's a matter of you don't know what you don't know, right? And so whether you're kind of looking at Metastock for the first time or if you've been using it for a while, I'd recommend that you give Learn Metastock a go. Because again, every time we bring on a new customer, a new employee, I should say, like a new sales rep or a new support rep, the first thing we have them do is use this. It's a hugely valuable resource. So what we're going to do, just like we do with Metastock, if you buy a month, we'll give you the second and the third month for free. This will pair well with Metastock. That's about $33 a month is what you're going to pay. And you can do that if you go to metastock.com/learn Metastock, 3 for 1. That'll take you there. You can do that. I'm sure Greg's going to put that in the chat right now. You can also go, we'd love to talk to you. If you want to give us a call, if you're in US and Canada, give us a call at 800-882-3040. We can add that to your account. You can also go to metastock.com/sales-chat. Really do want to say thank you to Kevin for hiring me initially. I really appreciate that. And also just all of the great stuff that he's done with us over the years. Appreciate it. So as we move on to the next speaker, I do want to say thank you to Stocks and Commodities Magazine for being sponsors of the event. They've been sponsoring our events since we started them back in the early days of doing webinars. If you haven't already, you should subscribe. They've got 17,000 articles, 1.3 million subscribers. As a trader, I really feel it's important that Yeah, I think you understand this. You're at an event that's lasted all day. But I really feel it's important that you kind of are getting better. Like you're increasing what your knowledge in the thing. And Learn Metastock's a great tool for that. So is Stocks and Commodities magazine. If you go to www.traders.com, you can sign up for a membership there. As part of that membership, I think the subscription is $100 a year. Could be a little bit off on that, but you'll get a magazine every month. You'll get access to all of their articles. And I do want to sincerely thank Stocks and Commodities for their years of support. Thank you guys. So, Greg Lewis, you know what this means. All of the offers we're doing, including Learn Metastock, you can get at metastock.com/conf promo. If you want to do the extended trial of Metastock, you can do that at conf promo. Again, if you buy a month, you get the second and third month for free. Again, it's been rated #1 32 years in a row. Again, you're going to love the software. You're going to want to keep it. So the DC version, the delayed charts version, is no longer end of day only. It updates all day long. You can scan with it. You can do anything you want to with it. And it's $75 for 3 months. It's like $25 a month. You'll spend more on coffee. Metastock.com/conf promo, metastock.com/sales chat, 800-882-3040. Price tag?
Yeah, I'm sorry. I thought you called me on a minute ago.
Yeah. Oh, yeah. No. Okay. You understood. You understood what we're going to do right now.
Oh, I'm so smart.
No, you're what?
Me smart.
Okay.
Hey, I sure enjoyed Kevin's presentation.
Yeah,
Kevin Nelson.
David did too. He said very nice presentation. Patricia says I like Heikinashi and the Ichimoku system. Patricia, I know you're a new Metastock user because you won the prize a little bit earlier in the month. Check out the Heikinashi and the Ichimoku experts that are in Metastock. They're very cool. Bill says, is that a new customer?
Heikinashi.
That's what I said. I said exactly that way.
I should take Heikinashi, but anyway.
Bill wants to know if he's a new customer to Learn Metastock, can he get that deal, or does he have to be? If you're new to Metastock or Learn Metastock, you can get that deal. Bill, I know you've used Metastock for a number of years. Appreciate that. If you want to get Learn Metastock, you can do it, and that deal is available to you.
It's probably also worth noting that you're going to be doing a webinar in a few weeks on the Ichimoku method, if I'm not wrong.
You are for not Patricia's wrong. Correct. Yeah. And if and it is really cool. I love that method in Metastock.
Just go to metastock.com/webinars, Patricia, and you can see that if you want to enroll.
Okay. I think we're caught up on questions. Let's pick a prize. This is, I know this is one of your favorite things. Let me look. We were going to do this next time. We were going to make a little hat and draw prizes out of the hat. Do you remember that? We didn't do it this time.
I didn't remember that. Did we discuss that?
We did last time, like at our November conference.
Something like a virtual hat or a literal hat?
A literal hat, yeah. So anyway, I got a virtual hat right here. It's a spreadsheet. I have
a literal hat.
The next prize we're going to give away is Greg Capra's Master Trader Advisory Swing and Options Trade Newsletter. This newsletter is put together by Greg Capra. Greg's a big friend of Metastock. He spoke. What day did he speak? Tuesday?
I believe it was Monday, but
Monday.
Sure.
Monday, yeah. He's got his pristine methods that he uses. Very good trader. He is going to give away a month of his advisory service to whoever Greg is going to make lucky. Greg?
Yes.
Do your Google magic. Let's get a random number between 2 and 6,674.
Yeah, according to Google Random Number Generator, 361. So that favors the person who registered early.
Oh, we have our first winner from Costa Rica.
Ooh.
Jose with a Gmail address. So, Jose, if you're watching and you're in Costa Rica and you registered with a Gmail address, you probably won. There's a good chance. I doubt there's a lot of Jose's from Costa Rica that are registered.
There are a lot of Jose's in Costa Rica.
Yeah, but that are registered. So, in any case, thank you very much, Greg. I appreciate the assist.
You are welcome.
David says, very nice. Let's see. I think there is another question that we can look at. Patricia says, "Oh, cool." Bill says, "I'm signing up." Great. You'll love it, Bill. Kevin does such a really good job. 2 clouds. Patricia, I'm not sure what you mean there, but there you go. There you go. Do check out the Ichimoku method in your new Metastock subscription. You like it. It's really, really cool. I usually do a whole session on it. And if you come back in a couple weeks, I'll be doing a session on just that Ichimoku cloud and how it works inside of Metastock. Again, there's only so much that we can cover as we go through the events today. So our next presenter is Mr. Peter Dalal. Peter has been a partner of Metastock for, gosh, a long time now. He is also the creator of one of our most successful add-ons of all time called the FX Traders Advantage. The things I really like about Peter is he's really smart. He does a really good job of putting together methodologies, placing them in the software, that kind of stuff. I mean, he's been kind of celebrating this year. He's celebrating the 20th year of Magic Trader. Magic Trader is kind of an extension of all of the work that he's done. Today, he is going to talk about the work that he did with his daughter and how to give your charts a 5-ingredient checkup. So without further ado, Peter, let's go ahead and get you started. And I think I do see you in here. I can't hear you though.
How I could?
There you are. Perfect.
Yeah. How are you?
Perfect. Let me go ahead. I'm going to actually send you the presenter right now. It should ask you if you want to share your screen, and I will make sure I can see your screen as well.
That is a tough one.
Yeah. Which one, right?
Yep.
Peter has like 7 or 8 screens, or maybe 15. I don't know.
It is 8 on this computer.
Okay. All right.
Okay. Let me know if you can see my screen.
Okay. I don't see it yet.
Yes. How about now?
It's coming. Give me a second. It usually takes a second to load in.
Usually it gives stuff on the other side.
I do have your non-expanded PowerPoint.
Okay. So I'm going to go and change it to other mode. How about now?
Perfect. Easy. No
right.
problem at all. It looks great, Peter.
So we all set?
Yeah, I can hear you well. I can see your screen. So I'll get out of the way. I'm here if you need me.
All right. So Jeff, thank you very much for introduction. As Jeff says, we're going back. I started with Metastock in 1990, right? Then since 2001, I have not used anything else. But yes, as a broker gives you platform, but I love Metastock. I spend 17, 18 hours a day on Metastock, right? And I've been trading. I started as an individual investor back in India. Then when I came in here, I was still an investor running several businesses. So I kind of like perfection, and I didn't like the job most of the money managers did for me. And came to a point I had to fire people over the period of time, and I had to learn to program, which I never did before, right? And then I realized I have a unique ideas. So while I was talking to Metastock at that time was Reuters, and I wound up filing my first set of patents based on cumulative desire to buy and sell in multiple time frames, and we got the patent. Then I realized that everything is great, but I still have to do analysis and all of the happy stuff. And while I was traveling with Kelly, Jeff, and a couple of people from Reuters at that time, by the time I come back to my room and do analytical work, right, and send it to a broker to pull the trigger, it is kind of backward because by the time you do analysis, one things are different. So I got frustrated and I said, there got to be a way to do better things, right? So I started while we had a first product, I was already designing the next generation. And then I realized I'm not a damn programmer, and first product, Reuters did programming for me. And then I said, oh, I'm filing patents, so I got to keep all these things secret. So now I'm coming to a point where I had never did programming, and the things I want to do very complex, because as an engineer, I know what I want, but I really did not want to do any traditional indicators, because I went in a concept called when institution believes to pull the trigger, net, I want to know where we are at any given point. So that came with a lot of challenges, and I'm not a programmer. So first line I did it was 6 months, and formula doesn't go in there. I want to know where everybody believes to pull trigger around the world going long, or they are below that line. That means they want to go short. So 6 months I was watching wrestling, and I'm struggling for 6 months and the formula doesn't work. It's complex. And I went into like a space center. Long story short, I jumped from my bed and told my wife, I'll be right back. And I realized there was only one thing I did not do it. And I went there and corrected the whole thing, lighten up on Euro USD. I said, wow. And then I started working on, and that was our magic line, first magic line. It has nothing to do with moving averages. I wrote in a way that after open, high, low, close prices, we dissect in the variables. And that was the beginning. And then I wanted to put it out all the 8 dimensions, which I got the pattern. I not knocking any indicators down because I was the one who was teaching around the world. So they work up to a point, but I wanted do something which was never done in a history. So we wound up getting new patterns, right? And it is also true, and I admit before we started, Magic Trader, it is a galaxies and ocean combined. So I wanted to give a product which is scalable, and I could use a piece and make money. So at any given time, I have a fun, right? And it has to be simple, like colors and symbols, nothing more, right? So least amount of lines. I don't even draw the lines. I don't even use traditional patterns anymore. So this is kind of things I wanted. So at given time, I look at for less than even few seconds, I know where I am, and I pull the trigger or I don't pull the trigger. And that's about it. So that's what the birth of Magic Trader. And later on, I'm going to show you how much risk are there. Initially, when I started with Reuters, I only wanted to talk about 50 some risks. I knew what I designed. It was in trillions. But if I tell people, they're not going to believe. So it took me more than 6, 7 years to open my mouth. Right. And lately, I've been going very blunt. And if you go with the old recordings, you're going to see, any site where they do permutation and combination. You could do yourself. You put highlights, number of highlights, and number of symbols, and you will know what those combinations looks like. You will be shocked. So there is no human way possible without this program. We wrote it. You could find the right sequence, and I've been using my own trading, option trading, anything you want. I have traded. And we started with actually Forex. And really, it was a very good feelings to work on a Forex. So I'm not gonna give you a lecture about the topics. Technically, I'm a visual person. So I speak, I don't prepare. I have to do this slide because we are registered with the federal government. So I got to document every single thing. You will see the disclaimer you never seen, right? Because it has gone through so many law firms and CFTC and continuous. I got to keep updating. Say for instance, I had to put this one in the last round. Everything is hypothetical. Every slide has to say, right? And it was worse. Now it's getting better. Otherwise, when I had to go to bathroom, I had to ask them, can I go to bathroom? That kind of things I went, not this administration, couple of before, right? It was really painful to do a lot of, but I'm doing it because I'm used to. So I'm not going to read all disclaimer. I just want to tell you a few things and we're going to get started, right? And this technology is not based on a price. So you're chasing the price. I chase the liquidity and risk cluster. That is the biggest differential between all traditional stuff and what Magic Trader is. It is risk-based software. And I had to admit one thing, which normally I don't. I went for 2 years of New York team to go through every piece of Magic Trader at that time, and they checked for 2 years. On average, the representative used to come on a Zoom at that time was Novia for 2 years, 4 to 6 hours per week, and then we got to do the homework to give it to them. And then finally, before we release, they said everything according to their vertical expectation. So 2 years I went through kind of scrutinizing Magic Trader because I want to make sure I don't violate the law, right? Because I'm really into, you know, going to do maximum what the law requires. So it is kind of retail people, but I came from institutional background. So I know the consequences from regulators. They could shut you down any given time. So we're going to talk about the risk clusters and many things manifested AI. We have nothing to do with the current AI. I embedded. I did not even tell Metastock what I am doing. I gave them the formulas, they wrote the DLL, and eventually I started breaking the programmer what really I embedded into that. So forecasting was a part of that, and one of the things CFTC wanted, they don't want me to use, oh, he's going to go to the moon kind of language. Earlier highs came from them actually. That was the part of the recommendation they did it, which was pretty good, right? So we don't kind of tell people, oh, he's going to go to the moon, right? And it does have 11 plus different manifested AI. And I have a lot of surprises for Jeff, right? I just finished something which is already written those codes, but Metastock did something pretty good on 18 and up. Now I could put the shapes into instead of, you know, old histogram kind of things. And I got good at that. So I could express the liquidity, right, as it happens. This is awesome, but it is not going to be included into this version, but I'm way ahead of what I want to do it, right? So it's nothing to impress. I'm a regular guy, very simple living, we living, right? But I want to do something which is not done in the history, and that's what I have done in many industry, right? So it's nothing like I'm smart. I'm just dummy like everybody else, right? So what's the big deal? Nothing big deal. Just I happen to be inspired by several, God knows, God inspiration to do something which can change humanity. That's what I'm up to, right? So I never consider I'm a good trader. It's all relative matter. All right, so we're not going to read all the disclaimer there were 12 according to the law firms, but I will tell you a little bit about Jeff has a copy. This recording, we're going to pause 1 minute or half a minute so you could go back and read whatever you want to do it. And if you want, Jeff can send you the disclaimer in a PDF form. So technically, everything is risky. We do not give anybody recommendation to buy, hold, or sell securities. We prefer not to do live analytical work because uh, regulators don't like it. I don't care what somebody says because I get audited, and because people can take as a recommendation and they could lose or make money, then regulators have to get involved. So we don't do that, right? So, but in the confidentiality agreement, I do think in our private rooms, right? So everything is risky. That's what we're supposed to tell you. This is my favorite, and which is very important. Everything, including live trading, is under stimulated trading. So, and nobody can guarantee past performance, or we cannot even use consistent because those are not acceptable. People do whatever they want to do. Everybody runs red light. If you get caught, then you deal with it. But I'm been seasoned around SEC, CFTC, I have several health licenses, right? So I'm dealing with regulators on a regular basis. So we will not do things. Everything is hypothetical. And this particular note came thing year, 2 years ago. Every slide has to do that. People don't do it that they have to deal with the regulator, not me. And we're supposed to put the dates. You'll see a lot of compliance. Options, I trade options, right? Lately, a lot of institutions are trading options that everybody knows, right? Because we are very updated. So zero DTE, I'm not trying to make like a guaranteed statement. Every security in S&P 500 in next 5 years will be having zero DTE. If you do not now adjust yourself, it will be difficult question you will have to face how to make money in this market and get used to. And it is true, about 6, 7 of them they just added, right? So CBOE is big in there. They're making a lot of money, right? And everything going that way. And a lot of institutional friends I have it, they all love to trade, zero DT or 1 day option, right? So there's no such thing like zero DT, a 1 day option. And every single thing is being geared to trade that way. I'm not claiming as an option expert. I will never trade as a what you call claim as an expert because that's you know market will humble you down. And I have a history on a Wall Street that exchange I got the attention one time. Everybody has to answer why Peter took 50,000 Intel trade. So you understand now where I'm coming from. And I had to go through 1 week of investigation. How come I did that? But I did not do purposely, but it was a mistake. Normally 5,000. So they want to know how come you putting 50,000 Intel? They honor it, but everybody who are licensed had to answer that Peter did a boo boo. That's my earlier days on Wall Street. I'm just giving you a little bit here and there where I'm coming from. I'm still registered, my company is registered, but we took the exemption, so I'm not claiming as a CTA because I have health issues, and I am I used to do managing the money. I don't do it. I don't do brokerage. Just teaching at this moment because I have made a commitment to get this product on a retail side off the ground. And we are already 5, 6 years in that, but institutionally it was used since 2006. So we are into 20th year. Intellectual property, we are big. I got several patents, trademark, service mark, all kind of thing, including education. We trademark so in different categories, and we do spend a lot of money for that, and we maintain it. And so everywhere you're going to see an IP kind of thing, service mark, trademarks, whatever. Right now, this is what we from last presentation I did it, and now I'm going to leave it here, including all these people that kind of chat GPT business AI, we going on a record. You cannot take anything from Magic Trend. They've been notified too, and mix it up, and they will not analyze. If they analyze, they know what will be. And there are reasons which I don't want to go into that, but there will be severe penalties for a lot of people because there are basically reasons. And basically, this slide itself will tell you so. Take your time later on and read through it. So we have nothing to do with that, right? And we don't want people to put anything. It's our intellectual property, and we could ask. It went through the lawyers and whatever, right? Then, copyright, because we have a lot of things copyright. Every slide you will see copyright notice. So we are big into that from day one. Then everything is stimulated trading. Again, they want us to put our license number there, and technically we're supposed to disclose it. People don't do it. That's their problem. Right? So you could read those disclaimer later yourself. Otherwise, I'll be here to 10 o'clock. All right. Now, scalp swing is the methodology we created, and I don't want to get into. We have a separate training, recorded training. You could ask Jeff. He will tell you. But I like to not put money on a line until I collect from the market first, right? Doing scalping, and I use that money to do the swing. That's how I do things. So I have least amount of the risk, and I get my fit with at any given time for any security or options, and I love it. I like to negotiate with the market at any given time. And Magic Trader gives you between this on a conservative side 500 to 1,000 trades every day, any given time. So there's a plenty opportunity. So we're going to go quickly. We call ingredients, but all the ingredients actually is a risk cluster or bunch of risk clusters together, right? And that's what makes all the symbols, right? So we pick up 5 of them very obviously. We're going to talk about that, but eventually we're going to be talking by numbers, right? We have a working model. I'm trading live with that, but it's not available, and we are not selling here, right? Because we go through a lot of testing, live money, live trades with the options, and a lot of things for liquidity. As Jeff gave me the gift on 18. Now I could do those things. All right. I wasn't going to show you, but I'm intimidated to show you. Okay. For 1 second. Okay. I'm going to show you. This is what Jeff did to me. And I don't want to go into that, but this is way beyond people's imagination. Right. I like to communicate with people by shapes, right, and colors. My old days in a school. So 5 ingredients are part of all this clustering, right? But we went beyond that and make it more simple in upcoming months. So Jeff will kill me opening my mouth, but this is the reality. My traders in alert room, we do trading with that, right? Because we have to move on. But we use everything. Anything goes to make money, we do it. I have 19 different experts. You tell me, Metastock does three, uh, 2 expert in the version current. What happened to 19? So you think about it. I have 1,000 explorers. You don't need to know that, or you don't need to even have them. I do because I came from institution. So make it simple. That's the best thing. Then multiple time frame, because that's where I got my pattern and a cumulative desire to buy and sell securities. So be doing this invention, believeness invention into multiple time frame. And catalyst, which is like yellow bar, indigo bar, this is big. And these are piece of like one of the fish into the ocean of Magic Trader. It's huge, but you don't need all these things. I did it for me. All right, so we have expert in the current version for beginners, right? And then the options, and then the advanced one, which also we have it, but right now Metastock is not distributing. Okay, now time frames. Which time frame you should be trading? In my opinion, Magic Trader is independent of any other weekly. You could work with weeklies, dailies, but I prefer to have a confirmation or commonality between different time frames. Daily and 60 is one of my favorite one. Then pulling trigger is 5 minutes. I prefer not to go less than that, except in the futures, because those contracts are very, very big, 50,000, 60,000 kind of thing. So you could lose a lot of money if you are wrong. So at that time, I will use 1 minute for entry purpose, nothing more. But I always start from bigger picture. So new people don't get carried away with the tick charts at this. Look at the bigger picture where the market is going, where the institutions are going. You have to do that. So Metastock has a great options already built in. All the time frames they give it to you, and there is a custom. You could create custom with that, and they usually put it those custom. You, they store it here, but these are the things comes with the Metastock, and use custom to get what you want. So what I did it kind of setups, right? So you could do daily, 15 and 5, daily 60 and 30, right? And these are the bigger time frame. You look at the picture, where they're going. And then you decide to trade. That's why I created this one. I like to create new things, not copying people. And I really don't care what people do, because that's their rights to do whatever they want to do it. But it has a lot of flexibility. Data comes from LSEG, right? So it's the same thing with the Refinitiv you used to, right? So that's why I put it formally Refinitiv, but they sold the company to LSEG. I started with Reuters, then Thomson Reuters. I grew up with them. So I enjoy, right? We argue, me and Jeff, many times, but good people. Really good people. So you got to work with them, just like you work with your wife if you are married, right? Or your girlfriend. I'm married 42 years. So at least I have, and I stick with Metastock because of that. I have a partnership with one of the company since I came. So I like to have a long-term relationship. All right. So basically, there is an option expert separately, as I told you. All right. So this is like a simple presentation, daily and 1 hour, right? And basically multiple time frame. You could add a bunch of them, but I like to see my setup right now is a daily and 30 or daily and 60, because all my friends on Wall Street are using, they used to use 60, but because of market is so bad, they're settling with 30 minutes. This is the insight I'm giving you, right? They like to control the risk. So they are worried because market is very tight. Right? S&P 100 points range, right? And it's very hard to make money that way. We don't know where we're going. And this is happening because I give you some clues, okay? Institutional clue. Because skews are very high, right? And that's the part of the problem. So if you know VIX, do 30 VIX and into what you call 1 day VIX and do plotting, and then you will know the readings are more than 2. So that tells you the story. It is tough and don't take much risk. That's the best thing I could tell you. This is the language you normally don't see because we created this. So here is embedded design. 11 plus proprietary structural indicator. We're not talking about regular indicator. These are the institutional structures. Native integration inside Magic Trader Elite. It is already integrated. Zero reliance on external AI model. We did not went there. I was working with this AI for a long time, right? But I don't have to tell people this component is the AI. First time Jeff will tell you, I openly admitting because time wasn't right? People 15 years ago, what are you crazy? My friends were spying on market makers in 90s and they created artificial intelligence. I used to hang around with them. So believe me or not, I had luck with meeting a lot of smart people on Wall Street because I try to help everybody. Okay, real-time structure adaptability, right? Okay, regime of what you call aware across volatility cycle, right? So volatility is big. Magic has its own volatility in option side, right? Multiple time frame synchronization. So if you really want to learn, I took 15 minutes and I could see on a daily, weekly, or vice versa what is happening in a 15 minutes or what is happening on a 15 minute, what is happening in a daily. It can be presented on a 15-minute chart. That was the breakthrough. I got it on a multiple time frame with this Magic Trader. So people who likes to do that, either you are a new guy, this is big on an industry. So I don't have to open up those charts. I'm lazy. All right. So cross asset structure awareness. So it is not just particular security. It sends a lot of things behind the scene. Then forward-looking structure detection. So that's what one of the things I told you, that forecast is a forward-looking. Our lines are not Fibonacci lines. They are forward-looking, adaptable, and flexible, right? and you don't need to go back years, right? We don't need much data with the Magic Trader. That's what the things I learned from the first product, right? And detects magic risk cluster pre-expansion, surface institutional liquidity pressure earlier. This is big. If you understand liquidity, you will never have to worry about what prices you have to pay because you're following the liquidity. What institution does, you saw that thing, right? I show you, which I'm not supposed to show you, right? That is liquidity, different buckets. And we teach people how to do it. Strategic risk compression converts combinatorial risk complexity. So, one or two slide down, I'm going to show you, right, into structure catalyst output. So we simplify this thing in one candle with a different color, right? And we have about 11 different colors. So that gives you a picture of various risks behind the scene happening, which people have no clue. And that's why you wind up losing. All right. So bullish, this is big. Liquidity, where liquidity pressure concentrates, right? And risk clusters, right, is the market risk one with convergence, right? Right. So basically, those risk clusters are storytelling things, right? So upside, when you go one to long, that the risk concentration is the upside, which is liquidity accumulation acceleration. So it pumps, right? That's why we use, right, language pumping and dumping. This is nothing to do with what people do in a boiler room, right? But these are the things, if you want to learn institutional language or lingo, these get used to. And whether you like it or not, sooner or later, it is going to be popular. We were doing 20 years ago, but it takes time for retails to understand. And basically, you could understand risk cluster. You don't have to worry about all these, mumbo jumbo new terms. But liquidity is the key, and distribution happens when downside risk shows up. So, in short, liquidity institutions say, let's dump it, or we will reduce the concentration. That's the language they use it. All right. Tell these people who putting our orders that we want to lighten up the concentration. That's how they talk. Structure function, multi-layer structure, risk alignment, time frame synchronization, which is big. If you want to be a real trader, you have to do this. Magic Trader does for you, but you got to at least know what you're doing. Right? So people who are new, don't get intimidated. These are language of institutions. I want to give you a little taste where we coming from. All right, converts complexity into actionable. So that's where you're going to be learning action plan, right? You don't need to learn all this thing, but I have to tell you how the software was designed. So now this is the famous yellow candle and indigo candle, and each candle has, I cannot tell you exactly, hundreds of thousands of risks combined in this candle. And there are so many kinds of yellow candle. You don't need to worry about it, but at least some action going on there. So in this case, when yellow bar is a warning sign, but usually we use it to go long. So when yellow bar comes in with these ingredients, we're going in a bullish direction. Same thing with the indigo bar, we're going down. So you can read this thing later. But in short, each candle has a lot of risk clusters inside embedded. When I stock had a smart guy helping me. I wrote the formula, but it's a lot of work for DLL protection. I don't know how to do DLL. I tried, I failed. Okay, now this is the key. Don't get, it's like ocean and galaxies and oceans are combined, right? So you'll get an idea. This is one of the expert. You get, I think, two are expert with the elite version. So one of them has 112 symbols, highlights with different color of candles, 11 of them. All right. And it's a multi-layer proprietary formula structure per symbol. So each symbol has a millions of calculations. You don't need to worry about it. What I did it from my engineering background, I sequentized them, prioritized them, and Metastack has a structure already there. So I use their structure to make my life easier. So when you get it, do not try to change the sequence. Otherwise, you will get lost and you will have to call Metastack to reinstall it. Please do not fool around. I'm telling you, people who did it, they regret it. And your chart will look different than mine because you change the sequence, right? Risk has a sequence. So we found those risks, bullish risk. So I could take the risk on, but which is the best out of best or millions of calculation? That's what we already did for you. So when you use any software, right, on a internet permutation and combination, you put right 112 and 11 numbers and you will get this number. Look at how many risk sequences are there. Permutation 20.9 quadrillion and risk cluster combinations are 424 trillion. How you could tell me that any software you work, they include those calculations? Come on, right? Let me put it this way: the patent attorney was scratching their head, including my law firm, 40 years in business, scratching their head. What the hell you created? Monster. But I made it so simple, you don't need to learn everything. Make it simple, right? It's not that big deal. So let me put it this way, and Jeff is going to show you later on. Let me get another chart if I can here. It's hard sometimes. All right, here. Look, it has all this simple symbol. You follow a bunch of them. I'm going to go over with you, right? And this is forecasting. It's telling you future high. What is it? It's telling that we're supposed to go high. I guess there is no guarantee, but what are you supposed to do? What analytical work you want to do? These are those magic lines. They are above it. If I were you, I will go long. And that's about it. You stick with that bunch of things and good to go. If you want to make it complicated, you could. I like to do challenge complication, right? So I have my brain has to work harder, right? So I'm used to. That's how I invent things, right? So I got to challenge myself. So, but you don't need to. I show you simple things, right? And when you learn things, then you add more and more and more, and you will be fine. All right, this is how simple it gets, right? So these are different colors. I put it down here what they are. These are we call it the price perceptor. I have a pattern on that. You will learn in the trainings. I don't have time to teach you all this thing. I wish, but this is that yellow famous bar. And you don't even have to have magic line. This is institution, tier one institution. You could Google and find out who they are. So this is the first time in history I dissected, and that's how we got the pattern. First time, it's not just buy and sell. It is wrong. There are three types of buying going on, and there are more types, but major three types, right? And this is the advanced price perceptor. When institution, we call it the inflection point, creating new inflection point. If you trade options, it's a term. So they're going in a next level. So what happened? They buy options. Suppose they were having strike price of $50. Now they are accumulating on a 55, then 60. Those so they get rid of the all the important level we call as a call wall, and then new inflection point is a 55, so they will be start taking position. If you see sometimes in a day, you will see one after one they start putting more what you call open interest into those strike prices, right? And volume goes higher. So if you are trading option, and these are those famous forecasters. So it, as I told you, I show you, right? What it tells you, we're going to go higher, or we could tell you, it is telling you earlier high. So earlier warning to go higher, kind of warning according to CFTC. You could understand whatever you want to understand. Now these are enlarged one, 11 of them I told you. So we're going to go a little faster. And these are some of the symbol partial list. So you could see where the 112 came from. So these are different symbol. Some of them has a mile-long formulas. We ran out of the room. So we created new way of doing it, right? So these are those forecasters, earlier highs and earlier lows. So you get an idea, right? You could take one idea, 3.1, 3.2, and trade with them whole day long. You don't need to learn anything else. So I gave you here how they show on a chart. So this is 3.3. So this is that 3.3. So 3 is the notation of earlier highs, right? And same way opposite in a different symbol. And 3 is the risk on a scale of 1 to 6, right? 3 is okay, you could take the risk. So it has a risk scale there. And this is the advanced price perceptor, right? So it is very simple unless you want to make a project. So as I talked to you, risk clusters, right, is being represented by symbols such as this. Any high school student can recognize on a chart a simple line. Green color is a direction line. I'll show you where it is. We're going long. You don't need to make a project. Higher highs, higher lows. We don't even talk about all these things. I graduated from those things and I want you to graduate because it's a wastage of time. That doesn't mean other people or instructors are wrong, but after a while, you're doing the same thing over and over again. Spend time with your children. I never had time for my wife, children. Now I do have plenty time. I make the time and I don't sleep too much. I sleep 3 to 4 hours the most. I wake up at 12 o'clock and I'm doing something. Go to sleep at 8 o'clock. That's my lifestyle for years. Okay, so that's the line shown on a chart is the direction line. So what are you making project for? You see direction line, where are we going? Green, we're going long. So this is we call as ingredients, right? And you don't need all of them. You need few of them, 2, 3, right? 1 sometime. All right. So now this is the health window. So these are the values. There is a dotted line. I'm going to show you where it is, and it has to be above the 0 line. And that's about it. As long as they are parallel, you're good to go. And you could scan it. Right now, I'm going to show you where they show. So this is that purple line. Any high school student can recognize this line. This is parallel to this, and they are about 0 line. We're good to go. And the value on a scale is 4. Right here, the value is 2. Or no, this is 1. Right, 2 is good, but I like to have it parallel between 1 and 4. Right, and I'm good to go. So I'm going long. I'm staying in a trade. And this is we call famous spike. This is not your regular Metastock spike, right? It is designed with, I don't want to get into that. You will get into your account. And I wrote some article on a PDF file is there. And they are showing earlier sign to go long. All right. And we call it anchoring. When you see this one stabilize, that means we going to go long. So you will identify on a chart. So let's go and find it. So right now, right here. So there is yellow bar is telling me we're going to the bullish side. That's a catalyst. And when you see completion here, that means I'm entering here, and this is the institution tier 1. We teach you in the trainings all these things. But type A is a very ground floor opportunity, and rest of these things are there. This is tier 2. UBS is one of them. This is Goldman Sachs and Merrill Lynch. They are tier 1 institution. How I know? Because I was trading with them. So I know what they're doing, right? And I don't want to talk to them anymore. I don't need to. My chart tells me the story. And the liquidity, the clouds you saw it, even gives me in depth the games they're playing. I'm a very much trader recognizes the games played by institution. So I will trade better game. I love it. Okay, this is number 4 PR health. So what do you saw that 4, 1 and 0? So all that indicator juice is in that little simple line, which I'm going to show it to you right now. So as long as you have that in your favor, you're good to go. Here is a retracement time, pullback time. So you could even identify pullbacks. And when it comes back, you go back, pull back, or you could take in between. Doesn't matter. So this pure health is the juice of health indicator. That idea came when I had a trouble, right? When I had a stroke in a hospital, right? I was looking at all these things, waves. I said, wow, I could do the health of security is a part of my invention, right? So it's a very good idea. All right, then I also found out all the risks, right? They also follow the timeline. So I accumulated those risks in a bearish, bullish, and neutral direction, right? And that changed everything. So this ribbon, Metastock talks about ribbon, but technically it's a horizontal time risk for Magic Trader. I don't know what other people are doing in a ribbon, right? Our is based on a risk. So that's what it looks like. So you can't compare Metastock one product to another product. Oh, there, but we have risk associated with that color of the ribbon. So that's what I want to clarify. And please do not mix one software to another because you used to. I had also made a decision like a laser knife cutting. I'm not looking at anymore what I did for all my life, including traveling with Reuters, teaching people how to do technical analysis. Not interested in because this is simple for me. Saves me a lot of aggravation. But you could do whatever you want. So what I did it, I put it all together in one place. So you understand what you need, right? This one or two of those and you're good to go. So each ingredient operates through synchronized risk cluster inside the Elite engine. So what we created is Magic Trader Elite engine, which has everything in there. All right. But basically, bottom line is the risk clusters. And I show quintillion, right? 20 quintillion risk there. You don't need to worry about it. Same thing, we're going to go fast and catch up the speed because we have very much less time left. So this is same thing opposite. This is the direction line. We see color line like that. We're going down. Right? This is shown physically there. And this is we call as a health window. You see that until it doesn't come in back or here is the green and you get out. And make sure you enter when these two lines are parallel, right? That's this, I cannot say safe, but this is the area I would prefer to do it. It's choppy, this particular thing. But I want to show you not the glory, choppy thing too. So you got to learn not to take trades at that time in choppy market. Now this is that one I was talking about. The as long as the -1, -4, and they are parallel, we good to go. Same thing here, the values are there, and you could see here. So this there's enough money into this area, right? And believe me or not, this is the risk transfer area. This is my favorite. So bull get beat up there, and they convert everybody into bearish, right? And here big area, right? So Magic Trader has all in a pattern filing different kind of risk transfer area. It's so many kind of risk transfer. We don't need to learn all. I don't even care anymore. I just look at those buckets and I'm good to go. Because I don't have to do analytical work. I just look at the symbol. All right, we scan it and go. I spend very less analytical time. All right, this is how the entry spike is. So when you see it, it's got anchor here, we shorting. Or we could buy options too. So I'll be buying put option here or spread. I don't like to buy just plain call or puts. This market is not for that. You got to have a hedge or partial hedge. Otherwise, you're going to get whacked, right? And time decay will kill you financially. So please try to understand. I'm not recommending spreads or try to hedge yourself. How you could hedge? Call with another call, right? You buy a call and sell a call. Make less money, be happy. So I'll give you some hint. So in this, oh, Peter, it went down over 10 days. Do calendar diagonal. You understand? And keep closing one and shift your one of the strike price. That's how I would do it. As this develop, you got to do some work, or you have a larger spread width, right? 5 wide, 10 wide. I don't like 10 wide. Just do normal. So you are looking the chart and control the risk. In this market, you're going to get whacked. All right. So this is the pure health, right? So you don't need to worry about all this 4 and 1 and parallel, this, that. As long as this is there, you're good to go. Same thing here. Look at this retracement or sideway or whatever they're doing there, right? Look, so you had one shot. Then again, they're consolidating. So I just go with here, and if you do this one, I don't put the physical stuff. I watch it and take some money and run. I tell everybody, take your money and run. Don't wait for tomorrow. Because if it was supposed to keep on going, right? It did not. Something changed. Again, horizontal time risk in a bearish side. So you just have to see color at the bottom. This is the bigger scale. You could see here neutralization, right? And then if you see green, that means things are changing to bearish to bullish side. We call it as switches. When you know it, you have no idea those switches, how powerful they are. You could practically, we don't have the scanner given to in this model, but I do give in an alert room, right? My scanning results, those things. It's like a snapback, right? 180-degree turn. If Jeff remembers, I gave first time ship turning concept in San Diego, I think in 2003, 2004, I think, right? And I was contemplating to put this thing in a magic trader. And I did, I think, 2 hours training for ship turning. Let me tell you something, everything is ship turning. You will agree with me once you understand. So once you master that, you have low risk entry, low risk exit. I'm throwing some nuggets. Pay attention to these things. So listen, this is ship turning right here in front of your eyes. This is ship turning. If you don't learn this thing, you're dead financially. Here is a ship turning on the top. And you could use spikes for that. And there are ways. So basically, captain got called in somewhere here. Hey, it's a counter cycle, make a turn. So here, that catalyst comes in. We're making a turn. Then we got, ship always go back. And then a couple of step back, couple of front. That's your retracement. So you got to learn these things, how institution playing games. And look here, advanced price perceptor came in and boom. So we talk about gaps and we already know what is going to happen the day before. So what's the big deal? I could sell 50,000 courses out of it. Not interested in. We teach people what is required to become a good trader. All right, so we using Metastock to do scan 5 ingredients. So this is the one when you get the magic trader, you use that to find these 5 ingredients. So when they line up all 5, 1, 1, 1. So that's the thing you want to do it, but only 3 lines, fine. So you could trade with that too. And one of the catalysts here, right? Turquoise bar, yellow bar. So you add one of these, right? So let's see here. They all have 5, I think. Right, so there were so many opportunities that day. But you have 5 and plus yellow bar and turquoise bar. This is huge. That means I'm buying call spread or diagonal spread. All right, this is my favorite lining up, right? So here the direction line lines up with the spike. So you enter at the yellow bar and that's it. Technical analysis over. And here we have that pure health, good to go. And it happened to be daily and 60 doing the same dancing. So what are we supposed to do? This is my institutional setup. Daily is also in agreement. These are my favorite ones. So once you have that, you have less risk. It went horizontal, but that's the nature of this market, right? Then they will consolidate and then we'll go another level. But at least you got in there. So it does not take much time to figure all out. Same thing in opposite direction. And I put this screenshot. So that's the scanner. Once you get the software, if you want to, you could use that scanner, right? That's why I did it. And I put it again so you don't get lost. B means bearish, right? And F means filter. Use the filter. So 1, 2, 3, 4, 5 ingredients match. And then one of the catalysts indigo bar, we're good to go. That's about it. You don't need to make a project. Now, once you scan it, right, all 5 ingredients matching, so you're going to have this thing, right, daily and even 60-minute. When you scan 60-minute or when you open daily, you will have 60-minute template, right? It will show up the same way. So we supposed to go long or short, short. And look here. So you buy put options, or if you have money, buy the security, or means in this case, short it. You cannot buy it, you have to short it or borrow it from broker, right? I would rather trade with the put options. So you could buy out of the money, right? And you will see the delta increasing in negative side. That means we're making money. Same thing, delta increases. That means we are going in the money from out of the money. And then inflection point. So write it down all the notes. What is that inflection point? Peter keep talking over and over. Those are the money making machine. No guarantee, but I love it. All right, this is my lovely daughter. She was very young. I trained her in every multiple businesses. I did it because do this, do this. She becomes smart. She worked for publicly traded company. She played a big role in the magic trader development, and Metastock loves her. Right? She is easygoing, other than me. I'm tough. That's what they're telling me. But my daughter is very, very easy going girl. Everybody loves her. Right? And because of her, I succeed. So we put efforts into our children. She has a bunch of licenses, right? She don't want to get more licenses. She's tired. They wanted her to get Series 7, 664 and principal licenses. No, I don't want 200, 300,000 extra. I don't want to do it because she has a child, right? So they're putting a lot of time for the children. Like my wife did the same thing. She didn't work for 15 years until I had a stroke, right? So we believe in a family, right? And we put values and all the investment, time investment in children. And everybody knows about me. So I don't have to talk about too much, right? I don't have Series 763. I let it go. I still have Series 3 and 34. You know, I really don't want to carry as a CTA, right? We are allowed to do X amount. I don't want it. I want an exemption. So this way I don't have to do too much compliance and audits and less audits. It's too much work for me. All right. So basically the whole thing was created on believness concept of institutional traders and retails go along with them. All right. So it's 4 o'clock. All right. So it is based on beliefs, bullish and bearish believers. So everybody knows now. So we don't care about our pricing. This is our famous magic lines, which took me 6 months for first line. And then I created the other one. So we could use that as a stop. That's why I created. So this is the bearish setup, risk off, and this is risk off and risk on, right? So basically it's a line in a sense concept. That's what I was struggling for 6 months. I could have taken magic, what you call moving averages. No, we don't want it. I wanted to know when they believe, right? Net believeness to go long. That's the time I want to stay long on upper side of the line. And here I want to stay at the bottom. Minute it close above that line, I'm out. That's how you trade. And it comes with the software. All right, Jeff, it's all yours. Thank you very much for your time, everybody. I'll be here. Jeff, take it over, please. Sorry, few minutes late.
No problem. We had a couple we had a couple comments, and I wanted to read them to you before I kind of took over. Juan and Udini wanted to say hello. And Julia said Peter is the man. So there you go. In YouTube, we had a gentleman called the King Rock Show, and he said you do a great job. So there
Thank
you go. All right,
Oh,
I'm gonna.
I have
go
to
ahead.
appreciate everybody took time to come in here. We want to help people, and I'm very selective because I'm old. I have a lot of issues, but I don't pay attention to those issues. So I want to have transfer my knowledge to people, right? And I have a hard time to find the right people. I'll be very honest with you. People don't want to learn. They want to just make money. It doesn't work that way. I learned those lessons myself, losing money.
Well, a
Right.
good place where they can learn is your educational alert room. I'm
Right.
going to
And
talk
then,
about that now.
yeah.
Okay, very good. Steve Fox wanted to say hello, Peter.
Oh, Steve, it's been a long time. Oh my God.
All right, let me go ahead and get my just kind of talk a little bit about what this is. There's a few things that we're going to talk a little about, and we're going to kind of keep it a little bit concise just due to time. But I do want to talk about the educational alert room. And Peter's been running this how long now? A couple of years
Since we
now.
started, actually, before this alert room, we used to do Amnovia room, and everybody in that room was licensed. So I don't have to worry about telling them buy or sell, and we could openly talk. So nobody can come in except we have an attorney even there with a license. I made them go and get the license.
Anyway, yeah, Peter's been doing it for like 20 years.
Yeah,
He's
20
been doing
years.
he's been doing the room, the alert room now for a number of years. And one of the feedbacks that I always get from it is that people really like it. They want to make sure that they're still members of the room. If they have any problems, they take care of them right away. It's a very, very detailed room where they cover a lot of topics. And just to give you an idea of what those topics are, here's a whole page of different things that they talk about. And I'm certainly not going to read these, but these are just the various topics that they talk about. You've got your swans, your price perceptions, patterns, all kinds of stuff in here. And I don't even have time to read the list. But if we want to talk about market related, here you can kind of see where they've talked about carry trades. That's a very, very interesting concept. ETFs and institutional sector rotation techniques, U.S. equity sectors, global markets, global yield. That's just some market related topics. In terms of options related topics, I love options, and you can certainly go down a rabbit hole of options. But here's some techniques that they talk about in options, and you're welcome to pause this and take a look at it. Other topics, AI. AI might be a little bit of a topic that a lot of people like to talk about right now. And here's some things that are kind of being discussed in this educational alert room. So here's some more options related topics. Just the amount of knowledge that kind of comes. That is like the extent of the mentoring room. So this are everything that they kind of talk about in the mentoring room. They're always bringing new topics up. People really love the educational room. In addition to that, Peter maintains themagictrader.com, which has a beautiful glossary on there of different technical terms, and a Facebook group, and a Telegram channel, which I think I have a slide on that too. This new stuff that he's been doing on Telegram is really cool. So that's all stuff that he's offered, and the reason I kind of bring that up is he has a really good package that includes quite a bit of that. So in terms of the add-on himself, I do just kind of want to show the chart I had up. This is Johnson & Johnson. You can see right here where you had a yellow bar pop up on Johnson & Johnson, and it's just been going up. Your horizontal time risk is lining up. You had your buy spike. Once you kind of understand how to read the ingredients that Peter talks about, and you'll learn them, it's going to be very clear for it. The other thing that other things that I really like about the Magic Trader add-on is scanning. We've talked till the point where you're probably nauseous about scanning, but I love the ability to go in and just focus on stocks that have an opportunity. Let's face it, there's a lot of noise in the marketplace. There's like 6,000 optionable stocks that you could trade right now. What I want to be able to do as a trader is to be able to easily identify setups on a chart and easily identify stocks that meet that setup. And Peter's done a really good job of kind of organizing this in such a way that you can do that. I love the commentary as well. The commentary will go and outline all of the different scenarios and kind of throw that up on the screen for you. It does a really good job. So let me come back in here. The Magic Trader add-on is huge. It's got 58 indicators, 47 different scans, expert advisors, templates. The manual is how I learned Magic Trader, and I will say that it's really well put together. You could read it you could understand it just by reading the manual. But Peter has put together tons of resources to help you get up to speed with this. And let's go ahead and kind of go over to this side. One of the things that Peter has agreed to include with this is his Fundamentals of Magic Trader. This was a very extensive recorded series of seminars that we did over the course of, I believe it was 4 Saturdays. And we sat down and just, I just sat there and read a legal disclaimer, and then Peter discussed 20 hours of different topics. And this is kind of what's on the menu with that. So in terms of this is the Telegram room. I knew I had a slide on that. Here's kind of some of the stuff that they're just discussing in the Telegram room. What I want to say about Peter is he's just been doing it for 20 years. He's very, very thorough and very, very consistent. And the people that you can see him in the YouTube chat, the people that have been with Peter absolutely adore him. One of the things that really I admire about the room is the retention that's in the room. So in any case, here's what we're going to do. We're going to go ahead and do the Magic Trader Elite as a package where we give it to you for 3 months. That's normally a value of $597. We're going to do the Magic Option Equity Trading Education Alert Room, which is normally $299 a month. We're going to do that for 3 months. That would be a value of $897. We're going to include with the package, we're going to include that Fundamentals of Magic Trader, which is normally $999 value. And then we're going to give you access to that private Telegram channel. Normally that would be a value of $33.90. As part of the offer that we're doing for the conference, again, we just really want you to try it. We're confident that if you try it, you're going to like it. If you like it, you're going to keep it. If it helps you trade better, you're going to keep it. So what we're going to do is for instead of that $3,300 retail value, we've pretty much cut the price of that into third. It's going to be $997. You need to do that right away. You've got about a week to do it. That'll give you access to 3 months of Magic Trader, the options and education alert room, the Fundamentals of Magic Trader Elite, and then it's been a long week, Telegram Magic, Telegram private channel. So all of that's going to be available for you for $999. Go ahead and get that. You can do that. You do need to call us because there's a lot of stuff that goes into that order. We need to make sure that everything gets priced right. So you need to call us to get that. You can call us at 800-882-3040. That'll work here in the US and Canada. Or anywhere in the world. You can chat online with us and we can help you get that set up. Metastock.com/saleschat. So there you go. Give that a try. You're going to like it. 800-882-3040. Big thanks to Peter for coming in, all the work he's done with us over the last 20 years. We're all getting a little bit grayer, except for Peter. I don't think he ages. 800-882-3040. Thanks again, Peter.
Thank you very much to everybody also, and have a good night, and appreciate everybody's efforts to come in here.
Right on. Thank you so much, Peter.
Thank you.
I'm sure Greg's got that phone number, but again, I'll repeat it because I've got to remember. It's 800-882-3040 or metastock.com/saleschat. So without further ado, let me go ahead and do this. I do want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine, great magazine. They've been supporting us for decades now. You can get a subscription to Stocks and Commodities Magazine at traders.com. And of course, join our community. You can join our community at thetradersforum.com. Live market chat, market knowledge, community of traders, lots of different topics there as well. Hello, Mark.
Hey, Jeff, how are you?
Good. I'm going to, since your camera's on and you're ready, I'm going to have you help me with something a little bit different.
Why not?
Do you want to help me give away a prize?
Okay, I have to pick a number, right?
You've done this before.
Yeah,
Yeah.
well, I think you had me do this last time.
Well, that's what you get for turning on your camera early. All right, we're going to give away Jeff Tompkins' top 10. Oops, pasted a picture here. We're going to give away Jeff Tompkins' top 10 stocks for 2026. It's an ebook. He values it at $97. And to do that, Mark, what you're going to do is you're going to pick a number between 2 and 6,674. Are you ready?
Are you kidding me?
What would I be kidding?
That's a big number spread.
Yeah. Thank you for everybody that registered as well. It's been a great conference. What number would you like to do?
I'll use my birth year, 1948.
Okay. Okay, that is. Well, I'm not supposed to do this, but I'm going to give away the full first name and last name of who won this prize. It was Friend Trader. Friend Trader, congratulations, you won the prize. I'm sure that's your actual name, but you also have a Hotmail address. So I'm going to go ahead and I'll make a note of that. Would you prefer that we call you Mr. Trader or Friend? Either way, I'm happy. Okay. Let me do this. I'm going to actually give you a formal introduction, Mark. Mark has known me for 150 years.
Am I the last one on the
No, we got one more.
Oh,
we got one more. Yeah.
I'll keep it short. No problem.
You can, yeah. We're starting a little bit late, but Mark and I have known each other for 150 years. Mark is a great trader. He does some newsletters. He's going to talk about them. He's very, very good at gold. I'm interested to see what you have to say about gold. Gold's been crazy. It got a little bit more crazy last month. So we'll see what he's got to say. With Mark, one of the things that is like something to really respect about Mark, at least I do, he's actually been rated for decades at a time one of the top market timers around gold by Timer Digest. With Timer Digest, you send in your trades and they kind of grade who the best timers are. And Mark's won that prize many times. So let me go ahead and get you started. Is there anything that you would like to add to my formal introduction there?
I can introduce myself when I get started. It's fine.
Okay.
I'll do a quick bio. No big deal if you want me to do that.
Yeah, whatever you want.
Okay.
I just sent you the screen share.
Okay, so I got to find the Word document.
Got it.
From beginning. There we go.
Perfect. Mark, it's all you. I can see you, I can hear you, and I can see your slides. That means it's your turn, and it's my turn to get out of the way. So it's your turn. Go.
Okay. It'll only be about 30 minutes, so it won't run too long. But at the end, if you want to pull up some charts, if people have questions, we can talk about that if we have time. So thank you.
Okay. Sounds amazing. Good.
Thank you, Jeff. I don't know how you do it, working 24 hours a day for 4 days. You're amazing. So thank you, Jeff, and hello, everyone. So again, my name is Mark Leibovit. As Jeff said, we've known each other a long time. We actually launched my Metastock add-on indicator. I think it was 2011. So at least 14, 15 years that we've been working together. So anyway, I published the Leibovit VR newsletters, vrtrader.com. Believe it or not, I'm going to age myself here and date myself, but I launched it back in 1979. I've been doing this only about 45 years. So I was about halfway through that when Jeff and I, we met, and I have an indicator called the volume reversal, which is what the VR stands for. And that's pretty much what you're going to see on the charts. And I'm really narrow focused in what I do and the way I trade. You know, I don't use a bunch of indicators. I need to tell you that the VR is a tool. It's not a system. There are a lot of other things that you could complement it with. I do myself. There are other certain trading rules that I use which are not part of the Metastock screen, but the point of this is to show you the VR indicator. If you're interested in any of my newsletters, you see them up on the screen at vrtrader.com. If you sign up for any of them and you use a promo code half off, you get 50% off. So as you can see, I cover metals and cannabis and crypto with the blockchain letter and on and on and on. And if you're interested, let's see here, I'll pull up my book, The Trader's Book of Volume. I have a lot of people have signed up for this. Some have become subscribers. It's only about 500 pages, covers all the major volume indicators. And of course, there's a section on my volume reversal, but it's really a terrific book. We put a lot of time into it. So where other indicator type books, focus on price, we focus on volume and the volume indicator. So it's somewhat unique in that regard. And I'm pretty much a believer, as probably many of you are too, that volume precedes price. So I want to mention that. You can buy that on Amazon. You don't have to come to us directly, though. We'd be happy to try to help you out with that. When I launched my VR Trader, it was actually called the Volume Reversal Survey back in 1979, and that's my birthday, by the way, when I launched it, and subsequently we changed the name to VR Trader. Some of you may know me if you're an old timer, and I don't know how many of you have been around for a while, but I used to be at ELF with Louis Rukeyser on the PBS program, Wall Street Week, way back. I think the show was launched in 1972, went off the air in the 1990s. So for about 8 or 9 years, I was at ELF, did many appearances on the show, and also as an ELF, I had to provide a buy, sell, or neutral signal every week on the PBS program. In addition to that, I was very fortunate. For 30 years, I worked with Paul Kangas on PBS as well on the nightly business report. Some of you may remember me doing that, and the show went off the air just like Wall Street Week. But a lot of media exposure and met a lot of terrific people over the years. Now, in terms of media, I do a weekly podcast at housestreet.com. It's once a week. The next one we're going to do, I think, Friday. It'll be on this weekend. And it's just a podcast talking about markets completely. We talk about, we try to avoid politics and everything else there, though sometimes it gets involved in the commentary. But the bottom line is it's a weekly podcast. So subscribers get it. I also post it on my homepage. And this is a Timer Digest, one of the years that I became Timer of the Year on Timer Digest magazine. Now, Jeff had referred to that previously. I don't post all of them here, but this is a screenshot of one of them. Oh, by the way, if you read Chinese, the Trader's Book of Volume is available in Chinese, and that's just a screenshot of that. So the volume reversal is my indicator. It's basically defined as a change of price accompanied by a change of volume, and we're going to show a bunch of indicators here. But before we do that, I want to talk about my annual forecast model. I put this out every year, and it's based on cyclical patterns, seasonal patterns, volume work, but to a certain degree, just historical patterns in the markets. And this is just a screenshot of some recent forecast models that I put out. The jagged line, the straight lines are the forecast, and the little yellow line is the actual results. So this is how my projection was for the Dow in the last few years, just to show you there's been a pretty good reliability there. So it's like the weatherman. You create this forecast, and you always want to use your short-term indicators to confirm and look out the window, so to speak, even though you've made a forecast. But we put this out every year. We have put it out since, believe it or not, 1987. When at that time it called the crash, and spoiled me to thinking that I could forecast the market for the year in advance. And obviously not every year has been perfect, but in the last 3-4 years it's been tracking pretty well. So it's called the VR Forecaster, and I'll page all the way back up here to the beginning. If you see there in the middle of the screen, the VR Forecaster, that's the report. That's an annual report we put out once a year, and covers all the major markets. So if you're interested, go to vrtrader.com and click on VR Forecaster. So I just want to throw that out because we're really proud of that tool. It's, it all started because people say, what do you think the market's going to do for the year? Well, as a technician, as a trader, that's a very tough question to ask and fulfill. So we threw this thing together, and it seems to have worked for a while, for quite some time. So what's happening now in the markets? Well, obviously, we're going to cover a few bases here. We have a few minutes to chat it, so let's do it. And gives Jeff a break. Maybe he needs to have lunch or something, so we're not going to rush going back to the screen. Many of you are familiar with the CNN fear index, and currently this is a day or so old, but I interpret this inversely. So when it's fearful as it is now, the first reaction you would have is, gee, market, people are bearish. they're panicking, it's time to buy. Well, I've noticed it's just the opposite. When it's trending down, it confirms the selling. And when it's going up, it confirms the buying. So actually, if it's in a downtrend, it means the market's in a downtrend, and you shouldn't be buying the market just because it's fearful at that moment. And if the needle was all the way up there at greed or extreme greed, believe it or not, you were better off buying at that time because there's momentum to the upside, even though you may be chasing some stocks, but at least you're knowing the winds at your back, so to speak. So I use this in terms of the trend that the indicator is going, which currently is still down. So many are talking about what the Fed's going to do and not going to do with interest rates. And that's a pet peeve of mine because there's so many other things that the Fed's involved with. You know, I'm a bit of a contrarian, and I guess I'm a bit negative in this sense, but for decades I was influenced by the book, The Creature from Jekyll Island. You may have heard that book. It documents the creation of the Fed and a lot of the shenanigans involved with the Fed, even up to today. And we already know the Fed has done a very poor job, and there's even congressional discussion about limiting the authority of the Fed, or possibly even a couple of senators and congressmen have been created bills to abolish it. But the reason I bring this up is there's so much else going on here. As you know, short-term rates, what the Fed controls is irrelevant. It's really the bond market, which is the 30-year, 20-year bond, and that's really what you got to look at. But besides all that, on the screen here, we're looking at the M2 money supply. And despite the fact that the Fed hasn't done very much with interest rates to the downside, as many had hoped, money supply keeps going up, which means they're still pumping money into the economy. So if this was heading down, then we would really have to worry about a market crash or some type of shortfall. But it's not happening. So you have to look beyond the headlines, what's actually going on. The Fed's also involved in a lot of shenanigans. There was Freedom of Information Act that came out, some reports in recent years how they're investing in private companies and private bonds, and none of this is really disclosed. And one of the things Congress is trying to do is audit the Fed to really find out what's going on there. And I don't think the change of the Fed chairman, which is coming, as we all know, in the next couple, 3 months, is really going to change anything. The Fed really needs to be, really needs an enema. That's really the bottom line. But just want to point out that what you're hearing in the news, you really have to dive deeper to see what's really going on. And right now, they're expanding money supply, which is interesting considering interest rates are not part of the discussion. I do a lot of stuff in the cyclical world. Many people think this is extreme, but it's not at all. As a floor trader, which I did mention back in the CBOE when I started my career, I learned there are a lot of people that do use cycles in the market, and I look at everything. I remember there's a story that I always tell in these broadcasts, but there was one fellow on the floor. This is way back in the 1970s, and he's telling me, at noon the market's going to change direction, and it's based on a lunar cycle. And sure enough, the market reversed direction exactly when he said it would. So as a result, I keep following lunar cycles. And back in 1972 or 4, I forget, there was Ian McAvety, who wrote a letter called Deliberations, was on the Wall Street Week television program. This is before I joined Rukeyser on that program. And he had a whole program on the full moon and gold. And he would talk about how gold would peak out on the full moon, and you got to watch the movement in the lunar cycle because that would help you in the gold market. So as it turned out, that really wasn't the case, because we find out that sometimes you can get lows or highs on the lunar cycle. But Ian's work really influenced me, and over the years, so I tracked that. There are other analysts, I don't want to mention names here, but they're pretty famous ones who've put out charts comparing the movement in gold to the lunar cycles. So this is something which you don't hear about on CNBC or on Fox Business News or any other place, because people think that you're a wacko. But when you think about it, there are forces that are imposed on the planet, the tides, for example, with the lunar cycle. And above that, I want to mention too the seasonal patterns. You have, of course, you've got the winter solstice behind us, and we have the vernal equinox coming up in March. Well, there's also a correlation there, and this is, again, big picture stuff, and it's tied in a part to my annual forecast model for the markets. But if you remember when the COVID low occurred, the big panic back in 2020, well, it occurred the day the bottom was right on the vernal equinox, right on that March 22nd time frame. And that's coming up in the next few weeks, obviously. So I see these as change points in the market. You know, you've got the winter, and you got the summer and the spring and fall. So you have to pay attention to the big cycles of where we're at and what the markets are doing at that time. And often, as was the case back in March 20th, 2020, and even last year to a certain degree, you see these change of direction. So we cover this as well. So what I've done is, doing over the years, my volume indicator is great, and with a lot of technical tools are great, but you got to complement it with other things that are happening around you, and this is part of that process. So we do this at VR Trader. And this is the book I referred to, The Creature from Jekyll Island, regarding to the Fed. G. Edward Griffin wrote this book. There's been some videos on it. If you haven't read it or been aware of it, you should take some time. It's several hundred pages, but it's great on the background of the Federal Reserve. And as you read it, you realize why there may be reasons for some serious change there. But I'm not the only one that feels that way. So jumping over to Metastock and our volume indicator, we have a toolkit, the volume reversal toolkit, which Jeff and others created, that I created way back around that 2010, 2011 time frame. And if you go to that link on the screen, you can watch a nice video where Jeff and I we're doing like an interview, and we're going into details about the indicator, and it's pretty well presented. And it's something that would, if you don't get a lot out of this video, that would be something. So if you go to the Metastock website and you pull up the VR volume reversal add-on indicator, you should be able to pull up this video, and it goes into a lot of detail about what we're going to cover now in a very short period, and goes into a lot more detail than I can in this interview. But in any event, it is available, and this is being offered through Metastock, and I'm sure Jeff will give you some incentive toward the end to take advantage of it. But what I have to point out is there's no place that you can get the volume reversal indicator but here at Metastock. There were periods of times where I had the indicator on other platforms, which is not the case anymore. It's not common on any platform anywhere where you can actually see my VR indicator, and this is something you really should add to your arsenal of indicators that you may use. As you'll see in my charts in just a moment, I'm very stingy with indicators. I hardly use that many. I don't think that it takes that many for trading purposes, but that's my own bias. So basically, the definition of the volume reversal, it's a trend change indicator, and basically when we see a big move in the market, up or down, usually it is preceded by a change in volume. And I noticed this when I was trading on the floor so many years ago, where big offers were taken out just before stocks would move up, or big bids were hit just before stocks would move down. But the bottom line for the volume reversal, it's a change of price accompanied by a change of volume, off little or big trading lows, or little or big trading highs. So when I see that volume reverse, and if we get some other confirmation like stochastic moving in the right direction and so forth, it gives me confidence this is the time to follow smart money, either on the long side or the short side. So the one that we're going to show here, we have three versions of the volume reversal on Metastock. One's called the sequential, which we're going to show today. We also have the directional and the 2-day, and we don't have enough time to go into all those, but it's mostly important that you see the sequential, because this is what I use personally in my trading. And the definition of this is just a pure volume reversal on the screen as it occurs, long or short. The directional one, which we're not showing, filters out repetitive volume reversals. So it's sort of a filter in case there's a bunch of them, right next to each other. And the 2-day version is based on the fact that we tend to get follow through in direction of the volume reversal for a couple of days. So we create a little model that says, well, after 2 days, just take your profit if it's moving up, or take your profit on the short side if it's going down. So again, the directional and the 2-day we're not showing, but basically I want to show the sequential because it gives you the better idea of what the volume reversal is about. And believe me, I use this every day, and I'm always keeping my eye peeled for the VRs that are generated. The problem is, of course, there's hundreds of stocks. You're going to have to pick your universe of the ones you're following. Otherwise, you'll see if you generate a list as I do, you can have 100 occurring at any one time, and clearly you can't trade that many stocks or indexes. But it applies to all markets. So what we're looking at here is a typical screen. If you punch up the spiders, SPY, on Metastock platform, you'll see, it'll pop up here and it'll say the Leibovit VR sequential equities, and there's a little box on the left. And I can't move a cursor around because this is just a screenshot, but when you touch any of the little VRs on the screen, the little box on the left has instructions related to that little change. And typically, if you have a negative VR, it'll say short here, and it'll provide you the stop. But one of the main points I wanted to start off with this visual is that if you look at the screen, let's look back toward the middle part of the year before we had the tariff crash, so to speak. If you remember back last April, series of negative volume reversals were being formed before the big downtrend. And now we're in somewhat of a similar situation. Not only that, you're seeing the stochastic starting to turn down as well. And this is a weekly chart. So this is sort of a warning sign. And I don't want to see a lot of negative VRs, which are those little red down arrows consecutively being formed. And I think we're setting up for a much bigger decline. Maybe it'll occur into the vernal equinox coming up next month, maybe sooner. But something is coming here, I think, in the next few weeks with you see these type of negative VR patterns. I drew a horizontal line on the screen. I guess I can move my cursor to it here. And basically, those are the highs before the market had the April decline last year. So that relates to about let's say 6,100 in the S&P in that area. Okay, so we'll go back now to the previous one. Sorry. So that's where I think we can pull back to. I think this horizontal line here is what these negative VRs are warning us about, that when we do get a shakeout, and obviously I could be wrong and go up first before it goes down, but I'm not chasing the market with a lot of negative VRs here. But if we do get a shakeout, whether it's because of Iranian conflict or some kind of other financial black swan that suddenly materializes, or political black swan, I think that's where you're going to see a correction. So in terms of, yes, we trade every day, and I still buy and sell stocks, and we try to limit it to a handful of names so we're not caught in case there's some overnight sudden crash type situation. But I think ultimately this is where the market's headed back to, and that would provide, I think, a more decent entry point for the market. So I just want to start that off with the S&P. So I'm a bit of a bear, even though I have to tell you we still traded a bunch of stuff on the long side. We've been doing well with some of the energy stocks and oil, for example, and even names like Procter & Gamble and others, which I think we have a visual coming up in just a moment or so. But that's sort of my current view. Agnico Eagle obviously has been a big winner for traders who have been bullish on gold. It's been the premier name. It probably has been the premier name for decades in the gold industry with all their gold assets in Canada. But the reason I showed the chart is not to sit here and predict gold day to day in terms of the gold movement, but in terms of how the VR signal, works with the stock. And it's very reliable. And from a trading point of view, this is the kind of stuff that I use, and I would encourage you to use using the Metastock platform. So, for example, here I'm circling here. This was back in December. You get a positive volume reversal. The stochastic is sort of in an uptrend, but this gives me a buy signal. Okay, so as a trader, if I'm looking for a 1, 2, 3 day or 4 day or whatever play, I buy on the VR and I keep my stop just to the low to the left of the volume reversal. So if we take out this high and we start a rally phase and volume picks up, so we're getting a volume reversal off the bottom, this tells me jump in. And I generally trade in 1, 2, 3 day time frames. Conversely, just a few days later, negative volume reversal comes in, the stochastic is in a downtrend, and look, you get a nice 2-3 day decline in the stock. This is how I use it, okay? So this chart's about 3-4 days old, but the short-term trading signals that you get with the change of volume, the smart money buying or selling the stock, is what I'm really interested in terms of using the VR. And I'm just using AEM as an example, but it's a good one since I use it all the time, and it has, you know, made me some money. But again, I'm a trader, and you know, you can take you can convert this to weekly charts. You can look at daily charts and see how it works on the weekly, even on 30-minute basis. Some trader clients of mine look at 5-minute charts on it, and there is some correlation there as well. But in terms of my main use, it would be on the daily. NVIDIA is everybody's favorite. I think it's setting up for a bigger correction. It's been going horizontal here, as you can see, for several weeks, and I'm seeing more negative VRs than positive ones, so there are a mixture there. So there's earnings coming next week. Obviously, it could spike up and change the volume pattern. But my feeling is, as the S&P needs to pull back into this time zone here, I think NVIDIA needs to do so as well, which would get you down to about 150 in the stock. Now, maybe we'll have a big spike next week and then it'll come down, or maybe I'm just dead wrong and a series of VRs will take it off to the upside. I'm neutral. In terms of a long-term view. Short-term, I'm actually holding an inverse ETF on NVIDIA, betting that at some point here in the near term, we could see a correction back to these numbers. So again, a little negative on NVIDIA. All right. Constellation Brands. This is also one of my favorite trading stocks. Maybe you know this, Modelo beer and so forth. It's not one of the high-flying Mag 8 Mag 7, Mag 8 stocks. They actually refer to Mag 8 now, but great correlation in terms of the VR pattern. Way overdone to the downside, and looks like it may have bottomed. So maybe people are going to be buying beer now. After all, there was a period of time. Of course, they also produce liquor, but I actually trade as much Constellation Brands as any other stock. I mean, STZ is the symbol. I know it sounds crazy because everybody's trading Tesla or something else, but it's a really honest stock technically. The little VR signals really work well on it. And I know it's a $150 stock, but it trades as it did today in a 3 to 5 point range, and it's really a nice little trading stock. But in terms of trend, I think it's bottoming, and it's probably headed, way back up toward the 180, 190 level, if not much higher over time. They also own a big chunk of Canopy Growth, which, as you recall, is one of the former high flyer cannabis stocks. I don't know how they would benefit if cannabis took off, but I still think they own a chunk of the Canopy Growth. CGC is a symbol there. It's only $1 stock now, but perhaps that would help them if cannabis took off, and there is talk of rescheduling, as you know. There were two versions of it here on the screen. One was a weekly and one was a daily chart. This is the weekly chart. I just flipped back to the daily chart. That's a daily chart. That's the weekly chart. Give you a sense of how the VRs work in different time frames. So a lot of positive VRs here on the weekly chart before it took off, and before we had this little shakeout here in the last couple 3 weeks or so, we had a negative VR there. So I checked the weekly and daily. I checked the stochastic underneath, and the moving averages on the screen I just put up for reference. These are pretty traditional. I didn't really go into much detail, but you got your 200 week or 200 day, and your 50 and your 20 and your 150. So I stick a bunch up there just to see what everybody else is thinking. But of course, the 50 and the 200 is what everybody pays attention to. His NVIDIA already showed you that, I think. Newmont Mining, of course, is the big gold company stock. I remember trading the stock in the 70s back in 2011 when gold was peaking out back then. It dropped all the way down, I think, to about $20, and now it got up over 100, the mid 130s. In any event, a lot of correlation here on the VR signals. Great trading signals here. VR runs up 2 or 3 days. Negative VR, you only had a 1 day pullback. Positive VR, 2 or 3, 4 days up. Negative VR follows through for a day. So a lot of good correlation here on the volume reversal changes here if you are trading Newmont mining. And this is another reason I put this up as an example. So I'm watching the market, I'm watching gold, but if I see a positive VR or negative VR Newmont, including some of the other gold and silver names, obviously I pay attention to it. This is a silver ETF. It's for the junior silvers, SILJ. There's another one that's one of our favorites here that we trade, and it's also been in our newsletter. Also has some good correlation on the VRs, and it may, in a sense, outperform silver itself because many of the smaller silver stocks are part of this index. And the theory is now that with silver, even though it's off its $120 high, it's still way up compared to where it's been, and many of the small silver companies will, and hopefully will be making much more money now. And the returns that we're going to see on the profit side for some of these smaller silver companies could keep this index up, whether silver really, continues up or not. So something you should keep an eye on. But again, as a trading tool in silver, it's a great little one, and it follows many of the smaller names out there versus, the big names that you may be more familiar with. You can't talk about the market without mentioning Apple Computer. Everybody probably owns a stock and trades it. A lot of great signals here. I mean, but when the stock came down here in the last couple months, we had negative ERs pointing toward it going down, and then we get a positive in here, and then it rallies for a few days, then another negative, and it really comes down, and then we get a positive ER over here. It's just a few weeks ago in January, and it takes off for a few days. And then here just recently we had negative VR, and the stock's been weak here in the last few days after this little negative VR signal came in. So again, presenting it on the spirit that this is a signal oriented stock that really has a great correlation to the positive ERs, the negative ERs. And sometimes you get a false signal. I mean, nothing's 100%. You get negative ER and immediately reverses, and a positive ER and it goes up. But for the most part, I would say the 70 or 80% correlation here, that if you get a signal, you get that follow through. And ideally, for a couple or more trading days, it gives you a trading edge. And in some instances, it could run for several days. But this is part of what I'm presenting here. It's not a system. It's a signal indicator that complements your work. And it's what I mainly use in my own trading. And it gives me my signal to buy and sell. And I do my homework on it and say, well, how much do I want to make on this trade? Am I looking for 2 points, 5 points, 10 points? And then I'll look at support and resistance levels, and I'll see where we are, overbought, oversold. But as a general rule, I take a 2-day, 3-day trade, and I'm happy. And this is why my service is VR Trader. I'm doing this because I enjoy doing it, and you get good correlation on the signals. So this keeps you glued to the screen a little bit, but you don't have to. You can see a signal and check it the next day too. But that's what it's all about. And this is another good trading stock. This is Nail. This is your, I guess, your construction supply ETF. It had a big correction. Feeling was the housing industry, home building industry had gone to hell, and then suddenly, the talk was that rates were going to come down, and other names. I think we have Home Depot coming up here in just a moment. Were plays, but big volatility, great correlation to signals, negative VR, and it just comes plunging down here, 2-3 negative VRs. You get a positive VR and it takes off for 2-3 days. This is again a couple of days old on the chart, but just great correlation on the signals here with Nail. So this is a great ETF to trade, whether you're bullish or bearish on the construction industry or on home building. On the bull side, you get these signals, and sometimes it's subject to rumor.
Hey, AJ. Just a second, Mark.
Yeah, I'm sorry.
I just wanted to let AJ know that his camera's on so he could turn it off. There we go. All good. Your turn.
Oh, okay. Somebody else came on. That's no problem. Okay. We'll be done in just a couple of minutes. The great correlation here on the VR signal. So again, Nail, great ETF. I discovered it only about a year ago. I wasn't even aware of it. I was looking at home building stocks and so forth, but really volatile. I mean, this thing came down from 100 back to 40 and then back up to 70. Great trading stock. This is a daily chart on. I just showed you the weekly chart, so I'll move on. Silver, I already showed you that. Procter & Gamble's became a favorite here in the last few weeks. I think Jim Cramer on CNBC was talking about it as part of his model portfolio. In any event, we concurred because we got positive ERs in it right at the bottom. And maybe it had something to do with him mentioning it on national TV. I'm not sure, but we jumped in. We already got out. I think it's a little extended here, and I think it needs to pull back. But nice correlation on a blue chip name like Procter & Gamble, which is part of the reasons why the Dow Industrials has done better recently. We've had names, like Boeing and Procter & Gamble and other Johnson & Johnson, other big names in the Dow, which have been pretty much ignored since everybody was focusing so much on the Mag 7 stocks. But anyway, great correlation with a blue chip stock, and Procter & Gamble is one of them. And that was showing you both the daily and weekly. This is the weekly chart, and that was a daily before. Carvana got killed here, actually, the last couple of days, more so than you're seeing on the chart. But everybody got excited about it, that it ran up big. Then we got a negative VR, came down, ran up, negative VR, came down, and big negative VR, and it really came down, another negative VR. So big topping action and nice trades on the short side in Carvana, which had a huge run to the upside. I think there's some question now about their bookkeeping or some of the numbers that had come out in the last couple of days. If this was updated as of tonight, you would see that it's lower than it is right here. In any event, the most recent signal was a negative VR here. It was last week. So just another great stock in terms of correlation with the VR signal. Now, any stock you pull up on Metastock or using my indicator, you should pull up and see how the VRs relate to that particular stock or index. You may find some that, for whatever reason, don't work that well. This is generally not the case, but it could be the case. So you want to obviously watch and trade the favorite stocks that you like that have correlations with the VR indicator, and hopefully fits in with your other trading tools. And that's pretty much it, Jeff. I sort of want to cover some good examples here, and I know we're running a little behind time. Maybe I caught you up.
We are not. You're doing fine, Mark.
Okay. Anyway, so that's it, VR, and then this is where, if you want to go to my newsletters and where to go, and the half off promo code, and but don't forget to sign up for the Metastock, the trading tool, which is where you can get these VR signals.
And I don't see a link on that address. Where exactly should we put in the chat to go to get the newsletters?
Oh, vrtrader.com. Sorry.
Okay. No problem.
Or you can just type in Leibovit VR newsletters, and it'll come up as well. But VR Trader, Victor Robert, vrtrader.com is the shortcut.
Right on. Okay. Well, we've got that. A great job today, Mark. We did have a couple comments, and we're not really pressed for time, so let's talk a little bit about it. Al wants to know, do the indicators work on futures too? Do you do gold futures, or do you primarily do ETFs? What is it? What are the best ones that they work on here?
Everywhere. They work on all platforms, all time frames. I don't use the short-term time frames. I have some traders that put on 5, 10-minute, 15-minute charts, and they get a VR intraday and they trade it. But in terms of futures, in terms of ETF stocks, anywhere you have a price volume relationship, the VR is for them, and you can pull that up on the Metastock platform. So my suggestion is, pull up your future, your ETF, your stock, plug in the VR tool, and you'll see the VRs, and then you'll find out what the correlation is, and I think you'll be pleasantly surprised.
Cool. Patricia says, thanks for all the great inspirations and ideas. So,
well, thank you. I'm happy to do it.
Great to have you, Mark, as always. I really appreciate everything. I'm going to go ahead and turn on my camera right here, and I'll take over the screen share. I'm going to talk a little bit about the add-on that you showed, how to get it, and thank you for spending some time with us.
Jeff, I wouldn't want to spend my time doing anything better than that. I enjoy it. Thank you.
Oh, go on. Thank you.
I love talking about my work and talking with you guys. Love it. Thank you so much.
You bet. Thank you, Mark.
Bye-bye.
All right, great, cool. So to talk a little bit about the add-on, we do have the VR toolkit. And I'm just, give me just a second. I'm going to go ahead and just do this. Okay. All right. And it does include the indicators that Mark talked about, the VR reversal, the directional, and the sequential. Of course, it's going to have scanning. It's going to have the expert advisor to kind of help you understand everything. A tool that's really been put together by Mark, one of the top market timers. The subscription price on the volume reversal toolkit is only $99 per month. If you buy a month, you can get the second and third month for free, just like most of the subscription offers that we have here. You can do this by you can call us at 800-882-3040, or you can go to metastock.com/sales chat or metastock.com/conf promo to sign up online. So all of those options will work as well. So as we kind of get into our last speaker of the day, I want to say, if you haven't yet, join the tradersforum.com. You can do it for free. It's an active community. We've had a lot. For everybody that's joined the Traders Forum this week, thank you. It's good to have you there. If you join the Traders Forum, you can chat with other traders, learn about the markets. It's a community of traders helping traders, and you can join for free. thetradersforum.com. So, Greg, let's do a prize, if you don't mind.
I don't mind giving things away. I'm always up for that. Let's do that. By the way, now this comment doesn't make any sense because you made it over an hour ago, but you're not making anybody nauseous by telling him how great our scanner is. You said that a while ago. Like, nobody's sick of that.
I think what I meant to say is I've said it ad nauseum.
Well, I don't think you want to say it right now.
The scanner's great. I'll say it again in a minute too.
Awesome.
Yeah.
It fills my heart with joy when you say that.
Cool. Well, why don't you say it?
You know, whenever you ask anyone what's the greatest, and I'm not even joking, when you ask most of the the professional and expert users of Metastock what their favorite feature is, more often than not, it's advanced scanner. Some people have scanners, but it's not as good as Metastock. They can't do what Metastock can do.
All right, cool. And do we have a special offer on it, where like if you buy a month, you can get a second and third for free?
Well, not just the scanner, the whole darn program.
Right.
We got a two-for offer.
What data? Global?
Say again?
All around the world data? Yeah, okay. So we'll do this first. If you want to, Metastock has been rated the best software program in its price category for decades now. There's a reason people vote for it every year. I think it's because it's helpful for them. Pricing on Metastock starts at just $75 for a delayed version, $75 per month. That'll get you Metastock. That'll give you the ability to scan, test trading ideas. It'll get you the patented forecaster. It'll give you all the hundreds of systems that are built into Metastock. All of that will be included. And if you buy a month, we will give you the second and third month for free, which means you can try it out for $25 a month. And I guarantee that Greg spends more money on tacos each month.
I spend more money on what?
Tacos.
Yes. Oh, yeah. Then that, yes. Well, yes. That's not untrue at all.
What did you think I said?
Tacos are muy bien.
All right.
But now, isn't it time to actually give? Isn't this the big giveaway? Yeah, it's before the last speaker.
Oh, it is. I was gonna go to the list. I was gonna do that. Okay, so we were gonna give away 3 months of Metastock. We just talked about that ad nauseum. We're gonna give away 3 months of the Metastock Zenith, which is a professional grade news and information package powered by Reuters. They spent $1 billion designing it. It's backed by 3,000 reporters and 300 different news bureaus. Literally, if you're like a hedge fund, you're subscribing to a similar service, only you're paying a lot more for it, especially if you win for free. We're going to give you 3 months of Learn Metastock, which is the training that Kevin came and talked about, the hundreds of hours of training that's available as part of that. So we're going to give away all of that in a package to the winner. Now, Greg, I've talked a lot, so I'm going to let you explain how we pick the winner. Go ahead.
Is it the number or is it the through the comments?
It's audience interaction. Yes.
Oh, okay. So yeah, we always appreciate it when people on GoToWebinar. Well, and the reason we pick it from GoToWebinar is because those are the people that have actually registered for the event. If you're in YouTube, we won't be selecting you from the comments because we don't know that you registered. But if you're in GoToWebinar, we know that you registered because that's the only way you get into GoToWebinar. Maybe that was too much to explain. At any rate, Jeff is going to go. We encourage your comments and questions during this event, and we get a lot, and we really do appreciate it. And I know our speakers appreciate it. So to encourage that, the last and best prize of the day, the Metastock package, is chosen by going through those comments to find the winner, rather than just randomly choosing a number from 6,000 people. And that also gives credit to people who are just here and
I wanted
showed
to
up.
see this slide again. The offer for VR Trader is, thank you for your interest, Al. It's $99 per month, but if you buy one, you can get a second and third for free. And you can.
Oh, is that what we're talking about?
No, Al asked me to show the offer for VR Trader again.
Oh, okay.
Well, I would be happy to oblige you. We're not pushed on time right now. Here it is. You can do this at metastock.com/conf-promo. You can call 800-882-3040 and metastock.com/sales-chat. Al, thank you for that question. Appreciate your interest. Okay. Now what we're going to do, I think Greg did a pretty good job of kind of laying it up, is I'm just going to scroll through the comments. I'm going to tell Greg when I start. He's going to hum Jeopardy 3 times in his head. When he's done humming Jeopardy 3 times in his head, he's going to say stop, and whoever made a comment where I stop is the winner of the Metastock Mega Prize. So, Greg, I'm going to go ahead and start.
You know, I can't think of Jeopardy. All I can think of is the dating game song or something that Tijuana Brass does. Go ahead. Stop. Actually, that's not even Tijuana Brass, but it doesn't matter.
Scott Allen with the comment, being wrong 75% of the time and being married are the same thing.
Oh, so marital slanders now are the way we're going. That's it. That's great. That's awesome.
Congratulations, Scott. You won.
Congratulations, Scott.
All right. Greg, thank you for the assist. Appreciate it.
You are welcome, and thank you to AJ for his patience.
Yeah.
Although we're starting just a little bit early.
Yeah, we are. We're not.
Hello.
Hey, AJ, I have a question for you.
Well, I got to say that was Manamana from the Muppets.
Yeah, I realized that, and I was going to say Manamana from the Muppets. I thought, no, that's too obscure, and no one's going to know it. And then AJ just pulls it right out of his head.
Yeah, because I just happened to be binge watching. Somehow I found it on one of these streaming channels, and I've been binge watching the Muppets from the 1970s.
I watched that just the other day. This is such a coincidence. It's from the very first episode of the Muppets.
It's from the first episode, and it's
many
got
people don't realize that that's where the song came from. It wasn't from anywhere else. It was okay. Well, I'll just. Should we talk about this more, AJ? Did you want to get on to trading? And
I've got a question for both of you, since I've got both of you on the line.
Yeah.
We haven't really had a lot of technical issues today, so I've got some dad jokes parked in the rear. So, if you guys are ready,
sure.
Why do melons always get married at the church?
Because they can't elope. Boom. With that, I'm out.
Manamana.
Okay. Let's get serious a little bit. It is getting long. AJ is a big friend of Metastock. Iqbal says that sounds like he was humming the Muppets movie theme. And Bill says, too funny. I don't think he was saying that about my cantaloupe joke. And Al says, thank you. Okay. AJ is a good friend of Metastock. I've known AJ. We talked earlier today about how I keep track of time based on where I live at the time. I've known you since California, which puts it in the 15 to 20 year mark.
Mm-hmm.
So,
that's
and then AJ does a lot of really cool things with charity. I think that's a cool thing that I'm going to note. And I was actually talking about kind of your trapeze skills with Greg a little bit earlier too. So
that's right.
I will let you give out your professional skills during your turn. Let's go ahead and get you started. Hold on just a sec. I mean, we've kind of downgraded to the point where we're humming the Muppets tune. So it should ask you if you want to share your screen.
Yep, it's coming up now. There we go.
All right. AJ, I'm very excited to hear what you have to say. I'm going to go ahead and get out of the way. It's your turn. Go.
All right, thank you. Yeah, that's exactly right. I've known Jeff from when we lived on in the Bay Area or a little bit south in Santa Cruz, and he's right. I'm in my early 50s, but about 8 years ago, I had all this free time because I'm an end of day trader, so I do my stuff in the evenings. And I walked into a local circus school where I and decided I wanted to live my dream, fulfill my childhood dream of running away and joining the circus. And so yeah, around here in the Washington D.C. area where I live now, um, I'm a little bit of a trapeze performer. But that's not what we're talking about today. We're talking about a trade that I like to put on um, whenever it presents itself as a hedge to my portfolio. So, and it's actually been paying out quite a lot recently because there's a lot of things with market predictability that's like going in the toilet, and a lot of the rest of my portfolio with either directional trades or I'm an options trader, by the way, and we'll talk about that more. But directional trades or trades, the majority of my active trading portfolio gets under stress when something crazy happens, like, I don't know, we're going to take over Greenland or something like that. Something crazy happens, and this particular trade thrives on craziness. So let me get into it. I always like to start off some of my presentation. I've been keeping track. I've been doing this teaching options trading since 2003. So we're coming up on 23 years of doing this. And I keep track of what the folks have been telling me throughout the years. So I just want to go through some of these things because it just is an interesting thing. Like, people have said, I don't actually have a real strategy. I keep Frankensteining ideas from presenters and hoping they add up to an edge. I'm only going to cover a couple of these, but I'm chasing alerts and guru calls because I don't trust myself to read a chart. I keep breaking my own rules. I never really had rules to begin with. I size too big when I'm desperate to make back losses, and I size too small when I need to be committing. Every time, here's another one. I don't know how to plan a trade. I'm entering without knowing my exits. I don't understand risk. I think I'm managing it, but I'm probably not. These are all things that folks keep telling me throughout the years, and these are ones that repeat themselves. I hate that I'm trading emotionally, but I feel powerless to stop. I'm afraid I'll always give back my gains because I don't know how to manage my winners. I don't know if any of you resonate with some of this. I'm terrified I'm going to blow up my portfolio again. Maybe I'm just not smart enough to learn this. I mean, now we're getting even personal about this. Maybe I don't have the discipline successful traders have. Maybe I never will. Maybe I'm just wired wrong. I panic fast. I think slow. What if I'm a dreamer pretending to be a doer? Oh, yeah, that was a good one. Maybe I'm too old to finally get it. Whoa. Um, what if I'm the only one here who still doesn't understand the basics? I feel like everyone gets it, and I'm the only imposter. And I just want to just give you, wow, we've got pages of this. What if I can't fix what's broken in my trading? What if this is just another cycle of hope, effort, failure, and then guilt? Um, I want to let you know you're not alone in having a lot of these feelings when you're an active trader, right? What if trading becomes just another thing I quit? And I want to impart on you how important it is to continue to be consistent. Use great tools like the Metastock platform. Be consistent, be disciplined, because here's the facts, right? And by the way, my whole presentation is not just PowerPoint slides. We've got some actual stuff we're going to look at. There's a lot of uncertainty with what's happening in the world right now. But if you break down what's happening in the markets, if you play it right, you can be set up for months, if not years to come. And part of that is what I'm going to be talking about today, is how to make sure you've got a hedge in place that when everything else goes to pot, this particular trade pays back beaucoup, right? Remember that anything in the markets, it's money is not created or destroyed, despite the talking heads that start raising alarm bells. Oh, this many trillion disappeared in the markets today. remember, in the markets, it's just a place for money to go from one hand to another, from one person to the other. So the key is always figuring out how to be on the right side of that equation. A little disclaimer, and I know you've probably heard all sorts of the government disclaimers throughout the whole event, but I just want to, this is the one I do. And if you ever come work with me, I'll give you the official one, the terms of service. But I just want to let you know, I've been doing this for almost 30 years, right? I've been doing this since my mid 20s. You're not going to do as good as me because I've just been staring at this for that long, and I've been eating, breathing, and teaching this stuff for that long. I consider myself a goat when it comes to options trading, being very disciplined. And I've got it down where I'm just spending a couple of evenings. I'm an end of day trader, so I like to have my days free. When I left my last job at Hewlett Packard, which was August of 2005, I didn't want to create a new job for myself. I tried some day trading and all this stuff, and that wasn't for me. I wanted to get this. For me, it's more of an end, means to an end. I'm not here for the journey. So I'm very disciplined. I'm very structured as to what I do. I have a recipe that I follow every night. So let's talk about this VIX thing. So a lot of you probably already understand this. This might be review, or I might wind up telling you a little something you didn't know before. But this VIX is basically a measurement of implied volatility on the S&P 500, and it comes from the options market, right? The difference between historical volatility and implied volatility. Historical volatility is actually seeing bars that, have massive highs and lows and massive difference between open and close, right? We can use true range or average true range to get an idea of historical volatility, but implied volatility is a measurement of the kind of like anxiety we have about what's coming up in the future. I always tell my folks it's kind of like looking out the front window of your car at the road that's coming up, and kind of the expectation on a long road trip of what you're going to see over the next days as you're driving from the West Coast to the East Coast or wherever you're going, versus looking in the rear view mirror through the backlight of the car at where you've been, right? Where you've been over that territory. You know what it was like. If you were going over the Rockies or if you were going over the Appalachians. But looking forward, it's more about what you might expect, right? And so that's what implied volatility is. And how do we actually get a measurement of that? Well, we have the options market. We have this derivatives market. And this derivatives market, we can actually, and this is how the VIX is calculated. We can actually pull out from the option prices the things like, what the underlying symbol is doing and what, the effects of having an expiration date on these contracts. You can actually mathematically pull that out. And what you're left with is the supply and the demand for these vehicles, these options. And as you can imagine, when people are anxious about what's going on in the future, like the next couple of days, they'll start buying options as a form of insurance, right? As a form of hedge. And so the prices of options, the demand for the options go up, the prices of the options go up, and that gets calculated. At the same token, when people feel confident, that demand goes down, the supply goes down, the price of the VIX goes down. Oftentimes, this VIX is referred to as the fear index, or fear versus confidence index, right? And I wanted to point out something. Let me bring over, I'm going to bring over actually my options trading brokerage software really quick. And I'm going to look at the VIX since the 1980s. So like the last 40 years. And what you're going to notice here is, first of all, I've got a dotted line here. Let me see if I can zoom that a little bit. This charting software is not nearly as good as like a Metastock, by the way. You'll notice I've labeled some levels like my over anxious versus overconfident levels, and I've got a dotted line. This dotted line on my chart is not a horizontal line. It's a best fit trend line or a linear regression line for you people who are familiar with statistics. It's linear regression is just the mathematical way of calculating a best fit trend line. And you'll notice it's pretty horizontal, right? Because that's overall our emotions. I mean, this is for any of you psychology majors out there, this is like a quantification of people's emotions. And as this goes down, it means that we've been confident over those years. And as it goes up, it means we've been fearful over those months and years. And the cool study is when we are confident, I mean, it's the way humans are wired. We don't get that confident. We're always a little bit on edge. Maybe it's that caveman, like I'm ready to jump and get that woolly mammoth when it finally runs by, right? But we always have this tendency to be prepared for the worst case as a tribe, as a species, right? So you'll notice that we never have spikes of confidence down, right? It's not like all of a sudden I'm really confident and I trust everybody, right? That trust is earned. You've heard that since you were probably a kid, right? You never want to trust anybody without having a little bit of like hesitation towards that. Well, notice the opposite. Like here is the 1987 when the market crashed, when the tax code was rewritten. Here's the S&L crisis from the early 1990s, dot-com boom and bust right here. Here's the 2008 financial crisis. As you can see, I'm pointing out, you can see here's the pandemic over here. Here's some of the stuff with tariffs towards the more recent side. So when the proverbial poop hits the fan, we react, and we react aggressively by buying these insurance vehicles, these options, right? Whereas when things start to calm down, we're very trepidatious about relinquishing all the insurance, right? We're very slow to it. Takes a long time for things to be smooth and calm before we start saying, okay, I can go without hedging my trades. And that's what is so cool about the VIX. We never get that confident, but when something happens or something we anticipate is about to happen, man, the VIX goes through the roof. So once we understand this pattern, and I'm going to bring this chart now from looking at the last 40 years to looking at the last 6 months, or maybe I should look at, say, the last year or so. This is right here back in April. We announced that we were going to change the whole way that we do things here in the United States. Instead of a free trade economy, we're going to go back 100 years and start issuing tariffs against all of our trading partners. That freaked out investors and they reacted, right? And then, you've got a couple of things over here. I think this little pop here was the whole Greenland thing in the beginning of December. I think one of these might be the Venezuela thing, or maybe Venezuela was right here. I can't even keep it all straight. But there's a lot more events going on these days that are causing investors who are trying as hard as they can to rely on the organic price action of buying and selling. There's a whole lot, it's almost like you need to have your Twitter or your Truth Social or both up and running in parallel with your indicators and your charting patterns to really understand what's going on. There's just all these external stochastic shocks affecting price action, right? So knowing that we don't get that confident, but that when we get afraid, there's got to be a trading strategy that we can apply to this that'll profit. Because a lot of times when we have these moments where investors go crazy, a lot of our portfolio, a lot of our trades are now under stress. And we're like, oh my gosh, I had this hypothesis, this trade theory for this particular trade, but now it's all throughout the window because through correlation, through ETFs and all that good stuff, my individual stock purchase is following the rest of the market out the window. Well, how can we now have a trade in place as well that could, offset and perhaps even make our portfolio win during these times of stress? So that's what I'm talking about. Okay, so you get the idea. Markets are driven by human emotion. Fears move faster than confidence. Fearful markets cause investors to seek protection, driving up option prices in the VIX. Confidence builds slowly. The VIX rarely drops as sharply as it spikes. This asymmetry creates opportunity. Okay, so I'm going to be using options to trade this. This is my specialty. I've been using options, since the late 90s when I started doing this. And a lot of people, especially retail traders who have played around with options and then got burned with them, are using them as stock replacements, right? So they're basically looking for a stock move and then they use a leveraged option. And a lot of times they don't calculate the risk correctly. So even though if the trade goes in their direction, it pays back beaucoup a lot, when it goes against them, it also makes them lose a lot. Here's why I love options, right? When I'm trading just an individual stock or an ETF or an index, there's pretty much one strategy that I can work with. I buy low, sell high. Right? If I've got a margin account and I've got it set up with my broker, I could also short, right? I could sell, sell to open and then buy to close. So maybe I have two strategies at my disposal. But with options, through picking different options with different strike prices, different expiration dates, and also combining options into multi-leg strategies, I can profit on things going sideways. I can profit on time passing by because options have an expiration date. They're called wasting assets, and you can actually make money off of that variable of an option. And even better, what we're talking about a little bit today is making money on fear versus confidence, right? So it gives me the flexibility to be able to look at a pattern, a repeating pattern, like in this case, the asymmetry of confidence versus fear on the VIX, and find a appropriate strategy, option strategy that would make money on this particular pattern versus just having two options, going long or going short. So that's why I like them, the flexibility. Now, of course, with all flexibility comes a little bit of complexity, but again, keeping it as an end of day trader and just repeating and getting your experiences, it's like, that Volkswagen commercial I used to see when I was a kid. Tell your significant other that soon the standard shift becomes automatic, right? The more you use something, the more it becomes, you become unconsciously competent at doing it. Okay. I know some of you know me already. I've been on the Metastock events on and off over the years for, gosh, I don't know how long, but just a couple of bullet points. I founded a company called Trading Trainer. My peers have labeled me as the world's most disciplined option trader. I actually think behind my back they call me the laziest options trader because they know I like to think of myself as the most efficient option trader. That's because I like to get from point A to point B as efficiently as possible with as little stress, as little, risk to my portfolio, the most return, but also the least amount of time because I got a trapeze to fly and I've got a 5-year-old daughter, despite being in my 50s. I've got a 5-year-old daughter I'm hanging out with. So these are things that take priority for me. So I like to be very efficient, very disciplined. And some people who are like, well, aren't you watching the market today? No, he's a lazy option. No, I'm just very, focused on what I do. I've been publishing daily insights since 2002 for my participants. I wrote an ebook in 2005 where I still to this day find it on very successful option traders' computer. They're like, hey, do you remember that? This is one of the best ebooks I've ever read. There's a home study course I made almost, 2 decades ago that still people are saying is their Bible for option trading. And I just want you to know that I'm a learner just like all of you. I got a degree in engineering I never used any of those degrees. Instead, I went into marketing. My most notable job working for Hewlett Packard in the marketing department. I'm good at talking to engineers. I speak their language, but mainly I did a lot of commercial business and investing for Hewlett Packard. Lately, since I have been running this company for the last almost a quarter century, I've been focusing on being able to teach what I know to others. I call those accelerated learning methods. They work very well, especially for adults that haven't been in school for a while, right? So I want to be able to convey what I know to others. And just know when I first started, gosh, I lost really bad. First of all, when I started in the late 90s, they didn't really have these multi-speaker events on GoToMeeting and YouTube, right? You had to go to a hotel. So you'd go to a hotel after seeing something in the newspaper. You guys might remember. You go to a hotel on a Saturday for like a couple hours. Next thing you know, you've forked out a couple $100 and you're coming back for all day Sunday. And then after that, you realize you're on an airplane for a 5-day event somewhere, all to learn somebody's method. So I spent $27,000 on seminars that first year. It's a good thing, by the way, that cost more than my undergrad degree, but it's a good thing I was working for somebody in Silicon Valley and, living with a couple of guys, sharing the rent, didn't have a family yet. So I had the money to spend, right? I spent that on the first year, but then just doing trades in an undisciplined way. In addition, I gave back 85,000 that first year, and probably way more than that over subsequent years, making stupid investments. And I quickly found out whose programs were actually legit and who was just selling me programs for the sake of program. Here's the code. I'd like you to write this down so that you're never one of the people who gives me one of those statements that we wrote about in the beginning. Number one, I need you to stop chasing shiny objects, right? So find a type of investing that works for your situation and not your dream situation when you're to the point where you can go run off and join the circus or do whatever you like to. What your situation is now. I work with a lot of like professionals that they're attracted to me because they want to be end of day trader because they've got careers or they've got hobbies or new things that they're taking on that their day is full of, right? So find a type of investing that works well for your situation, right? And then learn it well. They all work. I've seen things come and go. I've seen Forex come and go, binary option. Now there's predictive markets. If you just learn it well, right, and use the right tools, again, like the Metastock platform is cutting edge. You use the right tools, that's gonna make it. But if you keep bouncing around to whatever's hot in the moment, marketing wise, you're never gonna figure it out. The second one, and these are things that I learned. Second thing is you want to find a mentor who is currently doing what you want to be doing, and more importantly, knows how to teach. I'll tell you, I hired somebody and paid him a fortune, and I saw their portfolio in real time, and they were totally doing what I wanted to do. But man, they could not communicate, not just to me, but to the other people in the room, what they were doing. And as much as I was watching in real time, I couldn't pick it up, right? You need to be able to have somebody who's doing, what you want to be doing, not just talking about it, but doing, and also can teach you, right? I call that guided discovery, and it's way faster and cheaper to learn by guided discovery than trial and error. I don't know if you agree, but that's what I've learned. Finally, not finally, number 3, join an investment group, right? Especially this component. If you're trading with folks, you can, for instance, if Johnny and Mike are doing something, you can look over their shoulder and leverage with Plida. If they found a symbol that's working with whatever strategy that they're trading, it's not, they don't have a market, they don't have they don't have it locked in. You could totally do that too. So look over each other's shoulder, leverage with pride. By the way, at Hewlett Packard, we used to do that all the time. If Epson or Canon would come out with a new printer, we would buy that thing and then we would take it all apart and then figure out one way that we can incrementally make it better. And then we'd slap our name on it and sell a new printer, right? So leverage with pride. It's not against the law. Finally, surround yourself with a bunch of like-minded investors, because there's a lot of naysayers out there who will tell you that you can't do it. And usually they haven't even tried this stuff. So surround yourself with people who will not only celebrate your wins with you, but will, talk you down off the ledge when you've had a trade not go with you. And this is exactly what I did. And this is when things started to jive for me. By the way, I went kind of the trial and error approach. So I started doing this heavily in 1996. I really didn't start getting things to jive until the dot-com bust of 2001, when all of a sudden, when everybody was losing money, I figured out how to use options to profit on that. So this is the code. I hope you've taken some good notes. That was a little bit of a tangent. As Jeff mentioned, I started a foundation in 2003 teaching historically underserved inner city kids how to do exactly what I teach, people in my program to do. In fact, this is a picture of the first kids that went through my program. I started it when I was living in Colorado, in a suburb of Denver called Aurora, where there's some not so nice parts. And these kids, I'll tell you, these original kids, they all went through my program. By the way, we had to do it at a public library where the library only had DSL connection to the internet, and they would cut you off after 30 minutes. So we had to figure out how to be so disciplined that we could get on the computer in 30 minutes, be done with everything we were going to do. I worked with these kids for 6 months, and then I gave each one of these kids, thinking I'd never see it again, 2,000 of my own dollars. And I'll tell you, every single one of them paid me back. They all got, were able to then start affording DSL into their home and getting their own computer. And ultimately, one of them is now a very good, I think he just got tenure, a professor at Denver University in the finance department. I've been running this program every year since, and it's been growing. We did have to take a break during the pandemic, but we're back at it. We've actually partnered with the Chicago Board of Options Exchange, and last year we graduated about 170 kids from the south side of Chicago. So this is kind of why I do this, is to keep my foundation going. I think when I'm ready to, stop, or if I, God forbid, get hit by a bus, this is what'll live on. And that's why I kind of do this teaching stuff, is because this foundation means so much. If you want to learn more about me, you can write down this web address, links.tt4.me. I've got all sorts of freebies you can take advantage of. So if you want to jot that down, it's just links.tt. That stands for trading trainer. Links.tt4.me. And you can, do a whole bunch of fun stuff. Follow me on the socials, all that good stuff. All right, let's get back to why we're here. We're talking about this VIX hedging strategy. So this is how we're going to trade it. We're going to pair two bull vertical spreads, a debit and a credit, on the VIX. So you can kind of see the profit and loss diagram. We're going to enter these simultaneously. Actually, lately I've been putting on one and then the other to get a better price. So I'll actually set my automatic trader. I like to set like trading bots up. Conditional trades. I like to set conditional trades on conditions so I can set it and forget it and then come back in the evening to see if I got fills. I'll set for one, and then I'll have it alert me if that trade gets filled. And then if that trade gets filled, I'll take a minute and come back into the trading platform and try to fill the second one at a better price than what was in my initial trade plan. I usually go for about 2 to 5 weeks out. Okay, 2 to 5 weeks out. That aligns with whatever short-term volatility cycle. And the goal is that, listen carefully, because this is not a trade that's going to make money every single time. This is a hedge trade, right? The goal is that I want to offset the two spreads. So the amount that I capture in the credit is going to offset the debit. Okay. And you're going to, of course, the credit spread requires some margin requirement. You're going to put a portion of your portfolio, but the broker will use, the other part of your portfolio active in other trades or in cash as the margin requirement. But the idea is the initial spread or the initial credit is going to outweigh or cancel out the debit, so that this thing should come out. And I actually try to place it so that the credit spread is a few pennies more per share than the debit spread, so it covers the commissions. Okay. And the idea is, I'm going to bring up, I have a magic marker that I can use on my screen. Let me also, I have a little info thing here. What is it called? An image. The idea is if the VIX winds up in this center section, right, between the two spreads, this one will cancel out this one, and at the end, it's a break-even trade, right? And so whatever you made on the front end with the credit slightly outweighing the debit, then every 2 to 5 weeks or every time you get a signal to enter this trade, if everything is going fine and the rest of your portfolio is doing fine, this trade will just break even, right? You'll be able to pay off the commissions. It's a nothing trade. But what happens is as we looked at that VIX, first of all, if you can imagine, this is that confidence line, and the VIX will trade and it'll come to that confidence line, but it never will spike, right? Because that's just human nature, right? But when the proverbial poop hits the fan and the VIX jumps up, that's when you might come in, and instead of letting this go to expiration, you'll go ahead and look to close the position up here. When you're up here, you can get the max value of the trade. And I'm going to show you the most recent trade I did where I was able to take advantage of that. But that's the idea. And I'll tell you, I've been putting this trade on every time it presents itself for the last 13 years. I had my mentor show me this trade, back in 2017. 2014. And I've been putting this trade on, and I usually put about anywhere from 2 to 5% of my portfolio into this trade, knowing that it's just going to break even. Recently, I don't know, since about the beginning of 2025, when there was all these anticipation of big changes coming to the way that the markets are going to be running and the way that the Fed is going to be running, I've been putting more. In fact, recently I've been putting up to 20% of my portfolio into this trade every cycle, every time it presents itself. So yeah, and it's been paying back big time. All right, let me bring us back up to the current. I'm jumping around because I put a slide in a funny place. Let's talk about timing the entry. So I like to look, I put these two trades on when we're at a bottom. Okay. I use something called the Fast MACD. If you talk to the Appel father and son team, they've got a Fast MACD. It's nothing proprietary to me, but it's taking the MACD indicator. Instead of using the 12 and the 26 for the MACD, you're going to use the 6 and the 19. And for the MACD average, instead of using the 9, you use the 3. And I'm going to use a Fast MACD crossover, but I'm also going to make sure that I'm towards the bottom of wherever that channel is. And right now, I'll bring up my VIX chart. Right now, that's about $14, $14, $15. And once you get your end of day signal, you can see I've actually got that signal on here. It's showing up as light blue arrows. So long as you're down at that low level, you put the trade on, right? And so you're first going to put on the bottom spread, and pick the strike prices. You're going to want to capture somewhere between 70 and 90 cents. I like to put the debit to the bottom. It doesn't really matter whether you put the debit to the bottom or the credit to the top, or vice versa, because they're synthetically equivalent. But I set the first one and I want to be in it for roughly 70 to 90 cents. And then I'm going to look for the opposite one to cancel it out. Again, I want to go heavier on the credit. So this last trade I did, I'll just bring it up. This last one I did, you can see right here, I've got it all logged out on my little handy dandy spreadsheet. The debit was 83 cents. And by the time commissions were captured, it was 84 cents a share, right? And then the credit, I was able to capture at 87 cents. So now it's a little bit heavier on the credit side. When all was said and done, as you can see here, they canceled each other out, and I had about $24 after commissions positive to my portfolio. I got a little bit more credit, enough to cover the commissions, and even give me 24 bucks. Now, fast forward from December 17th, when I placed that trade, on January 20th, there was more talk about, some crazy stuff happening, and the VIX shot through the roof again. It went above, or it was getting close to the top of my strike prices there at $21. I was able to close out of that credit. So I got a credit of 87 cents. Ideally, if it was at expiration and well above that strike price, it would go down to zero and I'd be able to capture that 87 cents. But in this case, I closed it at 14 cents. So I made the difference between 87 and 14. And as well, my debit expired on the expiration date at $1. So I wound up, if you look over here, when I placed the trade, I wound up with a $24 credit. When I was all done with the trade, that $24 credit was now $1,716, right? That's a pretty amazing ROI, right? Now, what happens if it was just a nothing burger, if there was not going to be any spikes? Well, then, of course, this thing would go to $1, it would cancel out, and you'd wind up with nothing at the end, but you'd get that $24. You can see here, you wind up at the end with basically a break-even trade, right, after commissions. And actually, if you let it go, you wouldn't be paying commissions because it just expires, where it goes, or you pay a commission because it's a debit spread. Whatever your commission is, you can see I wound up paying roughly $4 if this thing would have been another break-even trade. But that's not what happened. Or whatever the amount was. I think it was, that's what happens when I modify there it is. Yeah, 14 cents. So that's kind of neat, right? This strategy activates when volatility appears poised for re-expansion after compression. This avoids premature entry into ongoing sell-offs. So here's the expected outcomes on this tree. Most of the time, and again, I got to emphasize this, most of the time, the trade results are going to be break even or even just some really tiny, tiny gains. It depends on your commissions. But here's where this really pays off. During market panics, when implied volatility spikes, the trades can pay off significantly. You saw that $24 went up to $1,700. This acts as a hedge. It gains from the VIX position that can offset losses elsewhere in your portfolio. That's its design. It provides peace of mind and smoother portfolio performance during high stress events. And I really am going to urge you all to think about putting a trade, if not this trade, a trade like it on, especially now given what's happening with the market. Again, just to review why it's working, volatility is inherently mean reverting, but it spikes sharply in crisis. Fear reactions create short-term mispricings and option premiums. This double vertical structure captures these short-lived surges, and also minimizes the cost exposure, because when we place that lower debit, we just don't expect the confidence to ever spike below. I've been placing this trade, like I said, since 2014, and never once has the VIX gone down below the $15 or $14 level and put me in a place of fear. This makes the trade an efficient portfolio hedge, not a speculative bet. Okay, so takeaways. Number one, VIX is a measure of market fear versus confidence. The dual vertical spread exploits that volatility behavior. We use that fast MACD at bottoms to enhance edge and consistency, provides a built-in safeguard for premium sellers during anxiety-driven markets. So I'm going to assume that you want to work with me. Here's what you're going to do, right? You're going to come to our workshops. We run these workshops every week. I'm going to give you, the next time we get a signal, you're going to get from me the specific strike prices for the vertical spreads that I'm recommending that you pick. And we're going to get the specific timing signal of exactly what we want to look for when we decide to place that trade. And in other words, we're going to create a trade plan together. Then if you want, you can send me your trade plan. I'll review it within 24 hours, get you a reply back before the next market open. Make sure you're on the right page to make this thing work. You'll place the conditional contingent trade, rinse and repeat every time we get a signal. So that's what we're going to do if you decide that you want to hang out with us at our program. So that's what I'm going to talk about for just about the next 5 minutes. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones or your career or your hobby, whatever is driving you these days, and have support whenever you need it? Because that's really what all this whole thing is about, whether you're going to work with me or work with somebody else. It's all about, saving time, creating clarity, and getting results. My program, of course, is not just about this VIX trade, but we always, every Thursday, we address the VIX trade as to whether it's coming up, whether it's not, and what are we going to do with it. But my whole program is all about using options end of day. So would it be okay if I take a couple moments to tell you a little bit about my materials, my training, my tools, see if they might be a fit for you? Cool. Because this is for someone who, number one, doesn't want to pay for a bunch of data subscription, wants everything they need in one place, doesn't want to miss any opportunities, wants to spend more time doing other things, doesn't want to be doing this alone, and wants step-by-step instructions. In other words, to sum it up, someone who wants to get consistent and reliable results. I'm going to skip, well, I'll tell you about Charlene, because she always likes to write stuff in. Charlene was a teacher. I think teachers are some of the most undervalued parts of our society. They take a lot, especially from our youth, and then they don't get much for it, do they? And it's sad because our youth, anyway, don't get me started. She was a teacher for 29 years. She got sick. She didn't write this in her email, but she, and apparently she sends me the emails at 2:10 in the morning. She got sick. She got cancer. And, she was doing the different treatments. And ultimately she just wasn't able to go through the day without taking a bunch of breaks, and they decided that they would order her out of the classroom. She still had 13 years left to get her retirement, or even Social Security. She thought she was actually on her way out, and she came to terms with that only to have a miraculous recovery. And that's where it kind of sucks, especially here in the US, is now with the social safety net we do or do not have, she had no livable retirement coming in. She beat cancer, but she's not going to be able to collect her Social Security for 10 years. So she got interested in the stock market. She heard about me at one of these events, And now she uses our instant income calendar tools to do premium selling as well as this fixed trade. She reads the table, finds the stock, follows the strategy. She recently made 14% by just spending about 15% reading about a company, following the chart, and then waiting for expiries. So these are some of the people's, I love her story because she comes to now all of our events and she's just like the biggest cheerleader. Besides doing the VIX trade, you come part of our program. Here's what we're going to do. Number one, we're going to get you on an onboarding call. We're going to go to the screener. We're going to pick a symbol that's in your price range. We're going to bring your symbols to one of our live workshops. You're going to submit them. We're going to evaluate them. We're going to plug it into our worksheet. We're going to plug in your specific portfolio specifics so that we can get risk details for you. You know, risk is definitely per person. I can't tell you what your risk is going to be. I can only tell you what my risk is going to be, or my risk tolerance, things like that. Once you've got your trade plan in place, you're going to send it to us. We're going to review it, like I said, make sure you're on the right page, and then you're going to trade the trade. And if you're in doubt in anything we're saying, you're new to options trading, you're new to trading, you're new to me, you could paper trade it, right? Prove everything to yourself a couple times before you take real money, and then rinse and repeat often. So this is our plan. This is what we're going to do. What is all this stuff worth to you, right? We've got video tutorials. We've got our monthly live lecture class and all their replays going back to 2007. Screeners. We've got screeners up the wazoo. Planning tools. We've got our weekly live workshops where we get hands-on and dirty and do these option trades together. We do the trade reviews. So what is that all worth? Think about that. What is that number? Because I'm gonna sweeten it a little bit. I'm gonna give you a double your money back guarantee, right? I want you to try our program just like those kids did for 6 months. I work with all my kids every year for 6 months. So I want you to try it for 6 months. And if at the end of 6 months you're not turning a profit on our strategies, not only am I going to give you the money that you paid for the program, I'm going to double it. That's how confident I am that that you'll be a successful option trader, end of day options trader with me. I'm also going to give you a session with one of our coaches. So we do, for folks who want hands off, they want to do, have somebody, take them by the hand through this. They don't want to do self-study. We have coaching program. I'll give you a free session as a bonus with one of our coaches where you'll talk about where you are right now, where you want to be at the end of the 6 months, and the coach will help you come up with what you got to do between now and then to get there, right? They have a lot of experience with that. I'm also going to give you a free session with me where I'm going to audit your current trading. So I'm guessing that since you're here, you do some sort of trading already, and I'm very experienced in just about all the different types of trading. I do have a preference for end of day options trading, but I'll audit and work with you about what you can improve on. I'll spend an hour with you. So that's an extra bonus for just you on this Metastock event. So if we add in these bonuses, now what's it worth to you? Because if you go on our website without the bonuses, you'll see that we sell this 6-month program for $597. A flat fee. I'm not going to, ask you for anything. There's not going to be, if you've got a charting package, if you're doing the Metastock, that's in addition, right? But $597 is our fee. Here's the scoop. For this Metastock event, I'm taking $100 off. It's only $497. And you get all those bonuses, the double your money back guarantee, the session with my coaches, and the session with me, the audit session. So here's how you do it. You go to optioninvesting.org/Metastock. And if you've got your mobile device, you can just take a picture of the screen right there with the QR code. And the key here is to get the deal, the Metastock deal, you got to put in the promo code. So let me actually make sure I've got this right up here right now. I went to the website on my browser, and let me just make sure the promo code is 100 discs. So you see it says 597. I'm going to come down here where it says promo code, and I'm going to put 100 DISC and click apply, and it drops it to good. My marketing team did it. So optioninvesting.com optioninvesting.org/metastock, promo code 100, capital D, capital I, capital S, capital C. Don't pass go. Don't collect $200. By the way, if you have any sort of issues with the order form, I know sometimes websites can be a pain in the butt. Then what you're going to do is give us a call, say you're from the Metastock event, and we'll process your order over the telly. So yeah, and remember that VIX hedging trade, if you like that, I mean, that's just one of our strategies, but know that as part of this program, we're going to every week talk about that VIX hedging trade and give you the exact trade plan in order to make that work for you. But then we're going to do a lot more. We're going to do premium trading. We're going to basically put our portfolios on autopilot. That's the end of my presentation. I really appreciate your time.
I appreciate your time.
Absolutely.
Oh, I thought you got muted there for a second. Very cool. Thanks, AJ. We put the link in the thing so you can click on it. Just put in 100 disc when you get to the order form, and you'll be good to go. AJ, thank you for spending some time with us, and thank you for closing us out on day 4.
Yes, thank you, and thanks for the Muppet movie reference. That just made my day.
Oh, we should check to see if there's questions too.
Oh, okay, if we have a minute.
No, let's see. Patricia said, "What if I can't make it alone?" But she put it in quotes. I think she was quoting you.
No.
Alistair besides fitting well with your lifestyle, what other benefits in trading options late in the trading session? Are there other benefits? Aside from sleeping in and being lazy, I think is what he's asking. Is there other benefits?
I mean, the benefits that I have realized by being an end of day trader rather than being in there is mainly my time freedom. So, I love to be able to, I'm a big scuba diver. So I love to do this at all sorts of exotic locations all over the place. That's why Santa Cruz was dreamy, because, Monterey has some of the best scuba diving in the world.
Yeah.
So being able to just jump in the water when it's sunny out and then do this when the dark is out. But yeah, it's mainly about time freedom, and option strategies really pay back. I mean, if our program participants, and I'm speaking specifically about the coaching clients, because if you decide to become a one-on-one coaching client with us, we actually have guarantees where we promise that you can pay back the price of the coaching with your after working with us for a year. So we pay attention to those people's portfolios, right? And you have to have a certain size portfolio to work with us. We if we're not doubling our money about once a year, doubling our portfolio size, and if our program participants, our coaching program participants are not doing that, we don't feel successful. So with option strategies, we can hit those type of targets, even in crazy volatile years like this. We just have to get very creative, and it just gives us all the flexibility in the world, right? And yes, options can seem complex, but like I said earlier, you start working with them and soon complex becomes simple, right?
Patricia says you look totally different than your internet page.
Oh, I'll tell you, I went to the Bay Area in 2006 and had those pictures taken. And now, so you're basically seeing me 20 years later. You've got some gray. My wife makes me put shoe polish in my hair, but despite that, I still get the gray. I got way more wrinkles, but I appreciate it, Patricia. Thank you.
AJ, I think instead of gray, we need to take back the term silver fox. Thank you.
Silver fox or salt and pepper head. I don't know. Whatever it is. Q-tip.
The last time I updated my biopic is because somebody said, "Where's the guy that's supposed to be speaking?"
I know.
All right. Very, very cool. Great having you on here. Patricia says you look great now, and I think she's talking to me.
Oh, yeah. Absolutely.
Right. Thanks again, AJ. Great having you.
Thank you.
We'll see you again soon. Thank you for being here.
Bye.
Bye. Go ahead and share this. Whoop. Share the screen. All right. Lastly, I want to thank everybody for being here. Thank all the speakers today. Great to have everybody in here. Another great session, another great 8 hours full of just information. As we close out today, I do want to thank everybody that came in and spent some time sharing their expertise with us. I want to thank Stocks and Commodities Magazine for sponsoring the event. I want to encourage you to join the tradersforum.com. Patricia joined it. You should too. It's a great place. You can chat with other traders. You can learn about the markets. It's a community of traders helping traders. And all that stuff is free. You just can join at thetradersforum.com. So all of the offers that we talked about, and we've talked about a bunch of them, but Metastock has been actually rated the #1 software program in this price category. You can use it to scan, test trading ideas, forecast price movements, get real-time alerts, commentary, signals, all that kind of stuff. If you buy a month, we're going to give you a second and third month for free. We're going to sit you down and do one of our white glove services. We had a couple of our guest speakers talk about how much they enjoyed their white glove service treatment this week. And you should do it. It's $75. That'll get you going until May 19th. 800-882-3040. Metastock.com/conf promo, metastock.com/sales chat. One of the questions we get a lot is, which is the best add-on that's going to work best for me? If you have questions like that, give us a call. We'd be happy to talk about what you're doing and kind of what your interests are and kind of help you iron that out as well. Thank you for being here. Thanks for the likes, the subscribes. Let us know if there's anything you need. I will see you again tomorrow. Stay healthy, stay well. Until tomorrow morning, 10 a.m. I'll see you then.